ahead and get started. Okay, so insurance. This is how it's going to work. I'm going to give you guys a term, and then you guys can unmute. You guys can text in the chat. It might be a little bit hard for me to see, but you guys can. And you guys can tell me the definition of it and an example if you'd want. Okay, so that's kind of how we're going to go throughout the day. So again, I want this to be very interactive. The best way to learn is active learning. So teaching, talking, all of those different things. So we're going to make this very immersive for you guys. Okay, so we're going to start off very easy. What the heck is insurance? Don't be scared. Give me something. Give me something. This is the easy one. Come on, guys.
Insurance is the transfer of risk from a person to an insurer, company.
Perfect. That's perfect. That's awesome. Anyone else want to add anything to that? That was really good. Anyone else? Okay, so you're exactly right. The process of managing risk by pooling resources or accumulating funds to cover potential losses. Okay, and you're right. It's the transfer of risk from you. You said, I don't want to deal with it. And you give it to someone else. You're like, that's not going to be on me. You take it. Okay. So insurance, specifically life insurance, it's a very interesting concept to think about. Okay. When you're thinking about life insurance, you're betting. So let's say I buy a life insurance policy. I'm betting that I am going to die, and the insurance company is betting that I'm going to live. Okay. So you're betting against your life, which is very interesting, right? I don't think there's anything else like it. So again, this is the base level. What the heck is insurance? You guys are awesome. I'm glad you knew that one. This is another part of it. So if you guys want me to go through examples, I can. Or if you're like, hey, this is like the most basic definition out there, we don't need to go through it, then just be like, hey, skip it, because we got a lot of things to do. I know we're not going to get through everything, but if you're like, I don't want to hear this definition, we already know what it is, skip it, then go ahead and just tell me. Would you guys want to do this definition or this example?
I'm good.
Good. Okay, cool. All right, so now we're going to get a little bit more challenging. What is the actuarial department? Who are they? What do they do?
Underwriting, that it determines how much of risk they want to take or not.
Perfect. Anyone else? Okay, so that's exactly right. So it's a team of individuals. It's in charge of determining insurance policy rates, okay? Calculating reserves and determining dividend payouts, okay? So you're exactly right. They tell us how much people are going to pay, why they're paying that much, okay? So that's the actuarial department. Does anyone know what a reserve is? What does it mean by they're calculating reserves?
Isn't that how much money the insurance company has to keep on hand to make sure they don't go bankrupt?
Bingo. Reserves. Okay. Think about like fat reserves, like my little extra pouch that I have in case I go starving, right? So think about reserves. It's very straightforward. Cool. So this is an example. So before introducing a new auto insurance policy, the actuarial department analyzed accident statistics and repair costs to set appropriate premium rates. Are we good on that?
Mm-hmm.
Cool. All right. And alien, Miss Thompson, are you raising your hand, or is that from before?
Probably from before. Sorry about that.
No worries.
Is it?
No worries at all. Oops, I gave this one away. Maybe no one read it. What is an alien insurer?
The company that operates outside the U.S.
Cool.
Yes.
Cool. Okay, so give me an example.
For example, their home company is in Germany, but operates inside the U.S.
Sweet. That's perfect. Okay. So in the context of the United States, an alien insurer is a company that operates in the U.S., but its main office and legal base is in another country. Okay. That's a perfect example. Their headquarters are in Germany, but let's say they're selling insurance in Florida. Okay. Perfect example. All right. Go to the next one. Admitted insurer. What's an admitted insurer?
They're allowed to practice or sell insurance in the state that you're talking about.
Okay, cool. Okay, so It's a company that has been officially licensed, okay? So they've been given a certificate of authority by a state's insurance department, okay, permitting them to sell insurance within that state, okay? So you are an admitted insurer once you have a certificate of authority. Does that make sense? So you have to have this certificate and then you are an admitted insurer. Cool?
Yes.
Yep.
All right. So State Farm, they're an admitted insurer in Florida. It is licensed by the Florida Office of Insurance Regulation, and it follows all state guidelines, and its policyholders are protected by the state's guarantee fund, okay, in case the company becomes insolvent, okay? So in case, anything bad happens and they can't pay for their claims, okay? So, good. We good on this one?
Yes.
Yes.
Cool. What's a broker?
One that represents different insurance companies and for selling insurance.
Bingo, bingo. Okay, so they work independently, representing their own interests and those of their client or customer. Okay, but you're exactly right. They have a bunch of insurance companies that they pretty much can offer. They're like, hey, do you want State Farm? Do you want Geico? Do you want Aflac? Whatever. Okay, so something that they'll tell you when you get into your role as an insurance agent, they'll say, find a broker. And the first thing you're going to say is, sorry, I'm going to cuss a little bit, but I said, how the hell are you going to do that? Okay. So I recommend finding a really good mentor, okay, in insurance, because a lot of it is going to be, they're going to make you be self-sufficient, which is totally fine. But just know that they're going to tell you things like that, like go find a broker, and you're going to be like, well, how the heck do I do that? Just so that you know you're not alone. It happens to everyone. So again, I recommend finding someone that is experienced in insurance, that is a good mentor, someone that you trust. Okay, cool. So a person is looking for the best life insurance policy to fit their needs. They hire a broker who works independently, representing the client's interest rather than any specific insurance company. The broker researches various policies from different insurers and helps the client choose the best option, ensuring that the coverage meets the client's requirements. Okay, so this is very important. So a broker, a lot of people like going to brokers because they can give them a bunch of different options rather than, hey, I work for this insurance company, this is what I can offer, right? They can say, hey, there's this and this insurance company, there's these benefits if you go with this one, okay? We can compare the two and figure out which one works best for you, okay? Also, brokers can do a bunch of different types of insurance. You can get your life insurance, auto insurance, health insurance, all of that through a broker instead of going to a bunch of separate companies. So they can just handle it all, which is super awesome. Okay, what is a captive insurer?
It's only allowed to represent one insurance company.
Okay, so an insurance company owned by the companies it insures. Okay, so it's kind of a weird concept. So it's created specifically to insure the risks of its parent company or companies. It is a form of self-insurance where a company sets up its own insurance company. Okay, so let's say, Hensel Phelps. Do you guys know Sorry, do you guys know Hensel Phelps?
No.
It's like a construction, maybe let's do Walmart. Let's do Walmart. Okay. Everyone knows Walmart, right?
Mhm.
So Walmart, it's a big company. Okay. Let's say it's too big and there's insurance companies that they don't want to insure it. They're like, that's too much risk. We don't want to take it on. Okay. Walmart can create its own insurance company. Okay. That can insure Walmart. Does that make sense?
Mhm.
Okay, so it's captive. So it pretty much holds its own insurance. Okay. So a multinational oil company formed a captive insurer in Bermuda to cover its environmental liability risks, which were too costly to insure through traditional commercial insurance. Okay, so this is an option if maybe they can't get insurance, maybe they're too big, maybe they're too risky, who knows what. So they said, okay, no worries, we're gonna have our own insurance company. Cool.
Mhm.
All right. Certificate of authority. What is a certificate of authority?
Just what you already talked about allows.
Yeah, we already talked about it.
Sell insurance in that state.
Cool. Cool. Okay, so if you have an you have a certificate of authority, what are you?
You're licensed in that state.
You're licensed in that state. What are you called?
Admitted insurer.
Perfect. I love it. Okay, Norm, is that right?
Yes.
Okay,
Yes.
cool. Perfect, Norm. I love it. So you have a certificate of authority, which means then you are an admitted insurer. Okay, in that specific state. Cool.
Yep.
All right. So the certificate of authority is a formal license provided by a state's insurance department that allows an insurance company to operate legally in that state. Okay. I'm not going to go through the example on this one because I feel like we're cool, right?
Yeah.
Cool. What's the claims department?
Where you file a claim.
Yeah, that's it. They deal with all the claims. They deal with all the stuff that, the insurance company doesn't really want to deal with, right? Paying it out. So the department responsible for handling the processing, investigation, and payment of insurance claims. Okay. Anything to do with claims. You get in a car accident, you submit a claim, it's going to the claims department. They're going to figure out all the details so you don't have to. Okay. So after her car accident, oh, perfect. I'm not perfect. Car accidents are bad. Maria contacted the claims department to file a report and begin the process of receiving payment for the damages. I had to do this the other day. I got in a little fender bender on the road. It was super rainy here in Florida for a few days and the roads were wet. And this guy just like slammed on his brakes and I was right behind him, went right into him. So I had to do this the other day. You guys probably have all known the process or have heard someone go through the process. Okay. What is a divisible surplus?
It's when a company, I'm sorry, go ahead. When a company has surplus and that's what's going to pay insured's dividends.
Perfect. Perfect. Okay. This term refers to the portion of an insurance company's earnings that is distributed to policy owners as dividends. Okay. They're kind of like thank yous, right? After the company allocates funds for reserves, we talked about reserves, right? The extra help, just the side help. Okay. Operational costs and other business needs, then they'll distribute these dividends or divisible surplus out to their policy holders as a thank you. Not all people do that. Not all insurance companies do that. Some of them do, some of them don't. Does someone know? Can someone this might be a stretch, but can someone give me an example of a type of a type of policy that won't do this?
Can you
Stock-
repeat that?
Go ahead. What was that?
Stock company, right? That
Yes.
only goes out to
Yeah,
stockholders
stock company.
Stock company, right? Why?
They give you stock.
because it's owned by the shareholders, not the policyholders.
There it is, because it's owned by the shareholders, not the policyholders. Okay. Stock company. Yeah, you're exactly right. So perfect. Cool. I like it. Okay. So at the end of the fiscal year, the mutual insurance company reviewed its profits and used the divisible surplus to issue dividend payments to policyholders. Cool. So again, not all companies, not all policies will do this. Some will, some won't. Okay. Again, as a broker, okay, it's good to kind of tell your clients of this, right? You can be like, hey, this policy will give you extra funds as a thank you if they have, if they did really good in the stock market or they did, really good this year. This policy won't. Okay. So again, things to bring up, things to think about when you're selling insurance. Okay. What is a domestic insurer?
A insurance company that's inside the United States.
Cool. Domestic. Yeah, exactly. Okay. So an insurance company that operates in the state where its main or home office is located and where it's authorized to do business. Okay. So this is specific to the state, just as you said. It is a company that its headquarters are in Florida and it sells in Florida. Cool. Okay, Sunshine Life Insurance Company is based in Florida and conducts business there. So it is considered a domestic insurer in the state of Florida. What is a foreign insurer?
Headquartered in another state, but allowed to sell in other states.
Perfect. I love it. Okay. An insurer that conducts business in a state other than the one where its principal office or legal base is situated. Okay. So its home office is in Texas and it sells in North Carolina. Cool.
Yep.
All right. What is a fraternal benefit society?
It's like a and isn't it like a board of something? Oh, we're gonna say, yeah,
Where-
okay.
Non,
Yeah, it's
Go
where
ahead.
the religions and all that is. You feel like if you are, yeah, I can't even say it either, so take that. But it's actually where, you know, it's where the different religions and ethnic, yeah, it's right there in front of us now. But
That's okay. I want you guys, even if you guys aren't fully sure how to explain something or how to say it, I'm going to pull up the definition and I want you to look at it and rephrase it. Okay. Because again, it's another great way to learn how to, how to study. Because if I just showed it to you and you're like, oh, okay, cool. And we moved on, it wouldn't be nearly as a successful memory tactic as sitting here, rephrasing it and being able to teach it, right? So I want you guys to read this and then someone tell me what it is.
Yeah, having those up are pretty helpful for me because I'm pretty visual. So
Yes.
thank you.
Cool.
So you usually when it comes to like a test, I usually find keywords or what the question will use. So like the fraternal benefit. So it's gonna sound funny, but frat and lodge system. That's the way that I remember it. So like when you have a lodge system, I think of like, and it might sound funny again, but like a Freemasonry or like a brotherhood. So then like it's a religion, it's an ethnicity, it's and definitely I remember it's a nonprofit. So what I do is I put those key things to remember, and usually on the question it'll say lodge system or charitable sociable activities. So there's keywords that I use to like make my own definition, if that makes sense.
Perfect. Perfect. I love it. I love it. Using little mnemonics, anything like that. I studied neuroscience. So I know a lot about how the brain works, why it works. So yes, mnemonics are very, very helpful. I love it. I love it. And if you have any of those that you're like, oh my gosh, I love this mnemonic. This is how I remember this. Feel free to tell everyone. Okay. Because there's going to be something and it's going to stick for someone. Okay. Cool. So a fraternal benefit society. I love how you're talking about a frat. Okay. Think about a frat. Nonprofit. Okay. Nonprofit. And then they come together, usually for a religion, ethnicity, occupation, things like that. Okay. And they operate together. Okay. And they can come together and they can provide insurance to its members. Okay. So remember, you're not technically, there's one scenario that you can, but you're not technically allowed to sell insurance. I know, let me take that back. Because on the test, that's not going to be true. On the test, if it's saying that a company comes together just to get insurance, you can't give them insurance. Okay. Say no on a test, just don't think about any other scenario. Okay. You guys are going to learn that the book work. So what you guys learn definition wise is going to be a lot different than what you're going to see in the field. Okay. So for example, an IUL, okay. An index universal life insurance. In the book, it's going to say there's always a 10% cap. Okay. You can't gain more than 10%. That's not always true. Okay. And some companies will actually offer IULs with no cap. Okay. Obviously, they're more expensive. You're going to be selling those to kind of the more high net worth individuals. But just so you know, things aren't set in stone. A lot of these definitions will be a little different in real life. Okay. So that was something that threw me off because I'm a very, okay, but the book said this, what I don't understand. And they're like, no, it's very different when you're actually selling it. Okay. So just so you guys know, again, so Fraternal Benefit Society, it's a group that comes together. They can't come together just for insurance. They come together for another reason, but they offer insurance to its members. Cool.
Mhm.
All right. So the Knights of Columbus is a well-known fraternal benefit society that offers life insurance and retirement products exclusively to its Catholic members. Okay. An industrial insurer, also called a home service insurer. What is this?
That's insurance with a small amount to pay off whatever the loan's against, like refrigerators or whatever.
Cool. Yeah. Industrial insurer. It's called a home service insurer because they come to your home. It's small amounts. So you're exactly right. So it's an insurance company that specializes in small face amount policies. Typically life insurance, which are often sold door to door and collected weekly or monthly in person. These policies are designed for individuals with lower incomes who may not otherwise have access to insurance. Okay. This still does occur. I remember someone in the last group, they asked me, they're like, does this still happen? Yes, it does. I don't think it's very common, but it does still happen. Okay. And this one always used to mess me up because I'm like, industrial, I think big, like when someone's telling me industrial, I'm thinking big scale. It's completely backwards. Think small scale. Okay. Think a small scale. It's also called home service insurer, which for me, it makes more sense. Okay. So industrial life policies were primarily designed to cover funeral expenses. An industrial insurer might sell a $5,000 life insurance policy to a client and send an agent each week to collect a $5 premium in cash.
The best way that I remember that, like, it's gonna sound, again, please forgive me for some of these, like, way that I remember them.
Oh.
In dust, I think it's somebody being cremated for their funeral. Industrial. Like, I know that might sound really funny. Please, like, and that's how I remember key terms. It's just funny stuff like that. So industrial and dust insured. So like you're gonna be cremated and that's gonna be paid for. So
Thanks. That one was good.
Yeah, I love it. Cool.
I use industrial stove.
Ooh, okay, good. I like these. I wish I had these when I was studying. Okay, who's the insured? This one's an easy one.
The policyholder.
So does it always have to be the policyholder?
No,
No.
Oh, okay, cool. What's an example? Why would the policyholder not be the insured?
Inmate with maybe a business. A business may take a policy out on a key employee.
Perfect. That's a great example. Maybe you take one out on your spouse, right? Because as long as you have, does anyone know what I'm about to say? What do you have?
insurable interest.
children.
Insurable interest. Good. As long as you have insurable interest, you can take a policy out on them. Okay, cool. So the individual or entity that receives insurance coverage under a policy. Cool. John purchases a life insurance policy to provide financial security for his family. In this scenario, John is the insured as he is the customer receiving protection under the insurance policy. If something happens to him, the insurance company will pay the benefits to his designated beneficiary. What is a beneficiary? Who is a beneficiary?
The one
It's the person. Oh, go
the
ahead.
one that
No, go
receives
ahead.
the proceeds from the life insurance policy.
Cool. Yeah. The one who receives the benefit, right? They're the beneficiary. All right. Who is the insurer?
Insurance company.
Yeah. Anyone else? Anyone else have anything to add? It's pretty straightforward.
A lot of times the people that are like learning these terms, you have to, I wish somebody would have told me a lot of these terms like insured, just change it to insurance company or insurer, excuse me. Because sometimes I'd be like, what does insurer mean again? And like I forget, if you see insured, just think of insurance company in a sentence. So like if you're reading a question, it'll be like, the insurer. Oh, the insurance, just change it in your brain to insurance company. And for some reason, it plays a lot better and the question as a whole.
Yep. I love it. So when you see insurer, change it to insurance company. Okay. So it's the company that provides the insurance coverage. Cool. When John buys a life insurance policy, the company that issues the policy and agrees to pay out the benefits in the event of his death is the insurer. Okay. Lloyd's of London. This might be a tough one.
They insure high-end, hard to insure situations.
Yeah, that's perfect. Dang. Okay.
Laugh out loud, come together.
Oh, good. Yeah. I'm glad you guys know that. Cool. Okay. So Lloyd's of London, it's not an insurance company. Okay. but it's a marketplace where individuals and companies come together to underwrite unique or unusual insurance risks. Okay, just like Norm was saying, that's perfect. They come together and they write policies that are, maybe way too, maybe their risk is way too high. Maybe there's who knows what. Okay, but remember, it's not an insurance company. Okay, it's just a marketplace.
The way that I remember this one,
Mhm.
Adele is from the UK, so she sings, so therefore she needs to cover her voice, and she's from London. So like I remember Adele, like if Adele needs to do like a specific risk, because if she loses her voice, right, then she loses her voice, she can't make money. Such an awkward position for her and for her income. So what I do is like, oh, Adele, Lloyd's of London. If Adele loses her voice, the Lloyd's of London goes into play. If that
That's awesome. That's perfect because you're exactly right. It's unique. She's taking a policy out on her voice. That's weird, right? Not everyone's gonna do that. That's perfect way to remember that. Okay. A movie production company wants to insure its lead actor against the risk of injury during filming, a unique and high risk scenario. Instead of going to a traditional insurance company, they approach Lloyd's of London, which is not an insurer, but a marketplace where individual underwriters and companies come together to underwrite unusual or complex insurance risk. These underwriters at Lloyd's agree to cover the actor's insurance, pooling their resources to manage the specific and uncommon risk. So why would someone want to, let's see, why would the underwriters at Lloyd's want to do this? Like, what is a benefit for the people that work at Lloyd's of London or created Lloyd's of London? Like, why would they do this? Because it just seems like, oh, they're taking out higher policies, so they're gonna have to pay more. But what is a benefit? Like, why would they want to do this?
They're taking a higher risk, so they're going to make more money.
Mhm.
There you go. There you go. They're gonna charge a lot more, right? They're like, heck yeah, I'll take you on for 5 times the cost. Okay, cool. Multi-line insurer. What is a multi-line insurer?
All the coverage under the sun.
Okay, cool. I saw a hand raise. Anyone wanna? Yeah, Brandy?
Is there just one insurance company that sells more than one type of insurance?
Yeah. So, okay, hold on. I see it. Oh, I didn't. Sorry, guys.
Okay.
Sorry, guys.
Yeah,
I
it's
had
okay.
to. I was like, why is there hand raised? And they're not talking. Okay. Sorry, guys. Okay. Is everyone's allowed to talk? If you can't talk, raise your hand. I think I got everyone. So anytime someone comes in, I have to allow them to talk. Wait.
Yeah, I closed out on accident, so I had to come back in. Sorry.
No, you're totally fine. You're totally fine. I felt bad. I hope you weren't mute for that long. But yeah, if you have to leave and come back, just raise your hand. I'll unmute you.
Okay.
Perfect. Okay, so an insurance company or independent agent that offers a wide range of insurance products, allowing businesses or individuals to address all of their coverage needs in one place. Okay, so they'll offer home, life, auto, long-term care, health, dental, whatever, all in one place. Cool. We talked about something like this earlier. Do you guys remember the term?
captive insurer? No. It wasn't captive insurer. It
What
was
is it? Wait, let's talk. What's a captive insurer? Why is that wrong?
because captive insurer it's a company that makes their own insurance for their own company. Like Walmart
Cool.
making their insurance for their own company.
Exactly.
Uh,
So this term in particular that I'm talking about is something very common. You think of insurance, you think of this term.
broker.
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 Perfect. Broker. You go to a broker, they can offer you a bunch of things, right?
So what is the difference between broker and this then? Is it the same?
So a broker, so a broker you can go to and they don't have to offer a bunch of different lines. They can, but they don't have to. multi-line insurer is someone or a company that 100% offers a bunch of different lines. But as a broker, I mean, you could just offer health insurance.
So like Geico. Geico offers everything in the moon.
So, okay, yeah, perfect. A Geico is a multi-line insurer.
And then, so, oh, I see. Okay, so broker is more like not a personal firm, like a law firm, right? Hypothetically, like a law firm, they offer, they kind of, I don't know, like Brown
So-
Insurance, right? Brown Insurance, but they offer Geico,
So-
National General, etc. And then multi-line offers everything under one huge company.
Yeah, so think about it like this. A multi-line insurer can offer home, life, auto, long-term care, health, all of those. A broker could possibly just do health insurance. They can be a multi-line insurer, but they don't have to. A multi-line insurer can be a broker, but a broker is not always a multi-line insurer. Does that make sense? Well, everyone else with me?
Yes.
Cool.
Yes.
All right. So a family wants to simplify their insurance coverage by having all their policies with one company. They contact a multi-line insurer that offers a variety of insurance products. Okay. A mutual insurance company. What is a mutual insurance company?
They're owned by their policyholders.
Yeah.
Okay. Cool. Anyone want to add anything?
Nope.
No? Okay, cool. So an insurance company that is owned by its policyholders. You hit it right on the nail, right on the head. Okay. So they're not stockholders, remember, because we talked about stockholders. What did we say about stockholders and stock insurance company?
They can't have dividends.
No dividends.
No dividends, right? Okay. The policyholders don't get the dividends, right? So the stock insurance in stock insurance, when we're talking about stocks, a stock insurance company, okay, it's the stockholders that own it. Okay. The policyholders don't receive the dividends. Okay. But in a mutual insurance company, do they receive dividend? Oh, it's already up there. Well, the answer is yes. In a mutual insurance company, the policyholders can get dividends. They might not always, right? Because there might not always be a surplus, but if there is, they can. Okay. So insurance company that is owned by its policyholders, not stockholders, any profits the company makes are either reinvested into the company or returned to its policyholders, often in the form of dividends or reduced premiums.
So, quick question: when do you use a mutual insurance company?
So that is totally up to when you're picking out what someone, like when you're selling insurance and you're like, okay, you sit down with the person, you're like, what are your long-term goals? What do you expect from insurance company? Do you have any people depending on you? Like, what are you expecting? So it's different for everyone. Maybe someone who would want to do this would be more involved. They're like, hey, I really want to be involved in where my money's going, why it's going there. Like they're very involved in what's going on in the actual insurance company as a mutual insurer. So maybe someone who, maybe a personality, not to say that anyone's like this or it's good or bad, maybe a personality that's a little bit more like dominant or maybe they just want to really know everything about wherever their money is going. Maybe it's good for someone like that. But again, it's very specific to whoever you're selling to and what they want. Okay, so a mutual insurance company, you probably obviously people aren't going to come to you and be like, hey, I want to be in a mutual insurance company. Maybe people who are very educated, like they totally could. But maybe you hear someone, you're like, hey, like I really want insurance, but I don't know if I fully trust where the money's going, why it's going there, how it's getting there. And if I don't want to get scammed, like I don't want the insurance company to just take a bunch of my money and not get anything back or whatever. Maybe someone like that would offer, maybe a mutual insurer, just so they know where it's going, why it's going there, and then they receive, that you can tell them if they have any extra, they'll give it back. Does that make sense? Again, it's very hard to say like exactly when, it's so specific to each person. Does that make a little bit more sense?
Yeah, forgot you.
Cool. So if you have a life insurance policy with a mutual insurer and the company performs well financially, you might receive a dividend at the end of the year. Okay. After years of being with a stock insurance company, Sarah switched to a mutual insurance company because she liked the idea of sharing the company's profits through annual dividends. Great. Okay. What is a non-admitted? We talked about admitted insurer.
Someone that's not officially insured.
Maybe.
They don't have their certification.
Okay. What is it called? What is it called?
Certificate of authority.
Good. They don't have their certificate of authority. So they can't, I want to say they can't practice, but they can't work where?
In this, in their state?
In that state, yeah. If you are a non-admitted insurer, you cannot work in that state. Okay. So let's say there's ABC Insurance Company and they're a non-admitted insurer in Florida. That means they don't have a certificate in Florida, a certificate of authority in Florida. So they're a non-admitted insurer. Okay. Insurer that has not been granted a certificate of authority by the state's insurance department, meaning they are not authorized to conduct business in that specific state. You can be an admitted insurer in California and a non-admitted insurer in Florida. Cool?
Yes.
All right. So do you guys want to go over the example of that? Or?
We got it.
No. Cool. Non-participating policy. What is a non-participating policy?
Excuse me, I hear a noise. I don't know if everyone hear it
Same.
also,
Same.
right?
Someone please mute themselves.
Yes, please.
Sounds like a fan or something, maybe. Is that right? Is that what you guys are hearing?
I thought I was
Yes.
just like risen out a little bit with the tism, but okay.
Okay, I think we're good. I don't hear it anymore.
Yeah, sorry guys, I'm outside. I'm doing yard work actually. I'm multitasking right now.
That's okay. That's okay. We love multitasking. Okay, so a non-participating policy. What is a non-participating policy?
Not gonna be any revenues.
Say that again.
Won't be any dividends coming because it's
Okay.
it's not a stock company, so you're not gonna. Gosh, I'm getting tongue tied now.
No, you're good.
You're
They don't
not
pay
gonna be
dividends to the
receiving any
policyholder.
dividends from the insurance company.
Okay.
And they don't pay dividends to the policyholder either, I don't think.
There we go. There we go. There we go. We got it. So this is the type of insurance policy commonly used by stock companies. It does not permit policy owners to receive dividends or participate in the election of the company's board of directors. So remember, we talked about with a mutual company, you can be very involved. You receive dividends. This is like the complete opposite. Okay. So this, you do not receive dividends. You can't participate in the election of the company, of the board of directors. You're very removed from what's going on in the administrative part of the company. Cool.
Yep.
All right. So you don't participate. Are we good on this one, or do we need an example?
No, I think we're good.
What is a participating plan?
I was gonna say the way that I remember it too is sometimes you can go you get a ticket to go buy a movie, but for non-participating you don't get popcorn or free popcorn, right? For going to the free movie. And then participating, you get the ticket and then you get free popcorn. That's the way that I remember it.
Cool. I love it. That's perfect. So you gave us, anyone want to add to that definition of participating plan? We get popcorn. What else do we get?
You're participating in the dividends from the company.
Yeah. Participating in the dividends. What else do we participate in?
Elections.
Elections. Cool. You do it all, right? So an insurance policy that allows policyholders to participate in the company to the receipt of dividends and the right to vote for the company's board of directors. Okay.
So this has nothing to do with stocks companies, only mutual companies then.
Right. Right. So this doesn't really have to do with stocks. That's like a separate, like, you can add them together, yes, technically, but like in talking about just participating plan, like in particular, no, this is different. Okay, so it's just talking about you receive dividends, and then you have the right to vote for a board of directors. But like you can have a participating plan on another type of policy, if that makes sense. Like it doesn't have to be just specific. You like it's like, oh, take participating plan or have nothing else. You can have a participating plan and a bunch of other things.
Okay, because I've seen questions of these and these throw me off every time whenever I'm like, I don't know what I know what it means, but I don't know how it plays into insurance, if that makes sense.
Okay, so it's maybe do you have an example of a question?
It would be like, which one of these is a participating and non-participating? No, excuse me. It would be like, which one of these is non-participating insurance? And it'll lay out a whole row of them, like a question selection. Like if a question comes like that on like personally me, I don't know. Like I know the definition, but it throws me off, if that makes sense. Like when I get to a question like that.
That makes sense. So like if it says like if it's a non-participating, you're exactly right. Like you would say like a stock insurance company, stockholders. That's kind of what you would go for. If you went for a participating plan, it would be something like there's so many you can do.
So what about like, so when you mean by stock, you mean like index and the SP5, what is it?
S&P 500.
Yeah, type of
So-
insurance.
No.
Go ahead.
Type of insurance, like that, like that's what you're saying, like that's a non-participating.
Yeah. So
Oh, okay.
So hold on. Diane, did you have anything to say? Again, I want you guys to teach each other if you can.
Please.
No, I was going to say just the non-participating is like a stock company. So, and you're not with non-participating, you're not going to get dividends and you're not going to be a part of the election. But all of the other participating plans where you get dividends in elections, that would be the participating plan. Everything else.
Good.
Right. But my what I was trying to understand is like, because I was just thinking whenever they'll mention non-participating or participating, like depending on the question, I'm like, so if it's non-participating, it would be like the annuity, not annuity, crap. The index one.
Universal, yeah.
Yeah.
Agreed.
And like whenever they say that, I'm like, okay, now I understand the question, because it's gonna sound funny. I know the terms, but I don't know how they play into insurance. So when I get to a question, I'm like, I thought that it was specifically be like, oh, a stock insurance and not index insurance, if that makes sense. Like I'm over here looking mentally for a stock insurance company, not an index company, if that makes sense. Like I'm over here, my brain works differently. Sorry.
So for that specifically, so an index fund is S&P, okay? A mutual fund, a mutual insurance company, it does like sub accounts, so that's more kind of like stock stuff. Okay, so like the variable life insurance, like the variable stuff, that's all more like stock based, where the S&P, like the index fund is S&P 500. So that goes into like the investment side of insurance. Okay.
Right.
So the S&P 500 is the top 500 companies. Okay. And when you're talking about like an IUL, like an index universal life, they pretty much will have, like, let's say you're buying an IUL. They'll take your money and in a way they'll invest it. They're not directly investing your money, but they're investing money into that. Okay. And that as something like an index, is usually always going up. That's why they always tell people like oh, invest in like, S&P 500 because it's the top 500 companies. Like they're usually always going up. There are dips, the market is always going up and down, but like for the most part, something like that is always usually trending up long term. So it's a little bit safer. A stock company, like variable and stuff like that can go up or down. Like, and you have no idea where it's gonna go. Does that make a little bit more sense?
Yeah, I got you.
Cool. Okay. So, are we good on participating plan?
Yep.
Okay. So Emily purchased a life insurance policy from a mutual insurance company. Her policy is a participating plan, which means she may receive dividends if the company performs well financially. Additionally, as a policy owner, Emily has the right to vote in elections for the company's board of directors, giving her a say in the company's management decisions. Okay, what's a private commercial insurer? Also known as commercial insurer. Anyone want to rephrase it?
So a private insurer is directed by government-owned entities. So private agent works for the government. Trying to think.
Like business insurance?
You said business insurance?
Yeah, is it?
So it could be. So let me go back to what was originally said. So they're distinct from government-owned entities. Okay.
Oh, okay.
So I know it's a little bit weird. It's a little weird. So they're owned by individuals or groups, and they offer various lines of insurance. Okay. These insurers are distinct from government-owned entities. What is something that we talked about that offers various lines of insurance?
Broker.
Broker, good. What's another one?
The multi
Starts with L.
Insured.
Multi what?
Lines.
Multi-line insurer. Okay, cool. So let's talk about an example of this one because I know that can get a little bit confusing. So John purchased a life insurance policy from a well-known insurance company that is owned by private shareholders. This company operates as a private, also known as commercial insurer, meaning it is not owned or operated by the government. Instead, it's a for-profit entity owned by private citizens or groups and offers various types of insurance, including health, auto, life insurance, to individuals and businesses. Okay, let me go ahead. Okay, so anyone else want to take another stab at it and see if they can explain it a little bit better? I think I had a hand raised. Did I have a hand raised? Oh, there it is. Okay.
Hey, Jules.
Yes.
Should have asked earlier, are these all things that you're going through pretty much stuff that you know is going to be a high percentage on the test?
Yeah.
Okay.
Yeah, this is going to be high percentage stuff on the test. If I'm going to be honest with you guys, we can study this all day long, and it's so good to know definitions. Where you guys are going to benefit the most, doing this is great. Active learning is great, but going through questions. It was the same for medical school. It's the same for this. It's the same for everything. Going through questions, because learning stuff for an exam is also learning how to take that specific exam, because the way they word questions, the way they want you to answer the questions, it's all different. So half of the whole thing is learning that specific exam and how they want you to answer it. The other half is knowing the content. Okay, so I would really, really, really emphasize taking the time to go through the practice exams, the practice quizzes, all of those, because that's what's going to help you the most. Even going through and making flashcards off of the practice questions. You know, that's something that I did that I thought really helped. So again, it's great to kind of go through all these and know them, but for the exam specifically, unfortunately, this whole thing is just like getting through the exam. It's really understanding the questions and knowing the questions. And I'll say they're very similar. The questions should be very similar to the actual test.
So for this term, it's basically everything but anything to do with like a governmental benefit. So like Medicaid or Medicare.
So it's not owned or operated by the government.
Right.
So opposite of that.
Right.
Okay. Is that what you're
And
saying? Okay.
a mutual insurance company is operated by the government. Is that the main difference between the mutual insurance company and a private owned insurer?
So okay, so mutual's a little bit different. So this is something separate, like completely separate. Okay. So let's talk about a mutual. So all these other companies and all these other types of insurance that we've talked about, for the most part, except for Lloyd's of London, are owned and operated by the government in a way that, you know, you have to, you know, have the state license and you have to, like, you know, do all these certain things that, you know, apply to the government in a way. Not to say that these are outside of the government, not to say that, you know, you can, you know, disregard all the governmental rules, but it's owned by private shareholders. Okay, so it's separate. It's a little bit separate in the sense that, Joy, go ahead.
Is it profit sharing?
It is, it's a shareholder company. Okay, so it shares stock. I mean, it has stockhold. I mean, okay, it is profit sharing. But it's not like, this isn't like big scale, big stuff, right? So it's profit sharing because the people that own it, they're owned by private shareholders. Okay, so like, yes, it is profit sharing between them. Does that make sense? A little bit. Still a little bit confused.
Yeah,
Okay.
no.
Is there like maybe not a chart, but maybe something to like more visual, maybe? Does that make sense? Like maybe do you have a chart to kind of explain that?
Let's do it together.
Yeah, or like write it down. Maybe that will give a little more help.
Let's do
Because
this.
I know what you're saying, but it's just when you're saying it, it's different because I'm over here imagining it in my head.
Yeah, no, you're totally good. Let's do it together. Let me share my screen for this. Okay, can you guys see this? Okay, so it's, again, owned by shareholders, and it provides insurance policies to businesses for various commercial risks. Okay, so whoever said business before, you're on the right path. Okay, so these insurers offer a range of coverage options, including property, liability, workers' comp. Okay, all of these things we understand. Okay, so let's see. Owned by shareholders, the goal is generating profit for them. Joy, go ahead.
Is it for like commercial airlines and stuff like that?
Okay, yeah. So they offer insurance policies specifically designed for business to protect them from various risks. So there are specific like aviation exclusions, things like that. That's for pilots specifically, but like to cover everyone on an airline, like if you're flying and you're a passenger on an airline, there are specific types of coverage for that. But yes, it's to protect, it's designed for business to protect them from various risks. So yes.
What does that sound?
The weed eater.
Okay. So it's sold and administered by a private company rather than the government. Okay. So the two most common types of health insurance plans are preferred provider organizations, PPOs, and HMOs. Do you guys know what a PPO is?
Mm-mm.
Anyone here?
Preferred provider organization.
Good. Okay. So a PPO is pretty much like, let's say I have an insurance company.
Premium.
Go ahead.
Is that a premium?
It's not a
It's
premium.
a type of insurance.
Oh, okay.
Yeah, let's say I'm an insurance company, okay, and I offer health insurance. I can say I have a deal with, I don't know, Orlando Medical. Let's say I have a deal with Orlando Medical, so you can go to those places to get healthcare. Okay, outside of that, you'll either be on your own or you'll have reduced coverage. But a PPO is like specific to that company.
Yeah.
Okay, so it's like you can go to this doctor, this doctor, or this doctor. Outside of that, we're either not going to cover you or we'll cover you at a reduced rate depending on the insurance company. Okay, so I know this one's a little bit confusing, but you guys are on the right path of it is specific. So it's owned by shareholders, okay, and then it's to cover businesses and their risks. Are we good on this one?
Yes.
Yes.
Okay, cool. So let's do this. Okay, so a reciprocal insurer. What is a reciprocal insurer? It says it in the name.
That means that each member is both an insurer and an insured, so they share the risk collectively.
Good, reciprocal. They insure each other. Okay, so an unincorporated group of individuals or organizations that agree to insure each other. They exchange insurance contracts through a common attorney in fact who manages operations on behalf of the group. Does anyone know what an attorney in fact is?
Wouldn't that be the man?
What was that?
Can you repeat what you asked? Sorry.
What is an attorney in fact?
Oh, okay.
Did someone have an answer for that one?
Is that the manager of the reciprocal insurer?
The manager. Yeah, perfect. Okay. So it's an agent that pretty much authorizes to work on behalf of that person. Joy, go ahead.
Would that also be considered a fiduciary?
Okay. I like where you're going. So that is specifically managing their funds. Okay. So yes, it can be, but it doesn't have to be. They should be, okay. But again, it doesn't have to be. That's specifically talking about like their funds. This can be talking about you know, maybe just the contract in general. Maybe they don't really handle their funds. Maybe their funds are handled between each other instead of the attorney in fact. Does that make sense? Fiduciary is more so just talking about like monetary things. Are we good there?
Mm-hmm.
Okay, cool. All right, so a group of small businesses of business owners joins together to form an unincorporated organization that provides insurance coverage for its members. Each business owner agrees to cover a portion of the risk for the others. This setup is known as a reciprocal insurer, where all members of the group act as both the insurer and the insured, sharing the risk among themselves to protect one another from potential losses. Okay, reinsurance. What is reinsurance?
Where one insurance company coordinates with another insurance company to share the risk.
Cool. This involves one or more insurers, also known as reinsurers, agreeing to take on a portion of the risk originally underwritten by another insurer who holds the entire policy. Cool. Okay, so a life insurance company issues a large policy to a high net worth individual, which carries a significant amount of risk. To manage this risk, the insurance company enters into an agreement with a reinsurer. The reinsurer agrees to accept a portion of the risk associated with this policy. This means that if a claim is made, the reinsurer will cover a share of the payout, helping the original insurer manage its exposure and maintain financial stability. Okay, so I'll take on your risk, but I need a little bit of backing. I need a bear behind me that's going to help me out. Cool?
Mhm.
Did we just say this? Oh, wait. Hold on. Reinsurance. Who is the reinsurer?
Yeah, you just did.
Yeah. Okay, so reinsurance is a general term. The reinsurer, it's just like insurance, or it's just like insured versus insurer. It's just knowing the little end terms, but the reinsurer is the person that provides the financial backing. Okay, cool. Risk retention group. What is this? It says it in the name. It says a hint.
Liability insurance company owned and operated by its members.
Good. Okay. So risk retention, they're retaining the risk. They're keeping the risk inside. Okay. So it's a liability insurance company created by a group of businesses or professionals with similar risks to self-insure against liability claims. It is owned by its members and it spreads product liability and other commercial liability risks among its group members. Okay. Again, risk retention, it's retaining, keeping the risk among its themselves. Cool. Take that as a yes. After struggling to find affordable malpractice coverage, a group of independent surgeons formed a risk retention group to pool their resources and insure themselves against liability claims. Self-insurers. Who are self-insurers? What is a self-insurer?
Take on the risk of their, insuring their own selves.
Cool. Simple, right? They take on the risk themselves. They create their own self-funded plan to manage losses that may occur, choosing to retain the risk rather than transferring it to an insurance company. Okay, a large corporation decides to handle its employee health benefits internally rather than purchasing a traditional insurance policy. Okay, they set aside funds and then they have a self-funded plan. Okay. Stock insurance company. We've talked a lot about stock insurance company. Can anyone explain what it is?
Insurance company that offers dividends to the owners of the stock.
Cool. Yeah. Is it
owned by its shareholders?
Go ahead. What was that?
It's owned by the shareholders. It's not owned by the policy.
Exactly. Owned by the shareholders. And so an insurance company owned by shareholders invest capital in the company and expect to earn a return in the form of dividends or stock value appreciation. Profits are typically distributed to shareholders, not to policyholders, unless they also own stock. So you guys are both correct. I love it. We talked a lot. Well, let's talk about this. ABC Insurance Company is a stock insurance company owned by its investors who purchase shares in the business. At the end of a profitable year, ABC Insurance pays out dividends to its shareholders, even though the policy holders don't receive any share of the profits unless they also own stock in the company. Unlike a mutual insurer, a stock insurance company distributes its profits to its shareholders rather than the policyholders. Okay, so mutual insurers, the dividends, the divisible surplus goes to the policyholders. In a stock insurance company, it goes to its stockholders. Surplus lines insurance. What is a surplus lines insurance? What are surplus lines insurance? What is it? Go ahead.
I was just going to say that's something that it's something that gets used when like regular insurers won't take the risk, like that Lloyd's of London thing, probably, right?
Okay, perfect. So a type of non-traditional coverage offered by surplus lines insurance. Okay, it provides protection for unique or high-risk situations that are not typically covered by standard private or commercial insurance providers. Okay, so you're exactly right. A type of non-traditional coverage. And then again, just like Lloyd's of London, exactly what you're talking about, it provides for unique and high-risk situations. Okay, so here, oh, they couldn't get insurance, but they got it through surplus lines. Okay, an amusement park needs liability insurance for its extreme riders, but traditional insurance companies consider the risk too high and decline the coverage. The park turns to surplus lines insurance provider, which specializes in covering unusual and high-risk scenarios that standard insurers won't handle. This non-traditional insurer offers the necessary coverage, allowing the park to operate its rides despite the unique risks involved. Okay, what is the underwriting department? Who are they? What do they do? Why do we need them?
They're the ones that determine what the amount of premium is going to be charged.
Perfect. Perfect. They do the underwriting. They're responsible for evaluating insurance applications, determining whether to approve or decline them, and assigning risk levels to an applicant. Okay, risk levels, exactly what you're talking about. It's going to decide the cost of our premiums. Okay, so as when they're assigning risk levels, there are 3 types of risks. Can anyone list those 3 or list one of the 3?
Preferred, standard, and substandard.
Preferred, standard, and substandard. Okay, what is preferred?
Very healthy person stays away from like dangerous situations, so forth. Eats right, doesn't smoke.
Cool. That's perfect. Are their premiums higher or lower?
Oh, lower.
Lower. Okay. What's standard?
Whatever the criteria is for underwriting, but it's, like your normal everyday guy, it might be pretty healthy, but not obviously quite as healthy. More of just your, average guy enjoying life, I guess you'd say, versus being really strict with everything.
Yeah. Perfect. Okay. And then we have substandard. What's substandard?
They're doing high risk situations and stuff, and or I guess as I understand it, can even be a bad credit report and stuff. So
Yeah.
you're going to be the substandard category.
Yeah, it could be any of those things. High risk, bad credit, whatever. So the underwriting department is the one that's going to get all the juicy details about your life, and they're going to decide, hey, we are going to cover you, we're not going to cover you, we'll cover you at higher cost, lower cost, whatever. These are the people that you really want to be cool with, because they're deciding what you want to pay or what the person's going to pay. Okay. So again, you said that perfectly. I love it. We have 3 different types of risks: preferred, standard, and substandard. Preferred, just as the name suggests, preferred is something that they want. Okay, it's the athlete. Maybe they go out and they run. Maybe they go to the gym every day. Very healthy. Maybe they're younger. A standard is, again, the average everyday guy. And then substandard is something's gonna happen. Something might happen. Okay, so they're maybe they have a chronic illness. Maybe they have maybe their dietary habits aren't very good, so maybe they're overweight. Who knows? There's certain reasons why certain companies, it's not one size fits all. Every underwriting department is different. Every company is willing to take on different risks. Cool.
Mm-hmm.
Okay, sweet. All right. Oh, a Kahoot. Okay, has anyone done Kahoot before?
Yes.
Yes. Okay, we got 1. Anyone else?
No.
Yes. Yes.
Yes. Okay, cool. All right, so I'm going to we have, let's do it. So that was all chapter 1. So host live. I'm going to give you guys a code. I want you guys to go to kahoot.it. I'm going to put it in the chat. And then I'm going to give you guys the game pin. If you guys are on your computer, feel free to do it on your computer. If you have a phone, that might even be better. Like if you're, doing this on your computer and you have a cell phone that you can do this on, that might be easier instead of going back and forth. Totally up to you. We're going to try this. If it doesn't work, we'll do it all together. Okay. So I just sent that link in.
Is the chat disabled? I can't see the chat.
Uh-oh. Let's see. Okay, hold on. All right. What about
There
now?
we go. Yeah,
Yeah.
it's there now.
Okay, cool. Yeah, bear with me, guys. Okay. Let's see, what's today? Yeah. Wow, is it not letting me do this? Post live, display from the big screen. Okay, so
Game pin.
it's creating one. Let's see. Okay, I'm gonna say it and I'm also gonna type it in here as well. So you guys will have both. Let me put this small one. Oh gosh. Gotta mute it so we don't hear that. Okay, the game pin is 236158 236158.
Needs a nickname, it says.
Mm-hmm. Go ahead and put in a nickname, whatever you want.
So,
Give it maybe one more minute, see if anyone else. Anyone else still joining?
Yes.
Yeah, okay. We're missing a few people. Oh, we lost one. So let me give the code again, 2361581. Can you guys see my screen?
yes.
Okay, so you might have to flip between my screen and if you're using the same device, you might have to flip between the two, but we'll see. I'm not exactly sure what's gonna happen. I'm hoping it shows up on your screen, the question, but I'm not exactly sure. We'll get that lucky. 16. Anyone else still joining? Okay, I'm gonna go ahead and get started. All right, can you guys see this on your screen?
Yep.
You guys can see the question on your screen?
Yes.
Cool. Okay, so who is in charge of determining policy rates and determining dividend payouts? Cool. Okay, actuarial department. What was that? Anyone? Okay, cool. Is anyone confused about this? Does anyone need a little bit more clarification? It's okay if you do. We're all in this together. Everyone feel good about this?
All I saw on my screen was the shapes, but it's fine. I mean, I knew the answer. We can move on. It's okay.
Right. That's what
Okay.
I'm. Mhm.
Yeah. So that's what I was saying. You might have to look at my screen what I'm sharing and then click the answer on your screen as well. So you might have to like go back and forth between the two. If it's too confusing for everyone, we can just do this together as a group. Did everyone have that problem?
So I did have just the shapes, and then it went to where your question is. Now I just can't get to the shapes. So yeah, it's kind of difficult.
Okay, it's a little messed up. Okay, you said it did change though, so maybe it updated or something. I'm not exactly sure.
I think I don't know because I seen I'm guessing it's because I pressed something. I seen your question and then I pressed it, but I was thinking that I was going to be able to go back and forth, but now I'm not able to locate where the shapes are. So
It would be a lot easier if you did it on your phone. Like I know, like so if you go to Kahoot.com, like just Kahoot.com, it should pop up and you just put the code in there too.
oh, so that's where it was at actually. Okay, I see what you're saying. Thank you.
Yeah. So it is a little bit easier to do this if you guys have two devices, one of them that you can have on your iPad or your, computer, and then doing Kahoot on your phone. But again, if a lot of us don't have access to that, that's totally fine. We can just do this together as a group. So we'll do another one, see how it goes, and then we'll go from there. Okay. Oh, cool. Darius. All right. I like it. Okay. True or false? An insurer with a certificate of authority can sell insurance in any state. Be careful. Okay, false. Can someone explain to me why that's false?
Certificate of I can't even say it, but you know what I'm trying to say. It's only good for one state.
Yeah, exactly.
It's issued in one state. Yes.
Exactly. So you need, if you want to work in any state, you have to have a certificate of authority in every single state.
Yeah.
Okay. So you can't just have one and then you can work on any state. You have to have one for each state.
These trick questions suck. That's all I'm going to say.
I know. You gotta read. It's tough. They drive me crazy too, but that's why I'm putting them on here.
That's been my that's been my biggest issue is the trick questions. Like I want to go with my gut and then I'm second guessing myself, so then I keep failing it.
Yeah. It is, I will say a lot of definitions are very similar. And again, that's just learning how to take the specific test. So like for those of you guys who aren't completely aware, there are some states that have, like for Florida and for some other states, you take Pearson test. For other states, you take PSI. For other states, there's specific ones for each state. And learning exactly how those questions are, because I've been going through every single question that you guys see to make sure that it's correct. And let me tell you, I've found a lot of things that we need to fix. So just a heads up, if you see a question that you're like, oh, I don't know if that's right, it totally could be wrong. It totally could be. We're working on that right now. We're going through it. So just let me know. I'm almost through them. So like by the end of this weekend, or early next week, they all should be fixed. But yeah, so learning those specific types of questions, how they should be answered, is very, very important. That's why I say go through the questions. They'll be very, very similar to the test. So yeah, the trick questions, they get you. And again, some of the definitions are so similar, it's ridiculous. Okay, Brady, I see you. Awesome. Okay, true or false? Reinsurance can involve more than one insurer to take on the risk. So think about the definition of reinsurance and then think about this question. Good. Okay, I love it. Okay, so reinsurance is, does anyone want to say?
basically an insurance covers another insurance on like weight
Good.
of risk. Basically, it's like, hey, we're in this bind. Could you cover us? You know, because this is a lot of risk to take as a company, aka.
Perfect. Yeah. So it's like, hey, we'll take on this risk, but like it is really big. So I just need some backing. So I'll ask another insurance company, a friend, hey, can you help me out with this? So I can take on this risk, but it's also on you. So in case it does go to shit, I got some help. Okay, cool.
The way I remember it too for you guys, I put reassurance, like reassurance, like you know when you want your spouse to reassure you about something, I need you to reassure me that you got me. You know what I mean? Like,
Got
hey,
my
make
back.
sure you got my back. Yeah.
That's good. I love it. Oh, we're on fire. Oh, okay. This is exciting. This is super exciting. Okay. So, created by businesses or professionals with similar risks to self-insure against liability claims owned by its members. What is this? Okay, this one was a tricky one. Okay, so let's go through the definitions of these. What is a risk retention group?
They retain their risk to themselves, obviously.
Good, good. They retain the risk. They
And
retain
I got it wrong.
Oh, you did? That's okay. That's okay. We're learning. We're learning. Okay. So they retain the risk. And I know that exact definition wasn't up there, but again, I want you guys to kind of get used to not seeing the exact definition, but still kind of knowing what it is. But yeah.
Tell you how I got it correct.
Okay.
The reason I felt it was that one is just because one risk is inside of the definition, I guess. And then it said some members. So
Yeah.
group.
Yep. That's perfect. That's exactly right. Owned by its members. They retain the risk inside. Okay. A captive insurer, I understand why it could have been confusing because a captive insurer, does anyone wanna say? So a captive insurer.
A captive insurer is the Walmart
There we go.
the Walmart thing. If Walmart can make their built-in insurance to cover itself.
There we go. So again, it can be confusing where it's owned by its members in a way, but a captive insurer, it's not really owned by its members, it's owned by its parent company. Okay, so like the company owns it, not its members. Okay. And again, just like you were saying, a captive insurer, it pretty much insures itself. So again, I see the confusion here, but just remember a captive insurer is owned by its parent company. Risk retention group, that's owned by its members. What's a reciprocal insurer?
Shares the risk. It shares the risk with another insurance company.
Oh, careful. Reciprocal insurer.
They agreed to insure each other, something like that line.
Yeah,
It's owned by
exactly.
the individual subscribers instead of the member businesses.
Good. So reciprocal insurer, they insure each other, right? So like I insure you, you insure me. I'll take on your risk, you take on my risk.
Yeah.
Cool. Okay. And a reinsurer, what's a reinsurer?
That's what I was talking about then.
Okay, good. Yeah, reinsure, you literally said it. Perfect. Okay, cool. Are we good on this one? I'm gonna take that as a yes. Forward. Rating. Nice, cool. Daniel Dares, I love it. Cool. Okay. A large company with significant potential risk can create their own insurance company subsidiary known as, we just talked about this. Also, I totally forgot to give you guys a break. So after this, we'll take a break. Yay! Okay, I love it. We just talked about it. So I'm so happy you guys are paying attention. Cool. A captive insurer, right? Exactly what it is. It insures itself. Okay, we're talking about Walmart. Okay, so it's too big, maybe too many risks, and it says, you know what, I'm going to create my own insurance, and it's owned by its parent company, its mother company. Okay, what's a fraternal benefit society?
Owned by just the members of a certain society, lodge group or whatever it is.
Yeah, lodging group. What's the benefit of being in a fraternal system? So you said it's remember, non-for-profit. It's maybe they come together for religion or ethnicity, certain things like that. What is the benefit of being in a fraternal benefit society?
I don't know, better insurance rates.
Cool, that's perfect. So they offer insurance, right? They can offer insurance to each other, and I'm glad you brought that up because it can be at better insurance rates. There's big benefits in being in group insurance rather than individual. So a lot of people, when you talk to them, try to see, if they have insurance through their companies, if they don't, because unfortunately, as an individual, insurance prices are going to be a lot higher, and you're going to have to go through a whole underwriting process. Where if you have group insurance, okay, you're not the policy owner, right? You have what do you have? We didn't go over this yet. But in group insurance, you don't own the policy, but what do you have to show that you have?
Certificate of insurance.
Certificate, yeah.
Certificate. Exactly. Certificate. You have a certificate. Okay. But the benefit of that is that you have lower rates. Maybe your employer and pays for part of it. Maybe he pays for all of it. And you don't have to go through such an extensive underwriting process. Okay. So cool. Fraternal benefit society, they come together for group religion, or for religion, ethnicity, things like that. It's nonprofit, and they offer benefits, insurance benefits to their members. What's an industrial insurance group? This one's tough, remember, because I was like, oh, it doesn't sound like what it is.
So it's basically to add coverage for like a funeral, typically for a funeral, for like funeral expenses or things you can say that happen in your afterlife, but mainly typically at times it is only like for funeral expenses of when someone passes.
It's also
Perfect.
lower face amount.
Yeah, perfect. I love it. So it's a small amount. People come to their residence to pick up, some of the policy, the premiums. And we remembered it by Indust. I liked that. And then there was something else I wanted to say about it. What was I going to say? Oh, I lost it. Gosh, guys, I feel like my memory is getting worse. What is it called? What is it also called? Industrial.
Home service.
Door to door.
Home.
Home, we got it.
service.
Home service. Good. Exactly. I love it. Cool. What's a participating plan?
One that receives dividends and can vote.
Yeah, cool. You participate in it. You receive dividends, you can vote, all those good things. Okay, on to the next. Brady?
Where's that break you promised us?
I know. So do you guys want to take a break right now and then come back and finish this? I know we've been going for a while. I totally forgot to give you guys a break. We were talking, having too much fun.
How many questions are left?
5.
We can do the rest.
Yeah, I say finish it.
Finish it? Are we
Yeah.
in agreement there?
Yep.
Okay. All right, cool. Non-for-profit organization that provides insurance and other benefits to its members who usually share a common bond. Ooh. We might have given this one away.
Yeah.
Cool, fraternal benefit, okay. I'm gonna just run through these really quick so we can get to our break. Fraternal Benefit Society, we just talked about that. Remember, non-for-profit comes together for, religion, things like that. And they offer benefits to the group. Risk retention group, they retain the risk. Okay, so they're like, okay, like we're insuring everyone in the group, but we're retaining it in here. Okay, multi-line insurer, they offer multiple types of insurance, auto, health, all of those different things. Domestic insured, domestic, so their home office, their main headquarters, corporate office is in the same state that they operate in. We're cool?
Mhm.
All right. Cool. Brady's on top. I love it. Okay, let's go. Industrial insurer is also called free market insurer. Ooh, we talked about this one as well. True or false? False. What is it called? What is it called?
Home insurance.
Yeah, home service. Home service insurer. Okay, we're good here?
Yep.
Yeah.
Darius, okay, cool. Reciprocal insurers. What the heck are reciprocal insurers? Think about the word reciprocal. Good, they insure each other. Reciprocal insurers insure them other. Self-insurers would insure themselves. Okay. Cool. Okay, Darius on the top, Brady, B. Sosa. Okay, an amusement park might choose this kind of insurance for their liabilities. Uh-oh, this is in the way. For their liabilities and risks. Ooh. If you don't know this one, use what is it? Process of elimination. Cool. Heck yeah. Surplus lines, right? Surplus lines is that, hey, we can't get coverage, but we'll get coverage through surplus lines because our coverage that we need is maybe too expensive, maybe it's too weird. So we're going through surplus lines. Cool. Alien insurers. Alien insurer is someone who they're headquartered in a different state and they operate in another state. So they're headquartered in Texas, they operate in Florida. Industrial insurer, we just talked about industrial insurer, right? Home service insurer is the other name for it. And it's for small face amounts. They come door to door, okay? Usually for funeral costs. Multi-line insurer, they have a bunch of different lines they can offer. Cool? Health, auto, things like that. All right. Trying to get through this quick. Oh, sweet. Okay, let's see. Last question. Stock insurance companies can issue non-participating policies, no dividends received, and can't participate in the elections. True or false? True. True. Non-participating policies are usually accompanied with stock insurance companies. Okay, so if you think about non-participating, think about stock insurance company. If you think about participating, what are we thinking about?
Mutual insurance.
Mutual. Perfect. Okay, so let's see who won. Okay, Brady's third. Cool. B. Sosa. I love it. And number one, you got Darius. Yay! Okay, I love it. I love it, guys. Okay, cool. So I totally forgot to give you guys a break at 10 and 11 and everything. So what I'm gonna do is give you guys a break now. Okay, actually, what we can do is we can either go into lunch or my last group, a lot of people were on the West Coast. So they were like, we don't want to do lunch at my time 12, which was their time 11. So we can either wait and do lunch in an hour or we can do lunch now. What are you guys?
I don't mind waiting an hour. personally myself.
Yeah,
Okay.
same.
Let me see. I think I got a hand raised. How is everyone else feeling?
I have to leave now.
Okay, that's fine. Go ahead. No
Well,
worries.
Okay, thank you. Nice meeting you guys.
You too. Good luck with everything.
Pleasure.
Have a good day.
Okay, so are we good with lunch in an hour? Is everyone okay with that?
Yeah, it's fine.
Okay,
Yeah.
so let's take a break now. Let's take a break till 12. Do you guys, I know, because I didn't give you guys a break before. You probably have to like, go to the bathroom, let the dog out, whatever.
Is 12, what is 12?
Are you saying just 15 minutes?
Oh, sorry. I always forget that there's different time zones. 15 minutes.
Okay,
So
thanks.
that's 11, 12, whatever it is. Okay, cool.
Thank you.
15 minutes. See you guys back. An hour after that, we'll take lunch.
Sounds good.
Okay, see you guys soon.
Can I, hello.
Go ahead.
Excuse me. How long is how much longer do we have?
So this goes till 5:30. You can come and go as you please. If you're like, oh, I can't take it anymore, I need to go, go ahead. I know studying this long is very difficult. So you do what you need to do. I'm not going to be offended at all.
Okay. And then how often?
Are we gonna get a recording of this?
So this is being recorded, so I'm pretty sure we do. Yes.
So we're gonna get, each of us are gonna get it?
Yes, you definitely should. And I think we might even have it linked to like a special YouTube channel for you guys to go back and look at.
All right, sounds good. Thank you.
And then how often is the class? Or
Every Saturday.
every
other Saturday.
Oh, okay.
Fucking
Then I have one more question. You can go ahead.
Brutal.
There's only a question I had. I can't think of it.
Every other Saturday for how long? For the next month or the next 2 months?
I think forever. I think forever.
Okay.
And then the classes are what is it 5 hours? What's the?
They're 8 hours long. So 9:30 to 5:30. East Coast time.
Okay.
So where are you? Where'd you say you were again?
I'm on the West Coast. I'm in Cali.
Oh, you're in California. Okay, so you're like way different. Wait, what time did you get up this morning? We're
Right.
Yeah.
I know.
3 hours? 4 hours?
It's 8:48 right now. So
Oh.
it started at 6:30. So I got in a little bit late because
Bless your heart. I would have not. I would have been like, no, I'm good.
Well, yesterday I wanted to, and actually I'm in Cali, but I'm on Texas time. So I'm like, this is okay for me, like getting up, but I also was trying to yesterday trying to make it to that class. And I got the times mixed up because I thought that it was 6 and it was actually 3:30 or something. So I was supposed to start it from the time zone. It confused me. And so I was like, well, I'll just wake up. I think this was like the only class. So I was like, okay, I'll just take it.
Yeah, I wonder. I guess he just kind of like puts the time zone next to it, but I wish he made it. I can write that down and see if he can make it more specific in y'all's portals, depending on what time zone you're in. Just because I know that can get confusing. I used to live in Tallahassee, and I used to work in Mariana, at a place called Sunland Center, and I would go up there and kind of teach classes up there. But it was an hour difference, so I'd have to like, if I left at 5, I'd get there at 5. Okay, so it's like I always had to take an account, and then if I left at 5 there, I'd get back at like 7. So the time change always confuses everyone. But let me write that down and talk to him about that.
Okay. Yeah, like I guess it didn't show us the time zone as we're speaking from yesterday, but when I did it for the Saturday, your class, it automatically just went to my time zone. So
Right.
I don't know.
Okay, I'll ask. Yeah, I'll ask about that and see what, because that's weird. That sounds weird. Yeah. Okay. Well, cool. Cool. I'm glad you made it. It'll go till 2:30 your time.
Okay. Because I know I have some. It's a Saturday, so and I'm not exactly at home, so I was like, okay, I just need to make sure.
Yeah.
Before people start coming in and things.
Yeah, of course. And feel free, like, come and go as you need. Again, it's not gonna, I know 8 hours of studying is a lot. So again, this is just a big study session for everyone. And if you can make it the whole time, that's great. If you can't, that's also fine.
Okay. Yeah, I've actually had my license before. I'm just reinstating it.
Oh, okay, good. So you already know, a lot of this stuff, which is good.
I don't know if I want to say I know a lot of it.
It's been a while.
It's definitely a refresher.
Yeah.
I do know, like, as far as how we're going over the definitions, that's very well, that was the main thing that we had to do the main thing to remember is the definitions, because that was very helpful for the test.
Yeah. It's a definition test. It's a definition-based test. You know the definitions and then how they ask the questions, you're good. But yeah, that's how I'm like, just focus on figuring out ways to memorize these definitions and then go take all the quizzes and the tests to prepare for it. But yeah. So
Okay.
I know it's tough to go through 8 hours of definitions. I totally hear you, but we'll get through it.
How many definitions is there that we're having to just memorize?
Probably like 250 around there. Maybe a little more, a little less.
I have a question. Are we ever gonna be able to, well, and during this class, are we gonna be able to go through practice questions like the ones that are on the modules, possibly, in case we can break them down, or no?
I definitely can do that. If you guys want to do that, definitely. Let's do it.
Yeah. If we could ask the group as a whole, whatever, I just don't want to make a decision for everybody because I understand that everybody wants to. But the reason why is because this, and again, anyone pitch in if they're listening, I go through the question and I know the definition, but how does that definition play into the question? You see what I'm saying? I think if we just okay, I don't know what an example, fixed annuity means. What is a fixed annuity? And let's break it down so they can understand. And so when they see the question, they're like, oh, I know what a fixed annuity is. Because understanding the term, as a definition is one thing, but how it plays in a question is different, So maybe when the group comes back, maybe we can make a small vote, whatever they feel comfortable or whatever you feel most comfortable, Jules. I don't want to take over. I'm just suggesting.
No. Again, this is about you guys, not me.
That sounds like it's going back to what you just stated as far as the second half of being able to master the test. Is that what that is what she's stating?
Yes, definitely going through questions and understanding the questions. So yeah, let's do that. We can do those. We can do the Kahoots. Again, let's make this about you guys. So heck yeah, we'll ask the group and see.
I'm sorry for interrupting, but as old as I am, I'm definitely never been a very good test taker.
Yeah.
So I'm usually the type of person that leave the study till the last minute. I've always been that way, but I think that's a great idea what she just suggested.
Okay, let's do it.
Every little bit hurts. I've never taken the insurance exam, so I don't know how it's gonna be, but every little thing will help, I'm sure.
Yeah. Okay, cool. I love it. We'll do maybe we'll do one test from Pearson, another test from PSI. Like I was saying, different states have different tests and they're worded differently. So maybe we could do one of each. We'll see. Each one of them has like 100 questions, so we could do a little bit, see how we feel. We could do all 100. I'm totally cool with whatever. So let's ask the group and see what they want, and then I think that's a great idea. I think that's a great idea. Heck
So,
yeah.
question, all the definitions that you went through earlier today, is that something that we could also find in the modules?
Yeah, so those
Okay,
are
perfect.
all the definitions from chapter 1. Okay. So that's like a summary of chapter 1. If you know those
Okay.
definitions, they're pretty good.
All right, good.
Yeah,
Thank
yeah.
you.
So I suggest like just printing out just those definitions.
I would, yeah. Or just, I mean, I don't know if sitting there and like reading them will be very helpful. It totally could be if that's, how you learn. But like writing them always helped me. Thinking about questions, examples, teaching people always helped me. If you could just like I'll sit there with Biggie, my dog. I'll sit there with my dog and I'll be like, this is what this is, and this is how, he's just sitting there like,
No,
but
that is so true.
Well,
When you guys are going through your study guide, that helped me a lot is pretending somebody is physically with you and teaching them, if that makes sense. That's why probably Ms. Jules knows these terms so well, because she constantly teaches us and constantly goes over the terms. So if you go and you practice, it's gonna sound so funny. Go and just like you're gonna be talking to nobody, or just talk to your cat, talk to your dog, or for example,
look in the
my
mirror.
my husband, he would just be sitting there and I'll be talking to him and he'll be like, yeah, babe, I have no idea what you're talking about, but go for it.
Yeah, the reason I said just to have them, not just necessarily just to go over the but just so you could have it as a visual and it could be tangible rather than it just being on the computer
Yeah.
or on your phone.
So
That's how I learned. When I did do the test, it was I print everything and I did it online. I had all my paperwork, so it was easier. Even though so now everything is just more so virtually. So that's why I said it. But I took mine like over 5, 6, 7 years ago. So that's why I said it was very um it was very helpful to have it as tangible.
Yeah, I love it. Okay, I'm gonna run to the bathroom really quick, but feel free to keep talking and, talk about whatever.
Is anyone else in North Carolina that's still in here?
Yes, I am.
Okay. Have you taken the test?
No, I have
Okay.
not.
If you mind me asking, what part of North Carolina are you in?
Near Charlotte.
In Charlotte? Okay. I'm in Wilmington.
Yeah, yeah. So I'm working 3
Right.
days a week, so full time, like all day. So I'm like trying to figure out when I'm going to get this in. But I've got Wednesday and Friday off next week, so maybe I can. I want to take it as soon as we're done with this review.
Right. So I will say and don't be like discouraged, like the failure rate to North Carolina is one of the highest out of all the states. Like, and I didn't know that, and I kind of like stunned me. But um the the test, I don't know how it's worded, but it tricks you up really bad. I will
Yeah.
say that. So when you're taking the test, this is what I do. For the ones that you do know, like 110%, you're gonna have an option to flag it. Like we'll flag it like, oh, flag it so you can come back to it. Don't stick too long on one question. You don't know it, flag it and come back to it and don't answer it.
Okay.
Just keep going. And
Okay.
then the ones that you do know and 110% with your little heart, answer it and don't flag it, or unless flag it unless you're like, maybe I do want to come back to it, but don't waste time on because first it'll have the first 45, you have to answer all those, and then there's another 15 that you have to answer them. So there's 2 sections to the test.
Okay.
So
Thanks for that information. Yeah. Well, see, I didn't even realize. It's so long. It's such a long story. I blew through all this stuff in 5 days. So but I printed a lot. I printed every vocabulary and every chapter review. So I've got all that just because I'm kind of a hands-on person. I need to read it. And so I've got all that. But I did pretty well on all the tests, but I didn't realize in our in our course that there is a practice test. So as soon as I'm done with this, I plan on doing that practice test.
5 days
Right.
is impressive.
Yeah. So, so yeah, I'm going to do the practice test and then I'll try to schedule the test. I don't know where it'll be or anything, so it'll be interesting.
Right. Is anyone else from North Carolina?
No, I'm
Mhm.
from Illinois.
Illinois.
Same.
Who's is your guys' program Pearson or is it the other one?
I think it's the other one.
Who's the other one for you?
Wait, are you asking like the course?
Yeah,
Like,
no, the state test.
oh, the state test. I
Mhm.
haven't got there yet. I'm still just I'm still studying.
So is the like actual final like exam, not the practice one, is that test like timed?
Yes, it's timed. Depending on your state, for mine it was like an hour and a half or an hour. I
Ooh.
don't remember.
Yeah.
So
And then
that's
you
why
were
I told
you were saying that you can flag them and come back. Okay, you said there's 45 and then there's 15. Do you have
yeah,
to finish do you have to have all the 45 completed before you go on to the 15?
yes.
Okay,
Yes.
that's what I figured. Yeah.
Do
Yeah.
your state have it to where it's you have to get a certain percentage? Is it because I know it was 70%. Is
Yeah,
it
it's
still the same
70%
right
North
now?
Carolina. Yeah,
Mhm.
70% North Carolina.
Okay.
Yep. I made a 50 and a 44 on mine. The first one I made a 50, second one a 44. So basically I made a 50 again, is the way that I see it. You know what I mean? And I was 20 points away, but on the actual, I wish I could show my screen to you guys or like my face. I could show you how the paper looks for Pearson View.
Do you
It's like,
find out when you leave the test what your score is?
yes.
Okay.
Yeah, you find out, they'll print it out for you for Pearson View.
Okay.
So they'll just fold it and give it to you, and then it'll show you like your weak areas.
Okay.
There's 1, 2, 3, 4, 5 sections, and out of those 5 sections, it will show like a bar graph of like, okay, this is your weak spots. But the thing that tricks me up is that I go home and there's the things that I want to remember on the test. There's just so much like, excuse me, that I'm like, wait, this term, that term. Like for example, when Miss Jules come back and we go over the questions, I think like Miss I don't want to butcher your last name, but the one with the cool last name, he was saying that I just need to practice over the practice questions. Like I'm really close, but like I said, the terms help knowing them 110%. But once you're on the test, the way that term is being used within the question will
That's right,
throw you
yeah.
will throw you off. Because that kind of like the stock, the participating. For the life of me, the whole time in my head, I'm thinking, oh, well, that's a stock company. That's not a mutual company. So when I'm looking at the answer choices, I'm like, is it the same thing? Like, you see what I'm saying? So how does that term play into a question and also in insurance is really, I think, people's problem, because you got to remind yourselves, this is a new industry that we're getting into. So when you're understanding these terms, kind of like the the insurer, switch it to insurance company is what I'm trying to say. How do these terms play into a question is what I'm trying to say. And I've taken the course before. This is my second time taking it. So I've taken 5 tries before.
Well, I hope this really helps you.
Oh no, I really do too. When I tell you like it's very I'm a very soft person when I get disencouraged. Like I was very confident the first time, and then when I got a 50, I was like, what did I miss? Where did I fail at? And the thing is, you can only see in the bar graph where quote your weak spots are, but like even the questions, you don't know if you got them right or wrong. You know what I mean? Even if you don't tell me what's the right answer, just tell me what's wrong, you know?
Well, just speak life into yourself.
Amen.
Yeah, just tell yourself you can do it. I've always been not the, I'm a good, like, I can ace my test and all that, but I'm gonna go in to where it's like, I get nervous. So it's like, even though I know it, I'm still gonna be nervous. So I have to speak it. I have to speak, and it might be just the anxiety of it. I get
Right.
anxiety when it comes to taking tests. Let's just say that, yeah. So you have to speak when you are like that and you know that. You just have to speak life into yourself because that's the only way you're gonna be able to get through it. It took me 4 times to actually finally get it. And I was like working, I had my kids, and then I had somebody living with me with her kids. So I was helping with my kids and her kids, plus going to school. And I mean going to work. I think I was taking the bus at that time. I was living in Texas. And so I had all that on my back. And then I was going to every 3rd quarter, I would go to North Carolina to go for conferences. And so I took that last. I said, okay, when I come back, I have to take the test. I went there, just went over again with the definitions and all that. And then the next week, I end up. I had to remember back when it was like when I was test taking in like elementary. I know it's like. But I get like that antsy. I get that like, okay, what can I do? So I ate chocolates. I drank smart water. I'm not gonna lie.
I like that.
I'm like, okay, this is my 4th try because if I felt that one, I was gonna, like, it was paid for and everything. So if I felt that one, that was the 4th, my last try. So, and it was for a job.
So you've taken insurance exams before and you've passed them. You're just doing a different section of insurance.
I've taken it. I have my life and health insurance license, the HMO. I've taken it for a job, but I didn't have the mentorship. So when she says you need to have that mentorship for insurance, like that's very crucial because if you don't know nobody in the industry, you'll just be lost in the sauce. Especially if you're like, I got my insurance, but it was another test that I had to take that was just for the actual job itself. And so that didn't happen. And so I just had my insurance license. So I was an IBO, but I didn't have the right insurance. I mean, the mentorship.
You just
So
felt like you were floating around is kind of what I hear.
yeah. So
Like
when
you
it
didn't
came,
have the structure. The structure.
Okay.
right.
That's
Yes.
that's a big thing. Like seriously, guys, know who you're signing with, ask for recommendations, talk to people that have signed with them before, because they will promise the moon and the stars. They will promise and they'll say, oh, you'll have a mentor, they'll be out with you all the time, they'll help you out with this, they'll teach you this. And a lot of them won't. A lot of them won't, especially if you're signing on as a 1099, they don't really have an investment in you. So what that means is like as a sole proprietor, if you're just kind of like have your own business, but you're signing with them, just be very careful, because it can be very lucrative. It can be a great business, but make sure you have a good mentor, not someone who's just going to day 3 throw you out on the street and say good luck. Someone that's going to sit down with you, tell you everything. Again, I came from a medical background. I didn't even know what a 1099 was. They were like, oh, just write everything off. And I was like, to who? I was like, why am I paying taxes? What are taxes? And that sounds very ignorant, but again, you're on the medical path, you're on a path outside of this, you don't know any of that. And it's just, you're not taught it. And then, yeah, that's what it is. So again, be very aware, ask a lot of questions. If they get defensive when you're asking questions, just say, this is for my personal, this is a decision that I need to make. This is for my personal finances and my future. And it's very important for me. I apologize if that, hurts you. This isn't against you, your personality, your business, but it's just for my personal growth. So just make that very clear.
And they'll try to gaslight you. I've had this done to me once. They'll try to gaslight you because someone tried to pay for it and they'll be like, well, if I pay for it, then you can't leave me. You can't leave the company. Like they'll try to say stuff like that to you unless you sign
Right.
something. If you sign something concrete where it's like you can't leave at a certain, every state's different, right? But with me, that's why it was like first red flag for me. They were like, I was gonna take an insurance course for them, and um, they were like, yeah, but I'm gonna pay for it. But if you leave, like, I don't want you just to leave and go work somewhere else. I'm like, the first red flag to me, why would I, why would you tell me that if you're a good insurance company and you pay your employees good, supposedly, why would I want to leave? You see what I'm saying? So like, look at just, don't let nobody gaslight you because they pay for something. They paid for it. You didn't force them to make you pay for it. They offered it to you. You accepted it. That's on them.
Yeah.
Yep.
Yeah. Okay, so outside of that, Brittany brought up a really good point. Do you guys, so we have two options. We can either continue on with what we've been doing with the PowerPoint, or we can stop here and go through questions. Okay, I know that there's different types of, Joy, go ahead. Oh, wait, hold on. I think that she's muted. I hear ya. I hear ya. Okay, I gotcha.
Okay, thank you. I got kicked out.
I gotcha. Sorry. Okay. So again, there's different types. There's Pearson, there's PSI, and there's Prometric. Okay. I know that's different for each state. So what we can do is we can do a test from each state. Not from each state, from, Pearson, PSI, and Prometric. We can continue on with what we've been doing. It's totally up to you guys. I think Brittany did make a good point in the sense that, hey, maybe we should just go through questions and see how they are, just because definitions are great. But again, half of it is learning how to take that specific test. So what do you
I
guys
agree.
Good. Joy, go ahead.
In the Prometric Virginia test, the questions retaining to Virginia are actually West Virginia
Okay.
and not actually Virginia.
Okay. I'll write that. Let me see. So and this could be it. I'll follow up with you after this. But sometimes they'll say like, oh, in West Virginia, does this apply, this apply? But it's talking about like the state, okay, so for example, Pearson. If I go to like the Florida version, it'll be like, in Florida, what is this? What does this mean? But Pearson will ask that question the same way in every state. So it might be saying West Virginia, but it'll probably ask the same kind of questions.
No, it was all the questions were for West Virginia. There was nothing pertaining to Virginia at all.
Okay. Okay. Let me see.
I had to Google it.
And like I was telling Ms. Jules, like, I think that knowing the definition is great. And I'm not saying that we shouldn't know this. Because I don't know if you guys heard what I told her or you guys were on your break, but I kind of told her that I think how the definition plays into a question is a huge factor. I think that knowing what they mean by that and how it's played into it, so then you understand the question, know how to break down the question, because certain questions, man, they purposely try to throw you off. I can assure you that. Like, there's times where I'm sitting there, I'm like, I know it's buy sell agreement. Why are they trying to trick me up? And then
that's exactly the problem that I'm having with these questions and not being able to get through the pre-exams, because the questions are the way they're worded, and then you have somebody like me that has dyslexia and you're like, what?
So it doesn't matter what you have, what we have. We all have our little quirks and everything, but I really know that we can all get through this. We're all smart individuals.
I agree. I think so. That's why I was suggesting to Ms. Jules, like, I told her that I didn't want to take over the study course, and I know you guys are here because you guys are trying to take it, but like, I agree with I don't want to butcher your name, the one with a cool last name,
Elena.
Elena. Sorry, sweetheart. And she's like, take over, keep taking the test, keep taking the practice test. I think once we break down the question together as a group, I think it's going to help us a lot, because then you'll be like, well, I thought it was key person versus buy and sell agreement. And you'd be like, but why is it not this one? And then that's when somebody can be like, oh, well, this is why, and that's why. Because
I think that's a great idea.
Yeah, I do too. I think it's a great idea.
Okay, I'm gonna just have a poll really quick.
Mhm.
And just so it's anonymous. And we can go from there. So I'm gonna say questions if you guys want to do questions, and I'm gonna put PPT for PowerPoint if you want to continue on with the PowerPoint. Okay, save as webinar. Okay. Can you guys see? Can you guys, oh, launch. Okay, go ahead. If you guys, I think you guys can see it, can you?
Yes, we can see it.
Cool.
Wait, what's PPT again? Sorry.
No, you're good. PowerPoint. Continue on the PowerPoint or do the questions or go through questions.
Well,
And we can go, you know, do a little bit of both as well.
okay, yeah, I think that because it's not for me, it's not just the question. I also need to know the terms before the questions as well.
Yeah.
So I think that it's those that are, I think that's actually helpful if you actually know the terms.
Yeah. Okay.
So,
Let's do this. Let's do, because we have a good amount of time left. Okay. So let's do, there's Pearson, there's PSI and there's Pro. Okay. The Pro metric. So let's do 25 questions from each and then go back to the PowerPoint. Do you guys feel okay with that? And we can do more or less depending on how you guys feel. Is everyone cool with that?
Yeah.
Yeah.
Yes.
Cool. Okay.
yes.
Let's start with Pearson. I'm just going to go straight down the line because that's what's up first. I'm going to go ahead and share my screen. Okay. And let's just talk through these. Okay. So let's see.
Okay, so I gotta focus now, babe. Because they're doing practice test questions.
Okay. So. All right. So
All
start
right, guys,
quick.
listen to me. Mami is busy. She's working on her phone. Okay, so get quiet. Okay.
It's Chapel.
Okay. I'm gonna read the question. Feel free to text in the chat, call it out, whatever you guys want to do. Okay. So which type of whole life insurance policy requires premiums to be paid over the entire lifetime of the insured?
Ordinary whole life.
Ordinary whole life. Yep.
Ordinary. Are we agreeing on that one?
Yes.
Yep.
Cool. Okay. Oh, and this one doesn't show. Okay, hold on.
That didn't show the answer.
That didn't show the answer. Let's go to this one. I think this one might.
What is the best way to remember ordinary whole life for you guys? Because that ordinary, modified, and limited pay throw me off every time. What is an ordinary? Like what keywords make you guys remember ordinary?
But what does ordinary mean? And
Or ordinary, just think about whole life.
Oh,
Like,
well, the actual definition, does that have anything to do with it?
the one that we just saw?
Just ordinary, as in the definition itself.
Ordinary whole life is just regular whole life. There's nothing, you're gonna have level premiums. Everything is gonna be very like, there's
normal.
Very normal. You're gonna have it your whole life. Nothing goes up or down.
So that's what I meant by that. Is ordinary means normal. So
also like the usual.
Okay.
Yeah.
Okay, good. Yeah, I'm sitting here. I'm like, no, I'm just explaining. Okay. Yes, ordinary means normal. Perfect. It's the perfect way.
Okay, got y'all. Thank y'all. Okay.
That's why I say some of these terms and things, I just say common sense.
Yes.
Think of common as common sense.
And then
that helps.
Okay.
Think about the word.
And then like when you said normal, normal insurance, whole insurance is your whole life. So you always want to have whole because it goes to 99, and then have term, where term can be 20, I don't know the numbers, 40, 60, I can't remember. So you actually can get your, I guess it cuts off at that, once that term is over. Is that correct? And then,
So
yeah.
that's correct, except it does go to 100. Some of them even mature at 127 now.
Oh, wow.
Yeah, but you're not, for the test, just know 100.
I have one more question. I apologize. What is the difference between endowment and limited pay? Because limited pay is like 10, 20 years, and endowment is basically the same thing, kind of, sort of. How do you guys remember from endowment to limited pay, the difference of each of those?
Anyone know this one?
Well, isn't endowment, that's the one that matures at a specific date, right? And I think limited, that's the one that like it's over a period of specified time, but it's not the specified date. Let me go look at my notes.
Yeah. And so limited pay is over a period of time. Okay. So that's 10 years, 20 years, 30 years. That's a limited pay. Okay. An endowment, like you said, and again, let me double check this, but I'm pretty sure it's the date. It's talking about like a specific date, but let's see in here. So it's a type of permanent life insurance that combines
yeah, so the premium would be paid for a fixed period, like 10 or 20 years up until age 65. But for an endowment, you pay it for a set time, and it's often much shorter than life expectancy.
Right.
Okay. So an endowment, you have a benefit at the end. That I remember this now. You're guaranteed a benefit at the end. Okay. Yeah. So a limited pay, you only get the benefit if it's so you pay, your premiums are paid for the specific 10, 20, 30 years, whatever. Okay. Depending on what type of life insurance it is, if it's life or, whatever it is, if it's only if it's covered for only a specific period of time, or if it's a whole life policy, then obviously you get the benefit at the end, like when you pass away, but you're only paying for a certain amount of years. An endowment, if you live past the number of years that you're paying, you get the benefit. There's a guaranteed payout.
Okay.
Does that make sense?
Right. Whenever it comes to like limited pay, it's not funny. They're kind of the same, but not the same, right? Like same purpose, but a bit different.
An endowment is like you want the money. Like you're gonna get the money either way. Okay. A limited pay is more so talking about just how long you're gonna pay the premiums.
Okay.
So it's like, yeah, it does the same thing, but it covers different things. Like it's talking about.
You on a limited, like you have a limited life, you have a whole life. So you have the whole life plan, but you're only going to pay for it for, till you're 60, but yet you still have it for your whole
life.
time. So the limited is only till 60, but you have it the whole time. The endowment, you're going to pay for it till you're 60, and then at 60
you're going to get the benefit.
Yeah, you're going to get the money. So that's the difference in them.
Okay, I got it.
Okay, cool. All right, yeah, that was a much better explanation than what I was. Okay, no, you're good. And sometimes I just talk in circles, but that's fine. Okay, so any other questions? Are we good there? Good. Okay. Which of the following annuities provides income payments that remain fixed and do not fluctuate?
Fixed annuity.
Good. Okay, it says in the definition, fixed annuity. What's an annuity?
It's a retirement plan or retirement investment.
Good.
Yeah.
Perfect. Okay. What is a primary characteristic of a term life insurance policy?
It offers pure death benefit
Yeah.
protection without cash value.
Good.
Mhm.
Okay,
Yeah.
so let's talk about this. Does it provide lifetime coverage?
No, because it's term.
Mm-mm.
Oh, because it's term. Good.
Term.
Why? So term life versus whole life, which one accumulates a cash value?
Whole life.
Term.
Whole life.
Whole life.
Oh, without.
Yeah, term life, because it's only a specific period of time, you don't have a cash value benefit of that. That's only for whole life. Okay. And then does it have flexible premium options? It's not a primary
No.
characteristic of term life. It could, depending on what type you have, but it's not a primary. The primary thing is it pretty much only offers a death benefit and you don't have a cash value. You can't take out any cash from it.
Right, because the terms, and then you can take it after
Good.
the term. Right.
Yeah, once the term ends though, it goes away. You don't get a benefit unless you die during that term.
Yeah.
If you had an endowment, then you would. Okay, which type of annuity allows the policyholder to invest in sub-accounts similar to mutual funds? Ooh, this is something we talked about.
Variable.
Variable.
Indexed.
Okay, so let's talk about it. So we know it's not fixed, right? And we know it's not immediate. Okay. So now we're in between indexed and variable. Okay, so index is going to be for index funds, okay? S&P 500, things like that. Variable are, if you see sub accounts similar to mutual funds, think about variable annuities. That's it. Sub accounts, variable annuities, or variable. Okay, cool. Because if it said like S&P 500, that would be index.
Okay.
Cool. Okay. So like think about like sub accounts like small, and then you can think about variable. Index is way bigger. Okay. Which of the following accurately describes a whole life insurance policy?
It does not offer any death benefits guarantees.
A
It
whole
offers
life.
level
it offers a
premiums and
It
builds
offers
cash
a level
value.
premium and builds
Premium
cash
and builds
value.
cash value.
Now
Good.
that's one.
Good. I heard it in there. It offers level, so whole life. This is also ordinary whole life. Okay. It's the same thing. They just didn't use the term ordinary. Whole life and ordinary whole life is the same thing. Okay. Level premiums, it builds a cash value. It's the most basic level of a whole life insurance policy.
So keyword is cash value.
Cash value and level premiums.
Okay.
Cool.
Okay. So
Yeah.
So when it's a whole life, it always has level premiums, no matter what.
No.
Yeah. So it in an ordinary whole life,
Yes.
Mm-hmm.
but not in all whole lives.
Okay.
Remember, because if we did your question was specifically about cash value.
No, it was okay. It was about the premiums, because when I think of
So
go ahead.
think about variable whole life. Right? Variable whole
Right.
life, it's based on those sub accounts. Okay, those are those small stocks that you can invest in that can go up or down. Premiums can change. You can adjust variable, you can adjust what stocks you're going in. You can also adjust what premiums you're paying. Okay, so variable whole life changes.
Like single premium, that's all the premium right up front.
Single premium whole life, you pay it all up front. Yeah.
No. I understand that 110%, but like it's like you said, and in my mind, I would have been like, oh well, whole life. If so, when they say just plain whole life, they mean ordinary, the normal schmormal.
Normal schmormal, yep.
Oh yeah, whole life. Okay. See, that's what throws me off in a question. Whenever they bring that, I'm over here like, well, whole life can have both variable premium. I think of it more extensive, but like what's one of the people in here is, you're like, use your common sense. You're so right. I think I tend to overthink the question. And I'm over here like, oh well, there's single, and then there's variable, and then there's periodic. There's this and that type of whole life insurance. I'm over here thinking that way. In reality, I should think just a regular schmegular whole life and that's the answer. You see what I'm saying? So that's why I'm asking the way that I'm asking. I understand that there's different types of premiums. I just, in this general sense of the question, I'm over here thinking like the way I was thinking.
Right. Like, oh, it can have money. I totally I totally hear you. This is worded like this because it'll be worded like this in the exam. So if it's just saying whole life, it's talking about ordinary. Unless it's being, if it wants you to talk about a specific one, it'll say specifically which one it's talking about. But yeah, whole life is just ordinary. I'm sad I can't see you guys because I'm like looking in the corner when you guys are talking, like, like I want to look at you guys, but you guys aren't there. It's sad. Okay. So are we good on this one?
Yes, and I'm glad you can't see me because I'm over here scratching my head.
Okay. Okay, so which of the following is the best reason to purchase an annuity?
To provide a guaranteed income stream for life.
Yes.
Mm-hmm.
We good on this one?
Yes.
Cool. A client wants a life insurance policy that provides flexible premiums and the ability to adjust death benefits. Which of the following?
Universal.
Okay.
Universal.
Are we good on this one?
Mm-hmm.
Okay.
Can I get clarification between universal and variable?
Yes. Okay. So, universal is the most flexible. Okay. So let me not, confuse you here. Universal, if you want to know exactly where your money is going, where you're investing it, how much you're paying for premiums, how often you're paying, that's all universal. When it's talking about variable, yes, it's all similar to that. But variable is mostly just talking about, hey, I'm investing my money, so it's going to be fluctuating. My premiums, everything's going to be fluctuating. It's mostly just specifically talking about the investment side of it. Okay, so variable, just think the investment side of it. Universal, you can think everything's flexible. Okay, so like policy as a whole. So like the premiums, when I'm paying them, like it's more so the entire thing.
Okay.
Yeah, you can invest in it, but like when you're talking about universal, you're not really talking about the investment side. Like if I'm talking about variable, think about investments immediately. When I talk about universal, think about, oh, okay, I have flexible premiums. I have flexibility about where I'm putting my money, why I'm putting it there, things like that.
So variables is pretty much it fluctuates according to the investments. Not you, like it's not just you changing it. It has all to do with how your money is.
Right.
Like your budget, like if what you're able to afford is what you're saying?
No, that would be more universal. So like your budget's changing, you want to go for universal. Variable, just think about your investments and how they're doing.
So variable, you can't really, you have basically control, but not as much control as a universal
Exactly.
life. So a variable is, when you think variable, think of it like, okay, I'm taking a risk, putting it in this, like you can say this type of premium or this type of insurance because it can fluctuate. It fluctuates with the stocks, correct? Is Jules, am I right on that, right? Yeah.
That's
So universal is more like, okay, if you want something more budget friendly, something more easy to go, you think of it like, okay, I can control my premiums, I can adjust my death benefits, I can do anything I want. Literally, universally, I can do whatever I want with this type of policy. Did that help?
Okay. Yeah.
You guys watching?
Joy, if you have something, you can go ahead.
Yeah, that's the way I was relaying variable is by the stock market. So if the stock market's up, the variable's up. If the stock market's down, variable's down.
Oh, okay.
So
that's how I remembered variable versus
you're
universal.
Okay.
Because you're investing in the stocks, and so the stocks are like fluctuating.
Yeah, they go up, down, all over the place.
Right, exactly.
Let's say you want to invest, but you don't want to lose a bunch of money. Which one would you do?
Universal?
So universe, I wouldn't go to your.
I don't know. I'm guessing.
It's okay. We talked about it. We talked about the different
Is it between variable and universal, or is this a
not between, yeah, it's not universal.
I'm sorry, could you repeat the question one more time, sweetheart? I'm so sorry.
No, it's okay. So let's say I want to invest, but I
Okay.
don't want to lose any money. I only want to gain money.
Oh, that's stocks. Well, no. I don't know.
Stocks go up and down. That would be variable.
That whole
On
life.
here, it's on here.
Index.
Index.
Okay, I didn't know.
Yeah. Index, you have a floor. Okay. So like you're not going below the floor. You're not going to lose money. The insurance company is taking on the risk. Okay. So even if it does, even if the S&P 500, those big stock, you're investing in the top 500 stocks, even if they do go down, the insurance company is only going to pay you benefits. Okay. Only benefits. You're not going to get paid if it goes down. You'll get paid if it goes up. Okay. But you're not going to lose anything. Variable, you can lose or gain.
Oh, okay. That makes that just blew my mind because I'm over here like, what is the difference between the both? Okay, so index you can lose. Variable you can lose.
There you go.
Index is guaranteed. All right, bet.
This is a guaranteed gain. Okay, so it's gonna be more expensive, right? Because like you're only going up. And the insurance company's taking on that risk for you. But yeah. So index, you invest, but you only go up, and they're investing in the top 500 companies, things like that. Not universal, variable, you're investing in specific stocks and then hope they do well. But if they don't, then you also lose money.
That's like you being reinsured.
Right. Yeah. Index is kind of like you being reinsured. It's like they take it on for you. They're like, we'll invest. Yeah, exactly. Cool. Are we good on this one?
Yes.
Okay. All right. Which annuity payout option is most appropriate for a retiree who wants guaranteed payments for life, but also wants a minimum number of payments to be made for their beneficiary if they pass away early?
Joint survivor.
Life of period certainty.
Ooh, okay. So we're in between these two, correct? I think those are the two that
Which annuity payout?
Okay, so we're in between these two, so let's talk about it. Okay, so we know it's not life only because he wants payments for the beneficiary as well. Okay, we know it's not immediate because we're not really talking about that. Okay, but he wants a minimum number of payments to be made. Okay, a minimum number of payments, but it's not saying for the entire life of the beneficiary. Okay, so that's the kicker. Okay, if it said I want to cover the entire life after I pass away of my beneficiary, joint and survivor. If saying wants a minimum number of payments to be made to the beneficiary, saying, I want it just for a specific amount of time, life with period certainty. Life with period certain annuity.
And guys, this is exactly on the actual state test. It's going to be like, this is why I'm telling you, you guys have to break down the question.
Yeah.
Like, I would have picked, and being honest, joint survivor annuity. Now that she said minimal payments, like a certain small section of it, of your life, I'm over here like, oh, yeah, I would have definitely got that wrong. And I'm over here questioning why would I get that wrong?
I would have came back to it because I couldn't decide right then.
Yeah. So joint survivor is I want to cover my life and the person, the next person, right? My beneficiary. Life with period certain, I'm covering my life. And then the person that my beneficiary, I'm going to cover a period of their life. Cool?
Yes.
Okay. All right. Michael, age 45, is seeking a life insurance policy that will provide coverage until he retires, but does not need cash value accumulation. Which policy is most suitable? I hate this question. I hate this question, but let's talk about it.
Term.
Huh?
Term.
Okay. What are we thinking? Are we agreeing on this?
No, because it's he's seeking a life insurance policy. Oh, that until he retires. Yeah, so it could be a term. Yeah, it could be a term.
The reason why I say term is because he's seeking, like you said, seeking a provide coverage until he retires,
Yeah.
but does not need cash
Cash value.
accumulation. Term is the only one out of all these that do not accumulate cash
Good.
value.
Right.
So the way that I remember terminate everything. No cash value. It ends, it dies, it's over type thing.
Good. Yeah, that's exactly right. That's why I hate this question, is because it's like, oh, he wants life insurance. But then yeah.
Not for his whole life, just until he retires. Yeah.
Just until you retire. It's that little thing that you're like, oh gosh, yeah, I hate this question. But yes, you're exactly right. If he doesn't need a cash value, term. If it's talking about no cash value, always just go to term. Always just go to term. Okay. Lisa is retiring in 5 years and wants to ensure that she has a steady source of income in retirement. What are we thinking here already?
Deferred.
So okay, good. Yeah, we probably are already thinking about there. I was being more specific. Let's talk about she wants a steady source of income in retirement. Are we thinking life insurance or are we thinking annuity?
Annuity.
Annuity, good, right? So we're already thinking annuity. She is concerned about market volatility. Volatility. Wait, volatility.
Volatility.
Volatility. I was like, I'm saying this wrong, and it keeps coming out the same way.
Literally my dyslexia. Don't even feel bad.
I know I'm saying this wrong, and it's coming out the wrong. Okay, good. So volatility and once predictable payments. What financial product should she consider? So she's retiring in 5 years, but she wants market volatility.
Okay, this might be a funny question. What does volatility mean? It's a question for me. Like if this, I don't know what that means. Like that it's
The ups and
versatile,
downs of the market.
Yeah.
but wants predictable payments. So she has control of it. So it would be an index annuity.
No, it's going to be a fixed annuity.
Fixed annuity. Fixed.
But fixed doesn't have a market.
That's predictable.
True, you're right. But see, do annuities all are in the market?
But it's because she doesn't want to deal with market volatility is I think what it means.
Oh,
Like she's concerned about the market volatility and doesn't want to deal with it, but she still wants the predictable payments. So fixed is that.
Right. No, fixed is that. You're right. No, you're right. I'm reading the question completely wrong. You guys are right.
So, but she's retiring in 5 years.
I still see the deferred.
Mm-hmm.
So what are we thinking? Are we thinking fixed or deferred?
I say deferred because her payout is going to be pushed back.
Yeah, 5 years still.
Yeah, but doesn't deferred only refer to when payouts start? I mean, it doesn't really have anything to do with volatility.
It doesn't. It doesn't. But exactly like you were saying, this question is just saying she doesn't want to deal with it. She doesn't want to deal with it. So you can have a deferred fixed annuity. You can, but for the purpose of this test, you want to think about only one. Okay. There's only going to be one answer. Okay. In real life, you can have a deferred fixed annuity. You can. Okay. But for this specific test, unless it says she doesn't want anything. Yeah, this one's interesting. So I'm going to tell you guys it's deferred.
Because
and I think
5 years.
Yeah, it's talking about the 5 years. So yes, it talks about market oh my gosh, here we go again. Here we go again with the word. But right, yes, it is talking about that. But at the end of the day, what they really want you to focus on here is she's retiring in 5 years. I know that's really frustrating. Oh, okay, here we go. Look, there I'm wrong. I'm not perfect. But okay, so you're right. You're right. I don't have anything else to say about this one. Yeah, this one.
Okay, so let's hold on. All right, so She's concerned about the market. She's concerned about that she wants to make predictable payments. What financial, okay, but she's retiring in 5 years. So let's say that this was like a real life scenario. She can't win both, if that makes sense. If that's, I guess, what the question is saying. You know what I mean? So if you had to pick one of the things that she truly that's truly going to happen is that she's going to retire in 5 years, then it would be fixed. Is the way that I see it. I don't know if that makes sense.
I'm gonna ask.
The way that I'm sorry, the way that I see it is that she doesn't want the, it's not saying that she wants the payment in 5 years. It says that she's retiring in 5 years.
All right.
And she needs a source of income. But here's not saying that she wants that payment to start in 5 years. That's how I read it.
But it is saying that she's retiring in 5 years and wants a steady source of income in retirement, not now.
That's why the payment is going to start in 5. Well, you're right. Never mind.
Yeah. Okay. I'm gonna ask Justin about this one. Again, there are some questions in here that aren't correct, and that's why I've been going through them. So I'm glad we caught this one because I'm gonna ask him about this one. I think they might have combined a question here or it didn't come out right because I think either one could be correct in this. She's retiring in 5 years, you're thinking deferred. She's concerned about the market and wants predictable payments, that would be fixed. Okay. So I think it could be either here. I'm going to talk to him about this one and see what he's feeling. But are we good with the general idea of what fixed and deferred mean?
Yes.
Yes.
Cool.
Yes.
Cool. Cool. Okay. So John, a self-employed consultant, wants to invest in a retirement plan that allows tax-deferred growth and provides a guaranteed payout in the future. Which option is most appropriate?
Wow.
So
Roth.
You said Roth?
Yeah.
Okay. So
Roth.
let's see. So he wants to invest in a retirement plan, okay, that allows tax deferred. So taxes are going to be on the back end or the front end? What are we thinking?
Back end.
Back end.
So
Okay.
so the universal and the variable life are not retirement plans. Those are insurances.
Right.
So between fixed annuity is that fixed payments, but Roth, I'm just saying, like, if I didn't have my notes in front of me, I would go with Roth, if that makes sense, because I would do a process of elimination to the rest.
Right. But
So-
why would we eliminate Roth? Why do people tell you to invest in a Roth IRA? What's the benefit? It's something about taxes.
Tax exempt, right?
Yeah, in the future.
So it's not tax exempt.
Oh, it's tax deferred.
You don't pay taxes in the retirement.
Tax-free withdrawals.
Yeah.
That's exactly right, because you're putting tax dollars into it. So you don't have to pay taxes on the back end. Okay. So she wants tax deferred growth. So she wants to pay taxes later, not now. The Roth IRA, you pay taxes now and not later.
So it's the fixed.
Are we on the same page here? Cool. An annuity payout option that provides income for an annuitant's lifetime, but ceases upon their death.
Life only annuity.
Yeah.
Good. Are we agreeing on this one?
Yep. Keep it simple.
Keep it simple. Love it. A type of life insurance that combines permanent coverage with investment options in market-based sub-accounts. Remember sub-accounts?
Variable insurance.
Good. Variable. And why isn't it indexed?
Because it's guaranteed and you can't lose, and it's a market index.
Which one? Are we talking about index or fair?
Index.
And
Index.
index
Good.
is an option to
Yeah, index isn't an option in the question.
Index, it's not an option. I was just kind of asking you
She was
guys.
just asking
Yeah,
y'all.
yeah.
Yeah, in case it was there, but
Yeah.
you see sub accounts, think variable.
Okay.
Okay, cool. All right. A feature of annuities that allows earnings to grow without immediate taxation until withdrawal.
Tax deferred.
Yeah.
Growth.
Good. Good. It's a feature of annuities. So you don't have to pay taxes now. You can pay taxes later. That's tax deferral. What type of contract is an insurance policy, meaning that only one party, the insurer, is legally bound to perform?
Unilateral contract?
Good. Yeah. So a lot of insurance policies are unilateral. Most of them are, meaning that the insurer is the one that has to perform. You're not legally bound to perform anything. So, because if you don't pay your premiums, then it just goes away. You don't have it anymore, right? They legally have to pay you your benefit. Cool. Take that as a yes.
Yeah.
Which of the following best describes the principle of utmost good faith in insurance contract?
Both parties must be completely honest when entering into the contract.
Good. Good. Cool. Are we were good on that one?
Yes.
Tom applies for a life insurance policy and submits the initial premium with his application. The insurer issues the policy that is applied for. What has occurred?
Offer and acceptance.
Cool. Offer and acceptance. We good on this one? A legal requirement stating that an individual must have a financial or emotional interest in the life of the insured at the time of the policy issuance.
Insurable interest.
Good. Yeah, we talked about that one earlier. You have to have insurable interest to what?
To get insurance.
Yeah.
Apply for the policy.
To take out a policy on someone, right? Cool. Which of the following life insurance provisions ensures that a policy cannot be canceled due to an error in the insured's age after 2 years? Careful with this one.
Misstatement of age provision.
Incontestability clause.
There it is. Okay, so let's talk about it. Why is it not misstatement of age provision?
It was just an error. So
What was that? What was that?
Isn't the mid-stage of the age provision, isn't that something that is done like after, I mean, before or after, where it's like they can change, you can change it and fix it for the premiums?
Yeah. So you can, for misstatement of age, they won't cancel the policy. They'll just change the premiums, right? They'll just change the cost of what your age actually is and what it should actually cost. The incontestability clause is specifically talking about after 2 years, whatever was said on the policy can't be changed now. So yes, it is talking about age, but this one, whenever it says, the policy can't be canceled after 2 years, incontestability clause. Are we good here?
yeah.
Cool. I feel low spirits in the room since we started this. I don't know if this is helping or hurting, guys.
Is it helping you guys, or was my suggestion helping or hurting? or just encouraging?
It's
It's
helping me.
helping me. I find it very helpful.
It's helping.
Good, good. Okay.
Yes.
Yes. Like it got really quiet. Okay. What is the purpose of a reinstatement provision in a life insurance policy?
It allows the
Alliance.
policyholder to reactivate a lapsed policy under specific conditions.
Good. Did we
A.
have any? Yeah, A. Good. Did we have any questions about
Yeah,
that
the first one.
one? Okay.
No, but can I give I don't know if I don't know. It's just like test tips, I guess. But typically like, well, when you have come to a question you might not know for sure, normally the longest answer is the answer. I just wanted to say that. Point that out.
Careful.
good.
Jules, is that true? Like on a state test?
Yeah.
I don't remember. Like she's like, yeah, I know this.
No, I want
Because
to know too. I want to make sure.
no, because I'm not gonna lie, on the state exam, I'm like, yo, all the other answers are like very short, and then there's a huge long one. And I'm like, why do I feel like that one's the right one, but not because it's long, but because it's right? And also someone told me that once, but I was like, nah, that's not true. Why would they do that? Why would they put the longest one and the rest of them short? You know what I mean? That's not the first time I've heard that.
It totally could be correct. I don't know how to answer that because I'm not exactly sure. What I would say, just statistically, if you aren't sure, like if you look at a question, you're like, I have no idea. It could be any one of these. Pick a number or a letter like A, B, C, D. And every time you get to a question that you have no idea, it could be any of them. Stick with one answer, like stick with C.
C. Normally it would be C. So the reason why I said this is because I didn't get a chance. You kind of moved a little bit too fast, and I didn't really get this chance to like, choose my answer. But my intuition gave me that because I heard a little bit of it, and then I was like, okay. And then I was like, oh, it's the longest answer too. So I had someone a theory. I had the theory tested, just not for like a state test, but just for like a job. Which my significant other, he I said, well, choose that one, and he's like, no, he chose something else, and he didn't. So he had to go back and do it because it's like a test that he has to take like periodically throughout the his his job. And so he chose the longest one the next time because it was the answer, but when he didn't want to trust me. So I'm just putting that out there.
Hey, look, anything helps. I don't know. Like I can't confirm or deny that because I really don't know. But I mean, maybe.
Yeah, only if it makes sense. Like not like if you don't know the answer, if you just don't know the answer, I'm like not sure or something. Yeah, like now it's a eliminate. What is it called? Eliminated
Process of elimination.
Exactly. Yes. Process elimination. Yes.
Yeah.
So just do that, and then like it's the like you stated, Jules. Is it Julie or Jules?
Jules. Yeah.
Okay, I like Jules. So yeah, or it would be always C. And I've learned that since elementary. So it's like it'll always be C the answer. I don't know.
Pick C. No matter what, pick C. Look here, Biggie came over. He can come. Biggie, you wanna come up here? Come here and say hi to everyone. Here, I'll get him up here. Come here.
Oh God, she's so cute.
Baby, he's there he goes. Okay.
Oh my
That's
God, he's huge.
He is so cute.
He's a polar bear.
I know he is a big old polar bear. He will do everything on his own terms, but if you try to make him do it on your terms, he's like, I hate it. I hate it. I don't know why I'm here. Why are you making me do this? So he's
It's free spirit.
I know, right? Yeah, like if I want him to snuggle with me at night, he's like, ew, gross. But if he wants to come up, he's like, butt in my face, legs in my face. Like, I'm like, okay, I see you. Okay, let's finish up, question 25, and then do you guys want to do an hour for lunch or 30 minutes or?
An hour. I have to walk my dog.
Okay, yeah. I was hoping you guys were saying an hour, but I wanted to keep this, whatever you guys want to do. This is your time. Okay. So a life insurance policyholder wants a provision that allows them to take out a loan against their policy's cash
Policy
value.
loan provision.
Yep.
Good. Okay. Are we good on that one?
Yes.
Pretty straightforward.
Could you guys break down policy loan provision though? Like I know it's in the question, but like an easy way to remember that.
Take out a loan.
Just take out a loan.
Yeah, take out a
So
loan.
yeah. So you can pretty much like borrow
And
against.
use only loan in one answer.
Yeah, you can pretty much like borrow against the policy. Okay. And you just take out a loan against it in a way.
Okay. Gotcha.
Yeah. And then, so it's just a policy loan provision. So it's just like a little added on thing, a little added on benefit. So it's like, okay, well, I'll take out this loan. If I don't pay it back, then you get the benefit of my, death benefit or whatever it is.
Yeah.
To pay it off. Good. Cool. All right. Which of the following is the best reason to choose a policy with a guaranteed insurability rider?
It allows the policyholder to purchase additional coverage without proof of insurability.
Yes.
Cool. Cool. Okay. Are we good on this one or? So guaranteed insurability. So it's a rider. Rider is something added on to the policy, right? And it's just saying that I can add more to my policy. And I don't have to provide proof of insurability. Cool. All right. Lisa, age 30, purchases a whole life insurance policy. Over time, she builds significant cash value in the policy. What option allows her to stop paying premiums while keeping the policy active?
Convert to a term.
Yeah.
Okay.
Use a non-forfeiture option.
Okay. What are we thinking? Which one?
Non-forfeiture option because, well, yes. Yeah.
Yeah.
Good. Okay, so let's talk about it. So, she purchased a whole life policy. She built big cash value, and then she wants to stop paying her premiums while keeping the policy active. This question's a little frustrating because it's not specific. Do you guys know there's different types of non-forfeiture options? I'm walking over here to let the dog out, but I'm still talking. So there's different types of non-forfeiture options. Which one is it talking about?
The
didn't hear you.
surrender.
Reduced, paid up.
There we go. Reduced paid up. Okay, so she wants to, so reduced paid up is pretty much saying you can stop paying your premiums and we'll give you a little coverage, a reduced coverage for a little bit more time. But you can stop paying premiums. So it's a non-forfeiture option. Do we feel okay with this? It doesn't say the specific one that she's using, but in general, she would use a non-forfeiture option. Good on this one? Feel free to ask questions. Everyone's getting hungry, I can tell. Okay. John purchased a term life insurance policy with a renewability option. What does this mean for him?
A.
Yeah.
Cool. We agree on this one?
Yes.
Perfect.
So just a clarification. If you're trying to always renew a policy, you don't need proof of insurability, correct?
Correct.
But if a policy lapses, like if you don't pay for it, you have to show proof, correct?
So if it depends. You could have a someone help me out. What am I thinking here? You can have a renewability option, okay, where you can, if the policy lapses and you pay all the lapsed premiums and you pay all that, you can renew it without having to go through the whole process. But if you don't have that and it just lapses, you know, then yeah, you have to go through
Okay.
insurability and all of that. Okay, so are we cool here?
Yes.
Okay, a policy provision that allows the policyholder to use the policy's cash value to continue coverage if premiums are no longer paid.
Grace period?
Maybe. What else are we thinking?
Non-forfeiture option.
Okay. Oh wait, which one are we going for? Grace period or non-forfeiture option? We need a tiebreaker.
Non-forfeiture.
Okay, so let's go for non-forfeiture. Okay, so why? Why is it not grace period?
Just think about that other question we had.
Yeah, exactly. So grace period is pretty much that they'll give you a few extra days to pay premiums and continue the coverage. This is specifically talking about allows the policyholder to use the cash value to continue coverage if premiums are no longer paid. So this is like, okay, I don't want to pay premiums anymore, but I still want to continue coverage. We're talking about a non-forfeiture option here, specifically the reduced paid up option.
And the waiver of premium is in relation to the entire policy?
No, it's if the policyholder gets disabled.
Yes. So if you are sick or disabled, the person paying, you know, the policyholder, then they can apply for a waiver of premium, or they can have a waiver of premium rider on their policy that allows them to continue the coverage, full coverage, without paying the premium cost.
Okay, and the premiums won't be coming out of the cash value, they just waive it?
They just waive it.
Okay.
Yep. Now let's talk about a payer rider, because that can get a little confusing. A payer rider is if the policy owner gets disabled and they can't pay for the premiums, they will get them waived. Okay, so then what's the difference between waiver of premium and a payer rider? A payer rider is pretty much only for a juvenile policy. So if I'm taking a policy out on my kids, okay, then I would have a payer rider. That's specifically for them, for a juvenile policy. Waiver of premium is for all the other policies. Good here?
Yeah.
Yep.
Cool. Let's do question 25 and then let's take our break. So a provision that requires insurers to pay a death benefit promptly after receiving proof of death.
Payment of claims provision.
Good. It's in the name. Cool. Payment of claims provision. Okay, cool. So we just finished 25 questions on Pearson. When we get back, we'll do PSI and Prometric. How are you guys feeling? Good with what we're doing in the course? Again, I want this to be about you guys. Not what I'm doing.
Yes. I do.
Very helpful.
100?
What was that?
Are we doing all the questions?
I was gonna do 25 from each, and then we can go back through and do more if you guys would like to.
That would be great.
Okay.
I would
I
not mind doing that.
appreciate the questions
Dude, oh
because
my God,
we're
you
also getting
The answers.
we're getting
Right.
vocabularies.
Right.
Mhm.
We're getting a little bit of both.
Definitions, right?
Right. Yeah. I'll do another poll at the end and just kind of see where everyone stands after we do the other 25 questions from PSI and 25 from Prometric, and then we'll go from there. But cool. I'm happy everyone's happy. Enjoy your lunch. Take a nice break. Go sit out in the sun. Get some vitamin D. Smile. We're getting through it slowly but surely.
So meet back here in an hour.
In an hour, yeah. So whether that's whatever time you're in, whatever time zone you're on, in an hour. So
An hour.
for me, it'll be 2:10. For everyone else, 3:10, 4:10, 5:10, whatever. Oh wait, I'm going the opposite direction.
11:10.
2:10.
Thank you.
Yeah,
You're
11:10. Wait, I'm going the opposite direction.
Enjoy.
You guys get it. Okay, see you
See you
guys.
guys in an hour. Bye.
Okay. Let me see how many people are in here. 13. I allowed to talk. Let's see how many people are in here.
Hello.
Hi. Okay, so I'm gonna go ahead and share my screen. Let's do a few more questions. Gotta log back in. How was everyone's lunch?
Great.
Good? What'd you guys have?
A walk.
A walk.
A pesto chicken sandwich.
Oh, yum. Okay.
Taco Bell.
Taco Bell, fair. No, that's so fair. I used to, so I was raised Catholic, and we like, you go through like confirmation and then or first communion and then confirmation, all this stuff. So when you go through confirmation, you go through these classes that you have to do, like I think it's twice a week or once a week, I can't remember. And every time after, I would go get Taco Bell. I mean, it was incredible. I loved it. I was like, fine, I'll go if if we get Taco Bell. No, I'm kidding. But anyway, let me go ahead and share my screen. So now we're going to do the PSI Life. We're going to do 25 questions from there. And then we're going to do 25 questions from the Prometric. So, oh wait, my screen didn't share. Let's see. Share. How about that? Can you guys see that?
Yes.
Cool. All right, I love it. Okay, so just as always, if you guys, know the answer, don't know the answer, whatever you want, scream it, say it, talk about it. Okay, this is about you guys, not about me. So I want you guys to be the main ones talking and discussing, right? Okay, so a type of insurance company that is owned by its policyholders and may pay dividends to them.
Neutral.
Okay. Everyone agree with that one?
Yep.
Yep. Anyone have any questions about that? I'm going to take that as a no, and we're going to move on. All right. The funds set aside by an insurance company to pay future claims are known as?
Reserves.
We talked about that earlier. Sweet. All right. Everyone was cool with that? Okay. A client wants a life insurance policy that provides both long life coverage and the ability to accumulate cash value. Which policy?
Whole life.
Life. What was that? Whole life?
Whole life.
Okay. We agree with this one? Cool. Why wouldn't it be term?
Because there's a limit to it. It's not going to be the whole life.
Okay. So that's true.
And
What
cash
else?
value. Cash value.
Cash value. Cool. Cash value. So why would someone get a decreasing term insurance? What's the purpose of that?
Most of the time they use decreasing, well, I associate it with, and it tells it too with like getting a loan because it decreases as you go along, your death benefit decreases.
Like a mortgage.
Yeah, mortgage, sorry, that's what I meant, yeah.
That's perfect. We know what you're talking about. So that's exactly right. So you have a mortgage, you have to pay it off. Let's say you have 20 years left on it, and you buy a term life insurance or a term insurance, and over time it's a decreasing term, so the premiums usually stay the same, but the death benefit starts to decrease over time, because obviously you don't have as much money that you still have to pay off over time. Okay. What about accidental death insurance? That's pretty straightforward. Anyone want to elaborate on it? No. Accidental death. There's nothing else I can say about it. It's an accidental death. That's what it is. Okay, cool. We're cool here?
Yeah.
Sweet. Okay, which of the following individuals would benefit the most from purchasing an annuity?
The 65-year-old retiree.
Okay. Did someone say E?
I said C.
Oh, C. I was like, E. I was like, hold on. What
I
are you
hope
guys saying?
not. I hope
Okay,
not.
good. Good. How do we feel about this? Good?
Yep.
Sweet. An individual wants life insurance that allows them to adjust both the premium payments and the death benefit while also building cash value. What policy would be the best choice?
Universal.
Okay, what do we feel? Are we feeling universal?
Yes.
Yep.
Lacey has.
Good on this one?
Yes.
Cool. David is a 45-year-old father with a mortgage and young children. He wants an affordable life insurance policy that will provide financial support. Like I'm just adding words, financial protection for his family until his children become financially independent. Which policy is most appropriate for him?
Be term.
How do we feel? Agreeance? No, someone?
No.
No, what are you thinking?
I honestly can't choose between universal or variable.
I'd say
But I'm
term
not
because
too
he wants
sure if it is.
he wants those portable, right? So it'd be term.
Yeah, but term doesn't protect his family after he dies.
Wouldn't it be universal because he can control how much his payments are?
Okay, that's a good
Okay.
thought.
Yeah.
What else are we thinking? Is that what we're
I put universal.
with universal? Are we sure?
I say term because it says until the
Okay,
family becomes financial.
good.
Term is because it revolves around his children until his children become of a certain age. And then
Yes.
he
I'll
doesn't
go.
need it, so it's to a certain time, to a certain term.
Right.
Okay, so I'm hearing more term now. Are we going term?
Yes, because isn't universal and wouldn't they then be considered whole life as well?
Universal's whole life.
Right. So I'll go with term 2.
Okay, I think I got mostly term. Is that
Term.
term? All right. Yay. Okay, so let's talk about it. We had a lot of conversations here. Okay, I heard a lot of good things. Okay, so affordable life insurance, that's the first, well, not the first big thing I see, but that's what sticks out to me. Okay, what is more expensive, whole life or term life?
Whole.
Oh,
Whole life. Why?
Because it's whole.
Because it's whole, right? You're going to be paying for a lot longer. Okay, and for the most part, the insurance company is going to have to pay the benefit in a whole life. As for a term life, a lot of people outlive their term. Does that make sense? So whole life is usually a lot more expensive than term life. So an affordable option, let's take out whole life because we need something shorter. Okay, we need an affordable option. He's 45 years old, he has a mortgage, and he has young children. Okay, the children aren't going to be young forever. The mortgage isn't going to last forever. Okay, he wants to provide financial protection for his family until his children become financially independent. So now we're feeling what? We're feeling more term, right? All of these things come to an end, right? He's not going to have a mortgage forever. He's not going to have young children forever. And he wants affordable life insurance. What are we thinking? Goes to term. Are we good with this one? Do we
Is
still?
is variable life insurance whole as well?
Mhm.
Okay.
You can get a variable term, but let me not say that, because as for the test, and again, in real life, it's going to be a little bit different than on the test. Okay. And I know I keep saying that. So whenever I say this, let's just focus on the test. So in the test, variable is usually going to be whole life. Okay. And they're not going to ask you that. They're not going to ask you that at all. If they're asking you about variable whole life, it's going to be like, oh, they want like, they want to invest and, stuff like that. You'll hear more like the financial side if you're talking about variable life insurance. If you're talking about universal, they're like, they want like, premiums that they can change. That's like the biggest thing that you'll hear for universal. Good here?
Good.
Cool. 55-year-old business owner wants a life insurance policy that builds cash value and allows them to invest in different market-based sub-accounts. They are comfortable with market risks and want higher potential returns. Which policy should they choose?
Variable.
I heard whole and I heard
Variable.
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 Variable. Okay. So we're going with variable?
Oh yeah, variable.
Okay, good. Variable. So we're on the same. So why are we thinking variable?
The different market-based sub-accounts.
Sub-accounts, right? You hear sub-accounts, variable. Sub-accounts, that's all you think. If it says index, don't think about it. You see sub-accounts, variable. Sub-accounts, variable. Cool?
Yes.
All right. Susan is 30 years old and concerned about inflation reducing the purchasing power of her life insurance benefits over time. What policy rider should she consider?
Isn't that cost of living adjustment?
Adjustment rider.
What do we think?
I'd agree because it's longer.
Yeah.
Cost of living, because the cost of living is what impacts how the inflation of the economy.
And
Like
it gives
cost of living, inflation, or economy.
and it gives abbreviations the longer.
She's like, it's a long one. It's a long one.
We're gonna test that theory today.
Right. Should we test it? See which one the long. Look, I can't condone any of this. I don't know. But anyway, you guys are right. Cost of living. It says it right in the definition. She's concerned about inflation reducing the purchasing power of her life insurance benefits. Cost of living adjustment. It adjusts over time, right? Cool.
Yes.
Cool. What is the guaranteed insurability rider? Or what is guaranteed, not rider, what's the guaranteed insurability?
It's guaranteed that you're insured.
You can renew your policy without health questions.
Good. Yeah, you can renew, you can add things on, renew. A lot of times you'll hear this as GI. So if you're in a meeting and they're like, oh yeah, this one's GI, guaranteed insurability. Okay. It's yeah. So I remember the first time I was sitting in a meeting and someone was said GI, I was like, GI. I was like, why are we talking about like gastrointestinal stuff? Like, like why are we like where I'm lost. I'm confused. Where are we? So yeah, GI. Just so you guys know. Okay. So all of the following are characteristics of mutual insurance companies except
D.
They pay dividends to stockholders.
C.
Yeah.
So we got D and C. Which one are we thinking?
C.
C.
D. Yay. Okay. So let's talk about it. So they pay dividends to stockholders. What would that be? What's a character? What would a characteristic of what would be they pay dividends to stockholders? What kind of insurance company?
Stock
Says it in-
insurance company.
Stock
Yeah,
insurance
there you go.
company.
There it is. You got my back. You guys got my back. Okay, cool. Stock insurance company, they're gonna pay dividends to stockholders, right? A mutual insurance company can be converted into a stock company. A little fun fact. Okay, we're cool here? Cool. I don't know about you guys, but I feel good right now. I'm like, I just ate. I'm like, I'm feeling spicy, like upbeat. I'm gonna have a sugar crash at some point. I'll tell you what. I had so much peanut butter.
I made a mess.
What was that? What was that? Or I think. Okay, the following are strategies used by insurance companies to manage risk, except
Three.
Offering guaranteed coverage
Yeah.
to all applicants without underwriting.
Correct. Mm-hmm.
feel good about this one.
Can we break
Yep.
that one down?
Yeah,
It's
let's break it
longer.
down. Okay, what the heck? So we're managing risk. Okay, so the insurance company, yes, they want to bring on people because that's how the insurance company makes money, but they can't bring on a lot of people. And I'm thinking of a word or a definition here. We haven't gone over it yet. Does anyone? It starts with an A. AD.
Annuities? No? Oh, A and D?
Adverse selection?
There it is. Good. Okay, adverse selection. Joy, what is that?
It's individuals with a higher risk.
Right. Yeah. So they don't want to bring on a bunch of people because people who are at higher risk are usually the ones who are like, I need insurance, right? They're going to try to get insurance before anyone else because they're like, oh shit, oh crap. Oh, that's not even better. Oh, I'm doing something bad. I'm doing something crazy, whatever. They're like, we need insurance. Okay. But an insurance company can't only bring on people like that. Okay. Because otherwise they would just be paying claims, and they'd go out of business. They couldn't. So they need people kind of all different realms, right? We had 3 different categories that we classified people in risk classification. Do you guys remember? What are they?
Preferred, standard, and substandard.
Good. Preferred, standard, substandard. We need a little bit of everything, right? A little bit of everything. Ideally, people would love to have just like preferred, right? If an insurance company can like have only preferred risk, that's like, oh heck yeah. They don't have to pay a single claim. They just make money, right? But naturally, you're gonna have a little bit of everything. You definitely do not want to have substandard, a whole bunch of substandard people, because then again, you're gonna be paying a bunch of claims. Okay. So we're managing that risk. Okay. So what are they gonna do? What is reinsurance?
Insurance company asking another company to back them up for
Good.
risk.
Right. It's the bear behind me, right? It's like, okay, I'll insure you, but I gotta have this bear behind me that's gonna help me out if something goes south. Okay, cool. What is risk pooling? We kind of just talked about it a little bit.
Basically like a group with the same type of risk. Does that make sense?
Okay. Anyone?
Why do I got? When I have people coming over, do I have the why again?
Okay. Anyone else want to add to that?
Who does that? Get in here.
So, okay. I think there's a lot of background noise. I'm not sure what's going on, but,
Sorry.
no, you're good. You're good. Okay. So, risk pooling, it's exactly what you said. It's pretty much just like determining where people are, bringing different groups of people together kind of thing. It's exactly what the name suggests, right? Risk pooling, bringing different groups of people. Okay. Pooling the risk. Okay. So let's do using the law of large numbers. What is the law of large numbers?
Isn't that where they take like people that are high risk and low risk and kind of put them together, but in a larger group so that it kind of balances itself out?
Okay. Yeah. So the law itself is pretty much saying if okay, let's say I have a bowl of marbles. I have a bowl of marbles, okay? And I go in there and I keep grabbing. The more I grab, the more assortment I'm gonna have, and the more likely I have a chance I'll grab someone who, maybe why do I keep wanting to say Orbeez? A marble that's like blue or pink, right? So the law of large numbers is essentially saying the more you have, the more diverse you'll be. Okay? The more you have, the more of this type of person you'll have. Does that make sense?
Yeah.
So a lot of the times they'll also say the law of large numbers in insurance. The more people you talk to, the more likely you are to sell a policy. Cool? Okay. So we got that. So law of large numbers. So do you guys think, so all of these things, so let's go back to the question. So the companies, all of these are to manage risk except for, so reinsurance can be managing risk, right? Because I have this guy behind me that's going to help me out if I can't handle it. So that's managing risk. Risk pooling, figuring out who is what, putting people in different groups, that's managing risk, right? And using the law of large numbers. If we get a bunch of people, there's no way we can only have substandard risk, right? We'll have a little bit of everything. Okay. So the only one that isn't is offering guaranteed coverage to all applicants without underwriting. What would that would create a mess, right? It's like, we don't even care your medical history. We don't care about anything that's going on. We'll write a policy for you. You could be a smoker, you could be whatever. We don't care, right? That would not be managing risk at all. That'd be creating risk.
Yeah.
Cool?
Yeah.
All right, sweet. A non-forfeiture option in life insurance that allows the policyholder to use the accumulated cash value to purchase a reduced death benefit policy with no further premium payments.
B.
B? We talked about this one a good amount before. Do we all feel comfortable about this?
Yes.
Yeah? Okay, cool. So we'll go, let me see if there's anything on here that we should talk about. Cash surrender option. That one's kind of straightforward. Does anyone want to just do a little quick summary of what the cash surrender option is?
Yeah, you just take the cash.
There you go. Take the cash and run. Heck yeah. You're like, I don't want the policy anymore. Give me the cash, right?
A lot of these are similar to the Pearson View ones.
What was that?
A lot of these are similar to the Pearson View ones.
They are. The wording is a little bit different. I don't know if you guys noticed. It's a slight change, but the wording's a little bit different, but they're very similar. Yeah. All of the tests. That's why these can be generalized. That's why these pre-licensing courses can be generalized. Obviously, they'll write specific questions for specific states, but a lot of the questions can be generalized. Yeah. So, okay, cool. So, let's see what else. Extended term insurance. We haven't really talked about that. What is that?
You can buy more insurance to extend the term of the
Good.
Yeah.
Yeah, it's extended term. You extended your term. Okay.
There's always a key word with that. It's limited, like a limited thing, limited, something limited. So when they be like, oh, this for non-forfeiture option and it says something limited, 9 times out of 10 is extended term insurance.
It's like car leasing.
Okay.
Is that the same as renewing your term insurance?
Renewing is different. Renewing is you renew the whole thing. So like, let's say I had a 20-year insurance, 20-year pay insurance, or not 20. Let's say I had a 20-year term insurance. Okay. If I renew it, I'm like renewing the whole thing. Extended term, I can extend it for a little bit of time or a lot of time.
Okay.
Dividend accumulation.
You pay with your dividends, right?
You're letting the accumulate. So you can decide what to do after that. If you want them to reinvest it, if you want them to pay some of your premiums, it's up to you. But yeah, your dividends, the little thank yous that they're going to give you, you just let them sit there and they can gain interest, whatever.
Can you use that towards your premium payment?
You can. Some people, some insurance companies, yes, you can.
Don't they also allow you to put out the like little policies as well? with
The
it?
what is it?
Don't they also allow you to make like little policies with that too?
If you can, yeah. You can buy, you can add policies. Yeah. With your dividends, they're pretty, again, it's different for different companies, but they're pretty lenient with like, okay, this is yours. This is your money. You know, if you want to buy more, if you don't want to buy more, if you want to let it sit here, let it gain interest. Yeah. Yeah, you guys are correct. Cool. Good about this?
Yes.
Sweet. A provision that prevents an insurer from denying a life insurance claim due to misstatements on the application after the policy has been enforced for 2 years. Talked about this one earlier.
Incontestability.
Yeah. Incontestability clause.
Good. Okay, let's talk about these. Entire contract. What is the entire contract?
Everything that's included in your, like what your policy is, your rates, your premiums, basically like front to back, like the whole shebang.
Yeah.
Summary.
The whole shebang. Is your application included?
Yes.
Yes.
Good. Yeah, it is. Heck yeah. Contestability clause. I'm gonna have to look this one up. I totally forgot it. But if anyone remembers it,
So
go
it's
ahead.
it's basically, you can contest to it. So that means like you can't. So this is after. Please correct me. It's after 2 years. So basically, after the 2 years pass, no. It's before. I'm wrong.
First 2 years.
It's before 2 years. So that's right. Okay. So it's before the 2 years. You can basically contest anything. You poke at. I kind of contest is like poke at it. You can poke at the policy or the policy holder for, I don't know, whatever, deny whatever.
You're right. So, in the first 2 years, they can investigate claims, what you wrote on your application, and make sure it's all correct. After 2 years, they can't. Cool. So the contestability clause is the first 2 years. Incontestability clause comes into practice after 2 years. Good here? What's the free look provision?
Gives the owner permission to look at it without committing to the actual policy.
So I remember free look, free trial.
Yeah.
Like free trial.
Good. They can look at it 14 days. It's different, 10 days, 14 days, different in different states. And they can decide if they really want it or not. And they can do that without having to pay. Cool? All right. Which of the following is a necessary element of a legal enforceable insurance contract? Of a legally enforceable insurance contract?
See,
Look, here we go with the long one. How is everyone else feeling? What'd you say?
see,
See.
Good, and we all agree with this one? I think so. Woohoo! Do we have any questions?
Yeah, I'm gonna.
Good. Okay, so legally enforceable insurance contract, it has to offer an acceptance, consideration, a legal purpose, competent parties, insurable interest. Can anyone think of anything else? All of those things. All of those things, right? Cool. All right. An individual applying for life insurance must have an insurable interest in the insured. which of the following relationships would best demonstrate an insurable interest?
Business purchasing, yeah, B.
Good. We agree on this one?
Yeah.
Yep.
Cool. Any questions on that one? No? Okay. What was key person? What I think I said key person. What was key person? Key person.
What's a key person?
Yeah, key person is so like if me and my business partner were like if my business partner Steve was to die and he was an important asset to our company, I think I get it confused with buy and sell agreement.
Yeah.
So, it basically what it would cost to replace him, if that makes sense. Like I don't know if that makes sense. Like I either I have it backwards, Miss Jules, or maybe wrong. I don't know if that makes sense.
It's like
Go ahead. No,
it's
go
like
ahead.
a special.
It is where the key person is it could be an executor or whatever of a business, and that the company, they will sustain a big loss if that person, dies, and so they're insuring somebody on there is a key person as well.
Good. Okay. So, you guys are all on the right track. So like if it's a business partner, usually that would be more in the context of the exam. If it's a business partner, that would more so be the buy sell. Okay, the buy sell agreement where it's saying if my partner dies, I have the funds to buy out their part of the company. Okay, key person in that scenario, let's say it's a top manager where if they die, it's all going to crap, right? So like I'll take out a key person, I'll take out key person insurance on them, or key person policy on them, because that's a key person where if they pass away, the company would have financial loss, there would be a lot of loss in that. Okay. But if it's a business partner, I would think more so buy sell just in terms of the exam.
So I have actually a chart that I made, and that's why like this is where I get myself confused.
Okay.
So I made a chart of key person and buy sell agreement. Key person, I'll read you down the list or like the difference. I'll read each one. Key person covers the key employees or owners. Buy and sell agreement covers business partners and owners.
Yeah.
And then key person, business gets money, and then buy sell agreement, other owners buy out the deceased owner's share.
Yes.
So basically one helps and one transfers. So think of transfers as in like basically everything transfers to the one owner by buy and sell, and key person is like it helps it from getting like a loss, like kind of like an essential manager, project manager. He dies and the projects can't continue, therefore they're going to lose money.
Good. Perfect. So just say this again, just for you guys, when you're now, I'm not going to say this always, but for the most part, pertaining to the exam, when they're talking about buy sell or when they're talking about a business partner, I would more so think of buy sell rather than key person. Okay. Because that might confuse you if you're like, well, it could be this, but also know the definitions, because they totally could say, oh, we had a key person, key person employee on, or a key person policy out on, one of the business partners and he passed away. But for the most part, I just want to say that in the context of the test, usually when they're talking about a business partner, it's going to be buy sell. And when they're talking about an employee, they're going to be talking about key person. Cool.
Yep.
Sweet. But that was a perfect description of the two. Buy sell, you're going to get money to buy out the other person's half. Key person, you're going to get money from the insurance company. Cool. Just to support whatever's going on. Okay. John applies for a life insurance policy and submits the first premium payment with his application. What happens if the insurer decides to issue the policy exactly as requested?
C.
How do we feel about this?
Yes.
Yes?
Yes.
Yay. Okay, any questions?
So I have a question. So this reminds me of a question on the exam. It was saying if, okay, basically same scenario, pays the first payment with his application. And then basically it was asking after he pays it, when does his policy start? The moment that his application starts or whenever his premiums, he pays his first premium? Or whenever he receives his application.
Whenever
So
he receives the receipt. So he sent in an application and a premium payment, but the insurance company has to go back and create a receipt and all of that. So it doesn't really have anything to do with him. It's more so once the insurance company approves everything and then gives him a receipt.
Okay, so once he gets his receipt, it starts.
Yes.
Okay, back. Okay, thank you.
Of course.
When the insurance company issues, right, the document, not when he receives it.
I'm pretty sure it's when he receives it. Let me double check just to make sure, but I'm pretty sure it's when
Yeah, because I had that question in my test and I think I got it wrong because I'm confused. For example, if the insurance companies approve everything today, but then that certificate or whatever is going to be mailed to him, and it's when he receives it or when the insurance issues
it's whenever
the certificate of insurance.
Right. So it's whenever the insured receives the receipt.
Okay.
Whether that's binding, conditional, that's when it starts.
That can be delivered by mail or
in person.
Or in person. Okay. Okay.
Yep.
Thank you.
Of course. Okay. A type of insurance contract in which only one party makes an enforceable promise.
Wow.
Unilateral? How do we feel
A.
about it?
Yeah.
Good.
A.
Okay, we talked about this one. So let's see. Conditional, we talked about that. What about adhesion? What's an adhesion contract?
That's kind of like take it or leave it. This is the way it is.
Good. That's all you guys have to remember. Take it or leave it. Adhesion.
What was bilateral again? I'm sorry.
So bilateral is both of them make a promise. Both sides make a promise.
Okay. And in conditional contract is under its conditions?
Conditional, yeah. So conditional is under these conditions, will it happen?
And that's on one party or two parties?
For conditional?
Yes, ma'am.
Usually it's one party. It could be two, but usually it's like, hey, we'll do this if let's think of a good example.
For example, me paying the premiums.
For example, you paying the premiums. So yes, that's actually a great example. Perfect. Any other questions regarding these? And let me
conditional, could that also be pending like a medical exam?
That's more of like a conditional receipt. So that's more like a conditional receipt. So yes, it could. So let me give you guys the example here. So here, so a policy in which the insurer's obligation to pay its benefit. Okay. A policy in which the insurer's obligation to pay the benefits is dependent on the occurrence of a specific event that the contract covers. Okay, so like if this happens, we'll pay. Maria purchases a life insurance policy and the insurer promises to pay the death benefit to her beneficiaries. However, the promise is conditional. The insurer will only pay if Maria passes away while the policy is active. Okay, for the policy to remain active, Maria must continue paying her premiums on time and comply with any other terms of the policy. If she fails to meet these conditions, such as missing payments, the insurer may not be obligated to pay the death benefit. Does that make more sense? Yes, no, maybe so.
Yeah.
Yeah. Do we all feel okay with that?
Yeah.
Are you sure? I feel like there's a little hesitancy in your voice.
I'm sure.
Okay, good, cool.
So
Okay.
I forgot to ask, so when it's a conditional contract, is this in all policies or specific policies?
It's so conditional is usually part of all policies. Like we will pay the benefit if this happens. Like we will pay if you keep paying your premiums. We will pay if the policy's active. So yeah, it's usually for all of them.
Okay.
Yeah. Okay, cool. Any other questions here? Okay. Which of the following life insurance policies allows the policyholder to adjust both the premium payments and the death benefit? Ooh.
B.
Universal.
B.
How do we feel? Good? Cool.
Yeah.
Okay. So remember we were trying to distinguish the two earlier. I think we were talking about universal and variable, were we? Okay. So see how here, when it's talking about variable, it's going to be talking about a lot on the investment side of things. If it's talking about universal and it wants you to answer universal, it's going to be talking about the premium, the adjustable premium payments, the adjustable death benefits. It's not really going to talk about the investment side. It could, but usually it's just going to be talking about the universal. I mean, the premiums and death benefit adjustable sides of that. Cool?
Yes, ma'am.
What is a key characteristic of decreasing term life insurance?
The death benefit decreases over time.
Good. Good. Okay, so this is something to remember. Decreasing term insurance, that doesn't mean the premiums are decreasing. When it's talking about decreasing or increasing, it's talking about the death benefit. Okay, cool.
So then I have a question. So then what is the point of, so when people, there's a, and I'm sure everybody has seen it, the mortgage question. Stephen has a mortgage and he wants to have a life policy like that. Why would that benefit him? I thought it was because of the premium, because when you start paying off your house, so your premium gets a little bit smaller over time.
Okay, so let's think about it. So he's pulling out a policy to cover a mortgage. So if he dies, someone doesn't have to, one of his relatives or someone doesn't have to take that responsibility, right? So he's like, I'm going to take out a policy, but as you pay off your mortgage, is there more or less over time?
Less.
Less, right? So
Right.
going to be paying into this policy where the benefit is going to be going down, down, down over time, because over time he's not going to need that much benefit because the mortgage isn't going to cost, you know, $500,000 anymore. After 10 years, maybe it'll be $300,000 or $200,000.
Okay.
Does that make sense?
Yes.
Okay, cool. Why would someone want an increasing term insurance? This one's a little bit trickier.
Maybe because of their health.
Good. Yeah. Maybe because of their health. They're getting older. Maybe because, you know, they're worried about financial losses in the future. Things like that. Cool? All right. Which type of life insurance policy would be best suited for someone who wants lifelong coverage and cash value accumulation?
B.
Hold on.
Feel good about this one?
Yes.
Yeah. What is credit life? Because that question came up on my test as well. It was like credit life, da 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 da. What is a credit life insurance?
What do you guys think? Anyone know this one?
It's where life insurance covers someone that has an extensive debt.
So
Yeah.
like, if like over, like I guess huge credit card payments or like student loans.
Yes.
So what is this similar to?
Increasing term.
Good. Decreasing term insurance. Yeah. Credit life insurance, I'm going to take out a loan, or I have a loan that's taken out, and but now I'm going to get credit life insurance. So if I can't pay that off and I die before, then you know, it's going to be covered. I don't have to worry about my spouse or whoever else having to deal with it. Okay. A decreasing term, very similar. Okay. I take out a loan, I have a mortgage, and over time, I am going to, you know, pay it off slowly. So it's going to be a decreasing term. Does that make sense?
Yes, ma'am.
Okay. A client wants a life insurance policy that allows investment in market-based sub-accounts, wink, while still providing a death benefit. Which policy would be the most appropriate?
Variable.
3.
Yay! Everyone agree with this one?
Yeah.
Cool. James, a 35-year-old father of 2 who wants an affordable life insurance policy that provides financial protection for his family if he passes away unexpectedly. He does not need a cash value accumulation. Which policy would be most suitable for him?
Term.
Term.
Good. We talked about this one, or something similar to this, right?
Yeah.
Affordable. He wants affordable protection for his family. Doesn't need cash value accumulation. His family's not going to be young forever, right? So term is perfect for him.
Yep.
Cool. Samantha wants
And so,
Go
sorry.
ahead. No,
And
go ahead.
so he will just keep on renewing that term insurance until his kids get bigger?
He can. It depends. Like, let's say he buys a 5-year term and then he's like, oh, well, I thought my kid was going to be out at 18 and now they're staying home for another 4 years. He could renew that and then it would be another 5 years.
Yep.
Cool.
All good.
All right. Samantha wants a life insurance policy that allows her to stop paying premiums after 20 years while still keeping the policy in force. Which policy should she choose?
Limited pay.
Yep.
Good. How do we feel about this?
Good.
Good. Limited pay. You're paying for a specific amount of time, and then you get coverage for the rest of your life without having to pay premiums. Do you think premiums are higher or lower for limited pay?
Higher.
Higher. Why?
Because you have to pay them off at a certain amount of time.
Right. Because the insurance company wants to make its money somehow, right? So it's not going to give you a little deal because you're only paying 20 years. It said, oh, you could pay 20 years, but you got to pay a little bit more.
Okay. So this was actually I don't mean to keep stopping. It's just, this is mainly the key part of like why I'm failing. Like I'm looking at my chart right now. Straight life, can we break down each of them? Except term life. I know term life. And more straight life, limited pay, and adjustable. I feel like whenever they put, like, I know what whole life means, but when they put limited pay or straight whole life, that's what throws me off. Like, not like, if that makes sense, like I don't know I forget everything basically. I guess my mind goes blank for some reason.
I hear you. So no worries. So the straight, the limited pay, things like that are all going to be only pertaining to how long you're paying the premiums. Okay. You're going to be covered your entire life. whole life insurance. You're going to be covered your entire life. Okay. Straight pay, you're going to be paying straight through your entire life. Okay. Same premium straight through the whole time. Limited pay, you're paying for a limited amount of time. But it's still whole life insurance, so you still get it your whole life. Straight whole life, you pay straight through the whole life.
Did you guys watch one of the videos that he did on the programs where on our schooling, sorry, where he was showing us our whole life and what forth, and then he did the straight life, or he did the limited, and anyhow it showed how it would stop at one point or how it went up a little bit to show how long you actually paid on the premiums, those charts. I don't know if those would help you guys better see, to be able to actually physically see how long and be able to put limited and, straight, or the, yeah, how those first words go into your whole life, so you could tell if you could get those charts like that, like he was showing us on the videos. They're on his videos on the classes.
Okay.
Thank you. Yeah, thank you for that. Did that make a little bit more sense?
Yes, it's just, I don't know what throws me off so much about each type of them, that whenever I get to the test, I like,
many words.
I don't know, I'm like right now, like for example, I just because, so like I know it's limited pay, but like adjustable life, I'm over here thinking, okay, because I'm not typically seeing it in my notes, I think that's why too. Like I'm like, oh well, it's not saying that it's not in the book. I'm just saying like usually, I don't know if that makes sense. Like I guess I don't, like for example, they threw modified on the exam one time. I was like, I didn't study modified.
Yeah, modified's a goofy one.
Yeah, so when they threw modified, I'm like, what's modified? And then adjustable life insurance, which I know I need to know all of them, but the main ones that they throw at me were like whole life, term life. It was like I never got modified, so that's why I'm like, I guess being thrown off with the types. Like that's one of my weakest points out of all of my chart.
Yeah, no, I hear you. I mean, let's talk about it. So you know straight life, you know limited whole life. Okay, what's modified? Modified's a goofy one. I can give you guys the numbers and let's see if anyone can get it from there. You pay something either higher or lower for the first 5 years, and then the 6th year you pay what?
It goes leveled. I think it jumps up once in the beginning and then it stays leveled.
Yeah.
And then it stays leveled. But see, then I get confused with graded, because graded keeps going up and then goes leveled.
You got it. Yeah, you got it. So let's see. I have examples on here and maybe that'll help a little
And
bit.
you guys can pitch in, because like this is what throws me completely off when it comes to this kind of term. Maybe I'm overthinking it. Maybe it's a lot more common sense. Maybe so
graded, you're going to start out low and then increase, just like you said. So here's the example. Jennifer purchased a life insurance policy with a graded premium option. For the first 5 years, she pays a lower premium starting at $50 a month, which then increases annually to $80 by the end of the year, by the end of 5 years. Okay. After the introductory period, her premium jumps to $150 per month and remains fixed at that amount for the rest of the policy duration. Okay, so why would someone do graded? Let's say I'm in college. Okay, I'm a freshman in college and I want to get a policy. I can't pay $150 a month, but I can do $50 a month. Okay, for the first 5 years, I'm going to pay $50. Okay, at the end, not for the first 5 years. For the first premium, I'm going to pay $50. And then it's going to gradually increase to $80 by the end of 5 years. Okay. At 5 years, after the introductory period, it's going to jump to $150 and then it's going to stay level there. Okay. So the biggest thing for graded is just remember it goes up, 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 up. okay? And then it stays level. Let me pull up the definition for modified and then, oh man. When it does. Okay, so modified, again, you're starting lower, okay, for an introductory period, typically lasting 3 to 5 years, and then after that, the premium's gonna increase, okay? So, Emily purchases a life insurance policy with a modified premium option. For the first 3 years, she pays a reduced premium of $6 per month. It's not increasing during those 3 years. It's staying the same. And then after that period, her premium increases to $150 per month. Okay, so graded is it's getting bigger, bigger, bigger gradually over time. Modified is it's staying small for the first couple of years and then it's jumping up. Does that make sense?
Right.
Cool.
It makes sense. It's just so hard for me to like.
Seeing them. Does anyone have a good memory tactic to use for that? Let's see.
I'm about to chat GPT it real quick.
I was about to do the same thing. I was like, let's ask ChatGPT, modified. First, okay.
Okay, so modified, it starts low at first, then it does a big jump later, and then it stays fixed. So it's low, big jump, stays level. Graded increases gradually over and then locks in. So graded is constantly increasing. Modified, it just jumps up once, like one and done.
Yeah, it didn't give a good memory tactic for mine either. I think you just have to
Sorry.
Maybe your grades can change all the time. They can always go up, 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 up.
Being graded.
Grades go up, 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 up. Modified is it's gonna stay low.
I got you. I'm writing it down.
Yeah, grades go up, 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 up. Maybe this is bad. Maybe it's bad, but you know, I had dyslexic, look. Clearly, you guys know I have dyslexia, right? So I took my test in a modified testing center, okay? I always stayed low. I always had a time and a half. Always, 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 okay? Graded grades go up, 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 okay? Modified, my modified testing time, it always stayed the same. And then it went up. I don't know if that makes sense for you guys. Maybe that'll help, maybe it won't.
Right. And whenever they say straight life, they mean ordinary, correct? Always, when they say straight life, that means ordinary?
Mm-hmm.
Yeah.
Okay. Okay, and then adjustable?
Adjustable life insurance. What's adjustable? I don't know if we've talked about adjustable.
Just the premiums.
Good.
So you only adjust the premiums. That's the only thing you can adjust is the premium.
It's mostly going to be talking about premium. That's the thing. You have to know what specific things are going to talk about. So like universal, it's going to be talking about adjustable premiums and adjustable death benefit. Okay. Variable, it's going to be talking about adjustable, or where to invest your money, right? Adjustable life, you're mainly going to hear premiums. Let me pull up the example for that one because we haven't seen that one.
So adjustable life isn't considered universal life? It's not like the same thing?
Adjustable life and universal. My thing's not going right. Oh my gosh. Sorry. Okay. No. Sorry.
And the reason why I'm asking all these questions are so people that haven't took it, they're gonna throw you like types of policies that you didn't even really were studying hardcore on, so you don't fully remember. That's why I guess that's why I'm having such a hard time, because when they throw like limited pay, not that I don't know what it is, it's just I never really focused on specifically that type of insurance.
Okay, I want to share this screen with you guys because I actually made a slide for this. Let's see, it's slide 235. And we'll talk about it. Here we go. Perfect. Share here. Okay. Can you guys see this?
Yeah.
Yeah. Okay. So adjustable versus universal. Okay. So universal, when we're talking about flexibility, it has very, very high flexibility. Okay. The investment risk is with the policyholder. It's interest sensitive. Again, very high flexibility with premiums. And then the changes in the death benefit are allowed. Okay. For adjustable life, it's going to be a little bit less flexible. Okay. The investment risk is with the insurance company. So you're not really going to hear a lot about, in the question, it's not really going to talk a lot about the investment side of things. Okay. The cash value is fixed growth. They won't really talk about that. Premium, you're going to have some flexibility, and then death benefit is allowed. The changes are allowed. But again, when they're talking about adjustable life versus universal life, universal, they're going to say adjustable premiums and adjustable death benefit. For adjustable life, they'll talk about mostly premiums. Okay. Yes, the death benefit is adjustable, but you won't hear that as much in the question. So again, this test is a lot about knowing how they want you to answer the question and what they're asking for when they're saying certain things. Does that make sense? We can even go through here and we can look at this really quick. So flexible premium options. So that's what you're going to hear. For a policy owner seeking flexibility in payment amounts and schedules, along with the ability to adjust the death benefit according to evolving life needs. An adjustable life insurance policy would be ideal. Okay. So they usually do not include dividends. We don't really need it. Let's look at the example. Come on, example. Or don't, that's fine too. There we go. Emma, who is self-employed and experiences fluctuating income, chooses an adjustable life policy to accommodate her varying financial situation. Initially, she opts for lower premiums to match her current budget. As her business grows and her income increases, Emma plans to raise her premium and adjust the death benefit to align with her expanding financial goals and family needs. Okay, so you're probably thinking about something that we just talked about, right? A lot of these terms will overlap, but again, when we're talking about this test in particular, you guys need to know what specific terms they're asking for when they're asking things in a certain way. So again, I'm going to reinforce this idea that half of this is understanding the material. The other half is understanding how to take the test and how to answer those questions. Okay. So let's go back to here. Are we feeling good, bad, okay with this?
Good.
Good.
Good. It's helping me.
Good. Okay. So all of the following are characteristics of whole life insurance except
The coverage expires at a specific time.
how do we feel?
Yep.
Yep.
Yeah.
Any questions? So when it's saying whole life, it's talking about ordinary whole life, right? Or straight whole life. Cool. A type of life insurance policy that provides coverage for two people, but pays out the death benefit only after both insured individuals have passed away. Ooh.
B.
Survivorship.
Okay, I was like, are you good? Okay, good. How do we feel about this? Good. What is joint life? What would it say if it wanted joint life?
That means the survivor would get the benefit.
Right. So it pays after the first one dies.
Yeah.
Okay. Survivorship pays after both pass away, which is weird, right? So I feel like survivorship, but whatever. I'm not gonna confuse you guys with my own brain. Okay. So how do we feel? Good. That was question 25. Okay. So I say we take a 10-minute break. We come back. We do Prometric life. 25 from those. And then we see how we feel. Good?
Sounds good. Thank you.
Of course. See you guys in 10 minutes.
Okay.
Bye. Okay. We're back on. We got a few more hours, guys. We got this. Not even. 4:30, 5:30, 2 more hours. Not too bad. All right. So let's go ahead, go into the Prometric questions. And go from there. Let's see. Share this screen. Cool. Do you guys see my screen?
Yes.
Yay. Okay.
Yep.
Cool. Yay. Okay. So oh wait, we just did these. Hold on. Silly me. Let's see. Prometric. Okay. Which of the following best describes the primary function? It's good. I think my sugar crash is starting now. Which of the following, let me make sure everyone's in here before I start. Okay, I think everyone can speak. Okay, cool. So, which of the following best describes the primary function of life insurance?
B.
B. Provide a safety net for beneficiaries in the event of the insured's death. How do we feel? Good? Cool. What is the primary difference between stock and mutual insurance companies?
C.
C. How do we feel?
Yeah.
Good. There. Maybe, hey, maybe the long answer. Maybe that is the way to go. I don't know.
I just know because I got it wrong like 5 times.
Fair. Fair. All right. So what is, oh, should we go over that or we feel good? I did already skip it. I don't know if I can go back to it.
No, I'm good.
We're good. Yeah. We talked a lot about the stock versus mutual today, but I do not mind going over it again if we need to. No worries. Okay. What is the main advantage of risk pooling in life insurance? Ooh. What do we feel? What are we thinking?
I'm gonna say B.
B.
Okay, good.
A.
How do we feel?
Good.
Good. So we talked a little bit about risk management, right? Risk pooling was one of them. Okay. So an advantage of risk pooling, it allows the insurers to distribute the financial impact of claims among a large number of policyholders. We bring a bunch of people together, and some of them will have to pay claims for, some of them we won't. Okay. Good here. The process by which a stock insurance company transitions into a mutual insurance company.
Mutualization.
Mutualization. What do we think? Look, look at that.
It's
Yeah,
not the long answer.
it's not the long one. I was about to say, I was like, look at that long answer. That's not right. That's just restating the question. Let me I take a picture of it. Let me send that to him so we can fix that. Okay, mutualization. What do we think? Cool. I'm cool with it. Are you
Hey, I
guys
proved it wrong. I'm just kidding.
right? I know, yeah, it's wrong. You're like, I don't know. Fire me. Fire me on this one. Okay. Okay, here we go. Ready? Next one. A type of insurance provider where policyholders collectively insure each other's risks. They insure each
Reciprocal.
other's. Reciprocal.
Yeah, reciprocal. That's how you say it.
How do we feel?
Yep.
Good. They're insuring each other. We are reciprocating the insurance. I insure you, you insure me. Cool. Good. A company-owned insurance provider established to cover the risks of its parent company. Keyword, parent company. What are we thinking?
Captive.
Yeah.
Captive, right? Think Walmart. We gave that. I don't know if Walmart actually does that, by the way. That was just an example. Okay. Captive insurer, how do we feel? Good. John owns a small business and is looking for life insurance that will allow him to provide financial security for his family and business partners. He also wants a policy that builds cash value over time. Which type of insurance is best suited for John?
Whole life?
Whole life? How do we feel about this?
Yes.
Good. Process of elimination here, right? So I was like, let me just double check. But yeah, process of elimination here. Okay. So term life, it's only for a small period of time. It doesn't really say that he wants that. It's also saying cash value, right? Cash value is very, it's very much not a thing in term life insurance. Okay. So now we're thinking whole accidental death and group. He's not really saying anything about dying. He's not, I mean, accidental death, it'll be very apparent that you should choose accidental death because they'll say something about dying accidentally. Group life insurance, he's not really talking about a group. So process of elimination, we got down to whole life insurance. Good here?
Yes.
Cool. Lisa recently inherited a large sum of money and wants to invest it in a policy that guarantees her a steady income for life. Which type of insurance product would best suit her needs?
Annuity.
Annuity.
An annuity. Okay, why? Because it says steady income for life, right? If it's
Yep.
asking for a steady income, we're talking, Biggie, come here. Biggie. We're talking about life insurance. I don't know what he's doing. He's like,
I have a question. So so there was one about like assets, like basically, if I'm gonna just make a fake question because I don't remember how it was worded. Stephen and his family have assets, and if they pass, where were their, like, basically what will cover their assets? I'm not sure if anyone else has seen that type of question or have taken the test, but it talks about assets or excuse me, not assets, estate.
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 Okay.
So I don't know if we could cover that, maybe not in this one, but or whenever. I do want to go over these, like how estates work, because there was like a ton of questions on my state exam that I was like, I don't understand this.
Yeah. So, I know what you're talking about. It talked about like estate planning. Was that, what do you remember that word? Estate?
Yes.
Okay, cool. Yeah, so it'll talk about that when it's trying to compare life insurance to annuities. It'll talk about estate planning, because annuities provide an income stream, right? But they can also, and I remember this I know exactly what question you're talking about. I'm trying to remember. It used a keyword about
If I'm not mistaken, the question I think is something along the lines where which one would provide the estate to be paid off or be able to save the estate, and I think it was annuity.
Yeah. It was something along the line of like of that, like estate planning or like paying up. I remember I wish I remembered it, but so when you're talking about an annuity, you're talking about income for life, okay? When you're talking about life insurance, you have a benefit, right? You have a single. It doesn't have to be single, you have your payout options that you can choose, but you're pretty much getting paid, okay? Or your beneficiary is getting paid, whereas annuity is more so you're getting paid, okay? So estate planning, what's happening in the future, where things are going, I think they usually pair that with annuity. I could be wrong. Hopefully the question comes up and then we can talk about it. Oh, let's see, we got a chat. Oh, a Q&A. Oh, wait, think my mic. Okay.
Yeah, because I was really like on the exam, it had a bunch about estate planning. For if anyone that's from North Carolina, that's how it was for me on the second test, was a lot about estate planning. And I want full transparency, I didn't even go over that. I was like, I think it's gonna sound something, the things that I was quote prioritizing were literally the wrong things that were on the like totally opposite of what I should have been prioritizing. If that makes sense. But I didn't do, what section is that in our modules? Do you know by any chance on the right off top of your head?
I do not. I know I saw it. Oh gosh. No, I do not know. I don't know at the top of my head, but I can tell you. Okay, hold on. Let me stop my screen share. Oh God, I just did Command F and there's 67 of them. That's good. So straight life, I think it's. Sorry. Oh no, it's everywhere. No, I don't know. I'm sorry. I don't know.
No, you're fine. Now going through these questions is reminding me a lot of like what I'm supposed to go like remember, because when I'm on the exam, because I tend to be like, okay, when I leave here, I'm gonna go and review over that. But definitely estates. I'll do research on it. No worries. I just maybe a question will come up on that.
Yeah, hopefully a question comes up and then we can talk about it. My mic is just gonna on the host and I'm not able to talk. I see your message and I don't know, I don't think it's on my end because it says you're. Let me do that and then let me try to. Sorry, we have. Okay, let me leave. Okay. No, it's okay. No worries at all. Okay. I don't know if you guys can see these chats that we're having. Can you guys see these chats up on the screen? Okay. Well, either way. Oh, wait. Remove pin. Okay. Sorry, y'all. Okay, cool. Yeah, hopefully something comes up about it. I know exactly what question you're talking about, and I wish I remembered it. And I remember thinking the same thing. I was like, this is kind of weird. This is a weird way to put it. Gosh, hopefully it comes up. We'll see. We'll see what we can do. Okay. Let's go on to the next one. Michael is a 35-year-old professional who wants to purchase a policy that will provide the maximum death benefit at the lowest cost for the next 20 years. Which of the following policies would be the best option for him?
20-year term.
How do we feel? Good?
Yes. When they put a number like that, like a 20-year term, they do that on the exam too. That's
Yeah.
still the same term, right?
What is it?
Same thing as term, right? Like if they could put 10-year term, they could put 15-year term. It still means like the same thing.
It's the same thing as term. Yeah,
Okay.
they're being more specific or less specific. Yeah. Okay, let me. She came back in. Uh-oh. She left. Okay. Yeah, she's just being they're just being more or less specific. Okay, on to the next one. Good here. All of the following are characteristics of a fraternal benefit society except
Operates on a non-profit basis.
Ooh, are we sure?
C. C.
Okay, we're saying C. Good. So, fraternal benefit societies, they're nonprofit. Nonprofit, they usually come together because they are, a certain ethnicity, religion, things like that. And then they provide benefits, insurance benefits to their members. So the only thing that it's not is it's not owned by its shareholders.
Yeah, brain fart.
It's okay. No worries at all. No worries at all. The following are all considered elements of an insurable risk except
C.
B.
C. As in cat.
C. Okay, so we're in between B and C. Need a tiebreaker.
D.
D. Uh-oh. Now we really need a tiebreaker. We got B, C, and D. Someone's right. I mean, unless it's A. So all of the following are considered elements of an insurable risk. They're all insurable, except.
Insurable.
So the risk must be measurable. The loss must be accidental. Is that an element of insurable risk? The risk must guarantee a financial gain for the insured. The loss.
I would say C.
C.
Financial loss.
Okay, so I heard a lot of C, so I'm gonna go C. Yay. Okay, so you guys caught it there. Yeah, financial, what was that?
Loss.
Loss, right. The risk must guarantee a financial loss for the insured. An element of insurable risk, okay? The risk must be measurable. It must be accidental, right? It can't be on purpose. There are riders for there's are like the suicide prevention thing that it talks about how you won't have you won't receive the benefits if it's due to suicide within the first 2 years. And then the loss must be predictable. So the only thing that it's not Actually, I'm kind of unsure about the loss must be predictable. That's an interesting one. Let me ask about that one because that's weird. But it's for sure definitely not a financial gain. It has to, the risk must guarantee a financial loss. But I'm gonna ask about this one.
Well, I think certain loss can be predictable, not all. I think maybe it's a general, like, for example, people can get sick. That's predictable. Like, you can be prone to getting sick, you know, like, period, and sick and dying, so to speak.
Yeah.
I think that's how it's meaning it. Like, can it be predictable? What else? Someone accidentally dies in a car accident. You know, that's predictable as well. Like, certain, I guess it depends on the policy. So to speak.
That makes sense to me. Let's look it up. Let's see. See what it has to say. Insurance predictability of a risk means the insurers can use historical data, statistical models, and actuarial analysis to estimate the likelihood of potential severity of losses associated with that risk. So I guess that makes sense. Risk must be predictable. Insurable risk should be predictable based on historical data, statistical models, or actuarial analysis. So if you get in a car, you could get in an accident and you could pass away from it. The light is my desk over because it's bright. Yeah. Okay, cool. How do we feel about this? We learned together today. Good? Cool. All of the following are methods insurance companies use to reduce adverse selection, except what is adverse selection? Or wait, answer the question first and then we'll talk about it.
C.
C? How do we feel? Good? Bad? I'm gonna say yes to this one. Okay, so let's talk about adverse selection. What's adverse selection? We talked about it earlier.
It's the individuals with a higher risk profile.
Yeah. Yeah. Adverse selection is just talking about not that they're not allowing, but more people with higher risks are going to apply for insurance versus people who have lower risk. Okay. So adverse selection is trying not to have so many people with such high risk, but to kind of have a little bit of everything. Right. So all the following are methods to reduce that. So to reduce the influx of just a bunch of high risk individuals, except for, so underwriting. So we know their medical history, we know what they do, things like that. That can reduce adverse selection. Medical exams, okay, know their medical history can reduce adverse selection, and policy exclusions can also reduce adverse selection. What's in a policy exclusion?
It covers everything except whatever the exclusion is.
Good. Yeah. It's like, hey, we'll cover you except if this happens. So a good example is the aviation rider or the aviation exclusion. So what happens is they will cover a pilot, and they'll say, we can give you life insurance, but there's an aviation exclusion on this, meaning that if you are operating a plane, when you die, we will not pay the death benefit. If you die any other way, we'll pay the death benefit. Not any other way. I mean, obviously we know there's things against suicide and certain, things like that, but for the most part. Any other way will cover it. For the aviation, if you die when you're flying a plane, and you're a pilot, we're not going to cover it.
So there was a question on the test that it was like, so there's a woman, she was a lieutenant, but she didn't die from war. She died because she got in a car accident. Oh no, I think she went on a skydiving thing, but she didn't die from war. Did she get the benefit? Did she not get the benefit? So can we go into like the war clause? Because I was reading the definition, it's basically saying you don't get paid out, period, is what I understood.
Yeah. So you're saying, say that again? You're saying she was in
Yeah,
the
so the question was like, Susie was a lieutenant and she has the war protection clause, or whatever, and she went skydiving. Is she going to be covered by the war clause, or is she going to get paid half the benefit? That's what it was kind of
yeah. So the war clause is talking about they're not going to pay if you die at war. He's eating a stick right now. If you guys hear that. So if she died during skydiving and wasn't at work, she wasn't, she just did it for fun, then they should pay. But then that also, I mean, in real life, that would bring in a bunch of other things. Cause like, I'm sure, I don't know where skydiving falls specifically, but the war exclusion would say, we'll cover you, but if you die at war, we're not gonna pay for that. Does that make sense?
So what if she didn't die at war? Let's say that
Then she get the benefit.
And she get the full benefit.
Yeah.
Okay. All right.
Yeah. If she died at war, she would get no benefit. Good. Okay. So, which of the following best describes the purpose of the principle of indemnity in life insurance?
B.
B. How do we feel?
Yeah.
Good?
Yes.
Right. So it's to return the insured to their original financial position without allowing financial gain. Okay? So we'll restore you to where you were, no more, no less. Good? Which of the following is a fundamental requirement for a life insurance contract to be legally enforceable?
B.
B. Good. We know that one, right?
Mhm.
A contract in which only one party, the insurer, makes a legally enforceable promise. We've seen this like 8 times today.
Unilateral.
Unilateral.
Cool. Emma purchases a life insurance policy on her husband's life. Which of the following must be present at the time of the application for the contract to be valid?
Insurable interest.
Good. Insurable interest. So this is an interesting thing to bring up. She takes out a life insurance policy on her husband, and at the time of the application, she has insurable interest because let's say he's the breadwinner, but let's say they get a divorce. Would the policy go away?
No.
No.
Oh, right? Because it's only necessary for the insurable interest to be present at the time of the application. If it goes away after that, doesn't matter. You can still have the policy. Good? Cool. The following are characteristics of a valued contract except.
D.
D. What are we feeling?
C.
C. Okay, a tiebreaker.
I don't even know what a value contract is.
Yeah, I think it's C too.
Yeah.
Okay, let's go C and then let's talk about it. Okay, so what is a valued contract? The definition is in there pretty much.
Financial situation at his time of the death. I mean,
So that's, so the question's asking except.
yeah.
Okay, so first of all, what is a valued contract? Anyone know what a valued contract is?
Probably.
No clue. No clue at all.
No clue? Okay.
The benefit is a predetermined amount.
Policy probably pays out regardless of actual loss.
Good.
Life insurance is an example of a valued contract.
Good. That's exactly what it is. Okay. Life
One more
insurance-
time. One more time. I didn't hear it.
There, so it's okay. We'll go through it.
It's
Right.
A, B, and C all together.
A, B, and D.
Or A, B, and D.
Yeah. So a valued contract is a life insurance policy. Okay. The policy, the main point of a valued contract is B, which the policy pays out regardless of the actual loss. Okay. You could have lost $200,000, but if the policy says 500,000, they're going to pay you 5,000. That's a valued contract. The policy pays out regardless of the actual loss. Does that make sense?
Kind of.
Kind of. Okay, so I buy a valued contract for $100,000. Okay, and then something happens, something bad happens. Okay, and I'm gonna get the benefit of the valued contract. Whatever happened to me only cost me $30,000. It doesn't matter. They're still going to pay me the $100,000 because the benefit is predetermined. Okay. And they're going to pay me that $100,000. It doesn't matter if I lost 50,000 or 5,000 or 120,000. They're paying me 100,000. That's a valued contract. So life insurance policy. I die. Let's say you take one out on me. Okay. And I die. Okay. Let's say you took out a $100,000 policy out on me. Okay. I die. You have to pay for funeral expenses, all of these things. Let's say you're out $50,000. They're going to pay you $100,000. Okay. Let's say you have a big party and a funeral for me and you're out $150,000. Doesn't matter. They're still going to pay you $100,000. A valued contract is they're going to pay you that benefit amount, and it doesn't matter why or how the loss. Doesn't matter how much the actual loss was. Does that make sense?
All right. Okay. All right. Maybe another question will come up. I get it, but not like maybe I'm overthinking it again. Bless my heart.
Okay. Explain it to me.
So basically, you, like you said, a funeral, you decide to throw a big party and it costs 100,000 to bury you, right? And then because I don't know, because
So-
I did
Go ahead.
Because it costs, and let's say that they valued it at 90,000, then I just get 90,000 even though I'm $100,000 out.
Okay, yeah. So the event doesn't okay, I think you're overthinking this. It's not like an event happens and then they pay you. It's
Okay.
not like it's not like an event happens and then they pay you that amount in the sense of like, oh, that happened. Okay, we're gonna pay you this amount. It's a predetermined contract. Okay, it's a life insurance contract. Okay, it's literally like life insurance is a valued contract because I make a deal and I say if I die, you're gonna give my beneficiary $50,000.
Okay.
Okay. Why do you buy life insurance? Because you have insurable interest, right? I'm gonna
Right.
buy a policy because if that person dies, I'm gonna have emotional or financial losses.
Correct.
So I buy a policy because I'm gonna have financial losses of $50,000 on my
Correct.
house. Okay, they die, and I get paid $50,000.
Correct.
That's a valid contract. It doesn't matter if we have a mortgage. It doesn't matter if there's a bunch more losses that weren't accounted for that I need to pay for. They're gonna pay me
And-
50.
I got you. Okay.
Okay. So a
Got you.
life policy is a valid contract. It's like at the end of the day, they're gonna pay me the amount that we predetermined. It doesn't matter what more or less I lost.
Okay. I
Okay.
got you.
Cool. Everyone else on the same page?
Yes.
Sweet. Which of the following types of life insurance provides coverage? Which of the following types of life insurance provides coverage for a specific period and does not accumulate cash value?
Term. Yeah, it's term.
Okay, we got terminal. I think I heard two terms. So it's for a specific period and does not accumulate cash value. Term, right? Term doesn't have cash value and it's only for a specific period. Whole will have cash value and it's your whole life. Good?
Good.
Sweet. Which life insurance policy allows policyholders to adjust their premiums, coverage amounts, and death benefits?
Universal.
Flexible.
Flexible.
Oh, universal.
Universal. Okay, good. I was like, hey, that's a choice. Okay, universal. Are we good with this one?
Yes.
Good. Okay. So they're not gonna try to screw you over too much. Like they're not gonna try to put this and something super similar. Again, we talked about how things can stack. We talked about how some of these definitions are very similar and it's just talking about like specific scenarios. But just so you know, this is talking about premiums, death benefits, all of those things adjustable. You're gonna go universal. Good? Cool. A life insurance policy that provides a level death benefit and level premiums for the insured's entire lifetime.
Whole.
Whole. How do we feel? Good?
Good.
Good. Cool. That's an easy one. A type of life insurance where the policyholder's cash value is invested in separate accounts, similar to mutual funds. Think sub-accounts.
It's variable.
Variable. Yeah. Okay, so this is a good question because I put variable. I don't know what happened. We knew which one it was. Okay, so when we're talking about variable, remember I said sub-accounts, think variable, right? Whenever you see the definition, it'll say sub-accounts like mutual funds. Okay, so you see sub-accounts, you see similar to mutual funds, like mutual funds, that's all variable life insurance. Good?
Okay.
We put variable. I don't know what happened. Whatever. Okay. David wants to purchase a life insurance policy that allows him to start with a lower premium that increases over time before becoming level. Which policy best fits his needs?
Graded.
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 Someone tell me the difference between graded and modified.
Graded is it starts it gradually goes increases, excuse me, and modified it shoots up once and it stays leveled.
Good.
So yeah, okay.
Good. That's perfect. Graded, it goes up. Your grades go up, 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 up. Modified is I'm staying low. I shoot up once, I stay level. Good?
Good.
Cool. Maria recently purchased a convertible term life insurance policy. 5 years later, she decides to switch to permanent coverage. What is the primary advantage of the conversion feature?
A.
A. That was pretty solid. What do you guys feel? Good? Yeah, I'm going to take that as a yes. All of the following are advantages of whole life insurance except.
D.
The longer one.
Yeah, D.
The longer one?
Yeah.
Okay, we feel good about this one?
Yes.
Okay, remember whole life insurance, your entire life, premiums are level, they're fixed, okay? And it accumulates cash value. Good here? Which of the following are characteristics of term life insurance? Nope. The following are characteristics of term life insurance except.
B.
B.
Good. Ooh. Good. Okay. So term life insurance, it provides coverage for a set period of time. It's generally more affordable than whole life insurance, and it can be renewed or converted in some cases. What was the rider that we can put on to do that? We just talked about it.
Renewable.
So yeah, renewable. What's the other one?
Is it guaranteed something? Guaranteed insurance or guaranteed insurability?
So that can be added, that can add things on. Okay. So we can add like other things, but not so much as like if we're talking about the whole policy, that's more like convertible or renewable. But if you're talking about the guaranteed insurability, that's more so you can add on things to it. Are we good there?
Yeah.
Yeah. Okay, cool. So that was question 25. How do we feel?
This has been extremely helpful going through the questions and breaking them down for me.
Yes, yes, this is like so much more reassuring. Reassurance, reinsurance.
Yeah, I love it. I love it. Let's throw out those dad jokes in here. Why not? Okay, so let me put out a poll. I'm gonna ask 3 things now. Let's go back. Let's can I edit this one? Okay, I guess I just have to make a new poll. Okay, so I'm gonna write questions so we can continue doing questions. We can go to the PowerPoint, that's gonna be PPT, or we can do all the Kahoots and go through all the questions, chapter 1 through 10. So I'm going to, and if we do the Kahoots, we can either do them together or separate. So let me save as webinar poll, launch. Okay, so yeah, go ahead and answer what you guys want to do, and then we'll go from there. We have about an hour left.
Could we do half questions, half Kahoots?
Yeah, do you guys want, it seems like that's exactly, like, it's literally 5 and 5. So would you guys want to do that? 5 or questions and Kahoots?
Sounds good.
Yeah, okay, cool.
Do you have so the same exact questions that are in Kahoot is what's on the test? Or are those kind of like more, you made them?
The Kahoot questions I made. Yeah.
Okay.
So it's not exactly what's on the test, but it is talking about definitions. So let's do a Kahoot, and then we'll go do questions, and we'll do like 10 questions, and then we'll go do another Kahoot, and then do another 10 questions. Are we good with this?
Yes, and I think it will keep us more awake.
Good. Okay, cool. Other thing is that I can stop at 5 o'clock and do 30 minutes of just questions, whatever you want, or we can do this till the end. I can also wait to see how we feel at 5 o'clock and go from there.
Let's do that, because I feel like I want to ask a couple questions.
Okay, cool. Cool. All right, so let me go ahead and share. Oh, okay, so you guys have, can you guys still see the link that I sent in earlier for Kahoot?
No, I got kicked out.
Okay. Oh yeah, no, it'll be a different game pin, but like the Kahoot.it website. Do you guys still see that in the chat? I can put it in again. Oh, no, you're right. Once you get kicked out, I see what you're saying. Okay, I'm with you. Okay.
You can just go back and you can get the
Sorry. It's been a long day. Okay. So everyone got that. I'm gonna give you the game pin. Let's do back.
Switching glasses out so I can actually read this thing.
Okay. Host live. Start. It's giving me a game pin right now. Okay. The game pin is 551.
Gosh.
0935. 551 0935. If you can't get in, feel free to just watch. We'll show the answers and questions and everything.
What was the number again?
551 0935.
When I put that number in, it's not working.
You may have forgot a digit because that's why mine didn't work. Because I forgot the number 1 in there.
No, I've got 5510935.
It should work. You may have to go out of Kahoots and like go out and come back in.
Yeah, I tried that already.
Oh, shoot.
I'll just follow along. It's fine.
Huh. I'm sorry. Is it working for everyone else? Or?
I'm in.
I'm in.
Okay.
Try a different browser, maybe.
Yeah, maybe switch the browser. Sometimes it's weird. Oh wait, I'm not even sharing my screen. Let me do this.
Oh my God, it worked on Chrome. That's dumb.
There you go. There you go. Gotta pull this down. Okay. Is anyone else still trying to get in? No. All right, I'm gonna go ahead and start. Okay. Chapter 2. A contract of blank is created by one party and the applicant must take it or leave it. Did anyone see how many people were in here? 9, 7. Okay, cool. Contract of adhesion. Okay. If you see take it or leave it, think adhesion. It's the contract of adhesion. What is an aleatory?
Unequal exchange of money.
Good. Perfect. That's exactly right. Okay, so it's an unequal exchange. So when we're thinking aleatory, think of a lottery. Okay. When you're entering into a lottery, you're going to pay for a ticket and you may or you may not get that that $1 million prize. Okay, hopefully you do. If you do, you paid $5 for the ticket and you got $1 million. That's an unequal exchange. Cool. What is apparent authority?
It's assumed knowledge that from the insurance producer, out in the field.
Say that again.
It's when you're out in the field, the insurance, it's apparent authority. It's a given that you get that authority. You have that authority. I guess is what I'm trying to say.
Yeah, exactly. It's the authority that you would assume you would have, right? Your apparent authority.
Yeah.
Okay. Any questions here? Are we good?
Yeah. What's the difference between that and implied?
Apparent and implied?
Yeah.
Okay, so apparent authority, okay, so implied authority is like, I assume I'd be able to do this. Okay, like let's see, let's think of a good example. As a agent, I would be able to let's see, let's say I would be able to take someone's premium, okay, and give it directly to the insurance company. Okay, I have a implied fiduciary duty. Okay, it's implied that I'm able to do that. Okay, and I'm responsible. I have a responsible fiduciary duty to that person. Apparent authority is like, this is exactly what I'm supposed to be doing. Like apparent authority, it's what's written in the contract. This is what I'm doing. Good.
So it's like clear.
Very clear. Yeah.
Okay.
Clear versus assumed.
Okay.
That's the best way to put it. Okay, Daniel, heck yeah. Norm, Tyra, I love it. Sweet. An agent represents both themselves and the blank during the application process. Careful on this one.
I can't see the screen. I
Oh,
can only see a portion.
I clicked the wrong one.
oh. Can anyone see it?
I can.
You can?
Yes.
Okay. Okay, so who said they can't?
Me, I can only see like the top two, like the red and the blue, but I can't see the
bottom two?
Yeah.
Is anyone else having that issue? Sorry, I'm not the best technology person. Are you doing it on your phone?
I'm doing it. I'm on the computer and on my phone.
Okay. Is the where you're answering the questions?
On my phone.
On your phone?
There we go. I see it. That was weird.
Okay, it's back. Okay, good. I was like, if someone's texting in the chat, I don't know why, like cannot open it for some reason.
Because of you, Jules, I'm gonna figure the answer is dog.
Good. Wait, what was that?
Said because of you, I'm gonna assume the answer is dog. They're dogs.
Right. I know, right? I would too. I would too. I put it on there. I was like, well. Okay, yeah. So keep in mind for this, an agent represents themselves and the insurer. They don't represent the client. Okay. Cool. Are you good with that one? Norm. Okay. Heck yeah. Christina and Lola. I love it. All right. A type of contract in which only one party, the insurer, is obligated to fulfill a legally binding promise. I expect 100% on this question. We've seen it so many times today.
What's the choice for yellow and green? I got it. Never mind.
Yeah. Oh, are
It
you
keeps
still
going away.
Huh?
Well,
Can you
the choices are on the computer, but I only have the colors on my phone.
That's all I have.
But every time the question comes up, then the two bottom ones disappear and I can't see it.
Is your phone horizontal or vertical?
I've tried both.
And you still can, you can't move it, like scroll it up and down?
Huh.
Weird.
I'm on my computer and all I see is the icons too. Just the colors, I mean.
Yeah. And then every time the question pops up, everything disappears. I can only see the top two.
So what I can do is I can read it out loud for you guys. Would that help? Or you can't even click them because they're below?
Well, I can click them on my phone, but I can't click it on the computer, which is weird.
You won't be able to click on the computer.
Yeah, no, yeah, it's only on your phone. The computer is because I'm screen sharing.
You're good. Just keep going. If I can get it to work, I'll work. If not, then at least I'll learn something.
Okay. Okay. I'll read all the answers too. So hopefully you can, maybe that'll help. Okay. So I'm so happy everyone got this right. I would be really upset. I'd be like, if you didn't learn anything today, it's unilateral. We've done it 18 times. Okay. Norm, good. Christina, Elena, I love it. Okay. Cool. An insurer's right to seek reimbursement from a third party responsible for causing loss.
I think this is wrong.
Oh.
Yeah.
All right. So let's talk about it. The definition of subrogation is an insurer's right to seek reimbursement from a third party responsible for causing a loss. So a perfect example of that is a car accident. Okay. So I get in a car accident and the person behind me hits me. Okay. My insurance company is going to pay me, and then they're going to go after that guy's insurance to get that guy and his insurance to pay for the losses that they had to pay. Does that make sense?
Yes.
Okay.
Yeah.
Utmost good faith is that both sides are being honest, right? To the most that they can, the best that they can. They're being honest and faithful, and also doing what they say that they're doing and covering. Okay. Reasonable expectations. That's pretty self-explanatory in the sense of I should expect this. And it literally goes in to say how any person, any sound person, anything that they should expect, those are reasonable expectations. So I'm going to get dinner somewhere. I expect that someone's going to give me a plate to put my food on. That's a reasonable expectation, right? Because I'm not just going to eat off the table or the floor. Okay. Parole evidence rule. We haven't talked about this one. What do you guys think?
So
Never even heard of.
does that have something to do with the juveniles?
Yeah.
Man, if I had a question about it, I could tell you the answer, but I don't remember it off the top of my head. Something about the parent dying and the juvenile being able to take over the policy.
So that's parole. That's okay, a little bit different. That's parole. That's a parole rider or a payer rider. That's a payer rider. I was like, I'm saying this wrong, but that's a payer. Payor. That's a payer rider. So when we're talking about a juvenile life insurance policy, that's saying if the person, usually their parent who's paying the policy, dies, then they can have a payer rider that pretty much waives the premium costs. So they can continue having the benefit of the insurance policy, but not have to pay premium costs. So that's a payor, Payor. What do you guys think about parole evidence rule? So I'll give you guys a hint. This is, ooh, how can I give a hint without saying it? It's something to do with whatever's written on the contract goes. Pretty much just told you guys. Anyone, is it ringing a bell for anyone?
Oh, it's
Go ahead.
It's the no outside statements made
There
before
it
at the time of signing can be used to contradict, modify, or add. So yeah.
There it is. There it is. Okay. So if I say, oh, well, they told me this, or, oh, but they said this before or after the contract, it doesn't matter.
Yeah. So
Whatever
once it's written down, that's it. It doesn't matter what anybody says.
you want it, you got to write it down. Okay. Doesn't matter what you say, what they say, doesn't matter. If it's written down, that's what's going to happen. If you said it, it's up in the air. It's not going to happen. Okay. Cool. All right. Let's see how we did on this one. Daniel. Okay. Daniel, Norm, Christina. I love it. Cool. All right. True or false? Estoppel is a legal principle that prevents a party from going back on what has already been established. Is that true, blue, or false, red? Good. Good. Okay, an estoppel, it's a legal principle that prevents a party from going back on what has already been established. It's one of my favorite words. I really love that word. Okay, any questions here?
There's a term that basically an agent can basically has the right to stop, or it's a term of stopping an insurance, or like not stopping an insurance, basically like I don't condone like this type of insurance, so I'm not gonna sell it to you. It's conjunction, conversion. I totally forgot what it was called, but it was on the test. Basically, when an agent interferes with that. I don't know if anyone knows that. I had it on the test.
I'm trying to think. What was the definition again? When an agent interferes?
When an agent when an agent basically says, I'm not going to sell this type of policy or interfere with this type of policy, it's something called conjunction. I don't know, something like that. It's not conversion. It has nothing to do with conversion. It's basically stopping the policy, almost. If you don't know, it's okay. It just made me think of that.
Let me look it up. I'm not sure, but let me see if I can find something. I'm not sure. Does anyone?
I'm
Anyone
trying to
else?
find it too. I don't recognize that word though.
Yeah, I don't either.
Can you say the whole situation again? Like the
So it's
whole,
basically like an agent, let me see, I think you know what, hold on. It's basically an agent like stopping like you're the agent, right? And they're like, oh, well, I don't want to sell you this type of policy because I don't think it's going to be the right policy for you. Like they're allowed to interfere with that. Like the term of the interference.
it's like
So,
someone's trying to buy a policy, but the agent doesn't think that policy is right for them, so they don't
Right.
sell it to them.
Correct.
Some ethical thing, wasn't it? Like an ethical thing.
yeah,
see.
but at the end of the day, it's you can advise, but you can't tell them what they can and can't do.
Right. I'm trying to see.
You can advise them, hey, I don't think this is the best, but at the end of the day, they make the decision.
Was this the thing where, like, let's say the person already has the life insurance, but they come to you to buy more, and you have to make sure that the life insurance that they're buying is better than the policy that they already have? Is that what that is? I know there was something like that somewhere.
Yeah.
It begins with a C. I know for a fact. I'm literally looking it up right now. Maybe I can find it. I'm so sorry.
No, it's okay. It's good.
Like, I want to know now too, because I don't know what you're talking about.
Yeah, I'm wondering if it's conversion when you replace a existing policy with a new one, you have to like show them apples to apples.
Yeah.
No, it's not that. It's
Okay.
because I thought the same thing out because it was on there. And I knew it wasn't
is this
conversion
stuff?
because conversion is you when you convert a policy. You know, you actually go with it. Conjunction. Conjunction is what it's called. I think conversion. No. No, it's no. I feel like I really remembered it one day, and I was like, "That's what it was." It was literally in the middle of a sushi date that I was on with my husband. I was like, "That's what it was."
Let me.
Are you sure it didn't say like something, something, something in conjunction with something, something, something?
No, it was one of the. It was one of the like answer choices, like conversion, twisting, misrepresentation, and then it said conjunction or something like that.
Yeah, I don't know. That word isn't in my notes anywhere. I have pretty good notes.
I neither.
Pretty good news.
I mean, in my opinion, they're pretty good. I don't know if they are or not.
I was looking notes and I don't see it.
Well, maybe I'm the one that's tripping then, because I
No.
like.
No, I believe that you saw it. I just
We all take different notes and we all see stuff and
But just because I don't know it doesn't mean it doesn't exist. I'll tell you that right now.
Oh, God.
and if all we needed was our notes, we wouldn't be on this class right now more than likely.
I know. I'm trying to find this. I haven't heard of. Again, like you're saying, it kind of sounds like.
I guess it's like an like so. I guess the agent can advise, like for example, let's say hypothetically, right? You're at a client's house or whatever, and they're like, "Oh, I can do that premium," but you're like, "No, I don't think you." Not that you can't, but like it would put them in a bind, and you know that it will, and you know that it's just gonna put them in like a chokehold at a point. But you kind of like, I just don't want to sell you the policy. That's what the question gave me to understand.
I know what you're talking about. I'm looking at my notes, but I think I know what you're talking about. Let me see if I can find it.
Because I mean, at the end of the day, I think you should, like, for example, if somebody wants me to sell them a policy and I know that policy, they're gonna literally call me back and they're like, "Oh, I can't afford it," then what do I do? You know?
I feel like it goes along with like utmost good faith. You're not just selling.
Yes, it has something to do with that. It was definitely one of the state things. Definitely.
Yeah, if it's state specific, I won't have it on here.
Amy, what are you chewing on? No, ma'am.
Well,
Yeah,
if
I
they
don't.
financially can't afford it, then we can't give it to them, correctly? Okay.
Yeah, but you can't, like, let's say someone wants to pay, like, they want a policy and they have to pay like $500 a month. Oh, is it twisting? No, it's not twisting.
500 a
No,
month. That's
no, no,
a,
no. It's not twisting. It was something that I was like, wait, what? Like I didn't know we like almost like I was like, I didn't know we were able to do something like that type thing.
You're right. So, okay, so let's say someone wants to pay like $500 a month for some policy. Okay. And you know that they have kids at home and, you know, they could do that, but if anything were to happen, that would put like the whole family financially at risk.
Correct.
So you can advise them to be like, hey, maybe do a policy that's $200 a month.
was it maybe something like conscientious, something like conscientious objection or something?
Yes, that's probably it. That was probably it.
That was a reach.
Yeah.
I just made that up.
Yeah, I don't know about that. Yeah, I mean, I don't know. I don't know the exact term, but I feel like that goes along with like utmost good faith and kind of things pertaining to that. But if anyone finds it, hey, let us know. Let's all learn.
You imagine the ADP on that though, 500 a month.
I know. Don't think about that.
Like I'm an ethical person, but
But yeah, there are, I mean, you know, you work with some of the high profile clients. Yeah, that can definitely be a thing. It doesn't come every day, but it can. It can. Okay. So, let's go to the next question for now. If anyone finds it, feel free to interject and you know, teach us. All right. The authority explicitly given to an agent by an insurer clearly outlined in the agent contract. I think I said this wrong earlier. Sorry, guys.
Yeah.
I said this wrong. Yeah, sorry. Express authority. Okay, so express authority is I take full responsibility for everyone that got that wrong. Full responsibility. But express authority is the one explicitly given, and it's clearly outlined. Let me go ahead and pull up apparent authority because I definitely got those confused. Let me see. So it refers to a situation where an insurance agent appears to have the authority to act on behalf of the insurer, even if they technically do not. And a reasonable person would be able to believe they do based on the insurer's behavior or representations. Okay, and then implied, the authority that is not explicitly stated in the agency contract, but is assumed to be necessary for the agent to perform their duties effectively. Okay. So apparent authority is what's assumed that the agent has from the insurer. The implied authority, I think, is more so talking about what the agent can do, like duties wise when they're working with a client.
Yes.
We good on that? I'm so sorry. I take full responsibility for everyone that got that wrong. I'm not perfect. I have my days as well, or my moments. Happens multiple times a day. Are we okay on this
We're
one?
good. This is one of those situations where you constantly are second guessing yourself and you know the right answer, but you choose the wrong one anyways.
If you have them all laid out like this, you can tell the difference. But when it's just like two of them, you're like, oh, I can't remember, right?
well, what gave it away for me at least was the clearly outlined in the contract part, because the express authority is clearly outlined, but the other two were just, you know, can you or can't you? But the contract says you can or you can't do this.
Definitely. Good. Okay, cool. So we're good on this one? I'm going to assume that's a yes. Daniel, Lola, Elena. Yeah, sorry. Okay, cool. I love it. You guys are doing awesome. Okay, indemnity contracts aim to restore most of the financial losses. Careful with this one.
Oh,
Okay, why? Can someone? Can someone?
Oh,
You're
oh.
trying to
Did we
restore
see
them
it?
to their original financial, where they were financially before the loss.
Right, right. So it's not most. It's
all.
all.
100% of it. Yeah. Yeah.
Yeah. Okay, we're good on this one.
Yeah.
Cool. Okay, Christina, I see you. Okay, cool. Once parties have put their agreements in writing, any previous verbal statements are not included in the document. This is what? Ooh, we talked about this one.
I don't remember.
Good. Parole evidence rule. That's exactly what we talked about, right? So anything that was previously stated or stated after verbally, it doesn't matter. If you want it, write it down. Good? All right. Lola, cool. Daniel's on the top. All right. Policy riders or endorsements modify original policy terms. True, blue, false, red. True. Good. Heck yeah. I'm glad we got that one. Yes, riders, they modify original policy terms. Can a rider add something or take something away? It's a question.
Yes.
And something.
Yes, yes is the answer, right? It can do both. It can add something or take it away. Cool. I'm glad you guys caught on to that. Sweet. All right, sticking where we are. True or false? Aleatory contracts may have significant imbalance in paid premiums to what is paid out in an uncertain event. True or false? Aleatory, a lottery. Cool, we got that one. Okay, good. Yep, a lottery imbalance. All right, chapter 2 podium in third place, Christina. Nice. Nice, nice, nice. Second place, Lola. I love it. And in first place, I think I know who it is. Daniel. Woohoo! Yay. Okay, congratulations, guys. That is so awesome. Let's go back, do some more questions. Do you guys want to, I mean, we have 45 minutes left. Do you guys want like a 5-minute break to go to the bathroom and stuff?
Yes, please.
Okay, cool. Let's take, you guys want like 5 or 10 minutes?
5's good for me. I'm out.
Cool. Okay, we'll do 5 minutes and we'll be back.
Okay,
At
so
55. What was that?
just this question has nothing to do with the course, so I just want to ask you a question. That Cahoots thing, do you get
Yeah.
more points if you answer the question quicker?
Yes.
Okay, I was just wondering because this seemed like the points were different every time I clicked it.
Yeah. Yeah. It's different for how quickly compared to everyone. Mm-hmm. Okay. I'll see you guys at 55. Okay, cool. So what we can do from here, we have about 30 minutes left. If you're like, I'm done, I can't take it anymore, like I gotta go, feel free. I'm not gonna hold you guys hostage. Actually, before everyone goes, let me just make sure I have everyone.
Sí.
Let me make sure I have everyone's name down. We can continue and go back to questions until the end, or ew, there's a spider in my book. Oh, it's a big one. You guys, look. Can you guys see that? I don't know. Do you see that? Ew.
Bolt. ¿Dónde en el warehouse? No, el bolt cuando caga, caga. Caga la madre.
Ew, squished in there.
Who wants to learn insurance?
Oh, I'm so sorry. I thought I was I thought I was muted. I'm so sorry. Yeah. Okay. What did you say, Miss Jules? I apologize.
No, you're good. You're good. I'm just making sure I have everyone's name written down before anyone decides to leave or whatever they need to do.
I'm gonna stay.
Can I just ask one question about this?
Yeah.
Do you have to be in this course for a specific amount of time to be able to get the license? Like, is there a time amount on this, or is this just something that, like, that you guys are wanting us to do?
It's no, some places, some states require an online portion of this, but
Okay.
if you leave 30 minutes early, I'm not gonna penalize you for that. If you're
Okay.
like, I'm done, I just need to go, like, go ahead.
What? I just don't know. Let me check.
Yeah, you're totally fine. Either way. Oh. I wrote here.
Like, what would this be called? Like an 8-hour seminar?
Yeah, it's not, I have your name down. You're good. If you want to go, you can go. If you don't want to, you don't want to. But yeah, this is like an 8-hour webinar. Let's see. Catherine. Okay, yeah. Yeah, okay. So I have everyone's name. So like I said, if you are like, I'm done, we've done 7.5 hours, like I just gotta go, feel free. If you want to stay, we can do a few things. I can sit here for 30 minutes and you guys can ask me questions and we can, I can help you out with them. If I don't know them, we can learn them together. Or we can go through questions again, or we can do another Kahoot.
So I have a question. Is it okay we go through could we go through questions, but while asking questions?
Yeah.
Does that make sense? Can we do that? Is everybody okay with that? I don't want to just. Is everybody okay
Yeah,
with
I mean, I'm gonna stick around for the whole
Okay,
time.
bet.
Cool.
Yeah,
I'm
same.
good.
Any help is helpful.
Great. Okay, glad. I'm super happy you guys are finding this helpful. Okay, let me go ahead and share my screen and we'll get right back to questions. Do you guys have a preference of which ones we go through?
Taxes?
Taxes and new and types, the types.
Okay.
Also,
Go ahead.
Also, I mean, I know somebody on here said that they thought that the test was going to be easier and it was a lot harder than it was. I see.
That was me.
I mean, does it look like how it looks like that we went over? Because if so, it seems a little easy. Do they talk about riders, all the different types of riders during the test, or?
Yes, they do. It's going to be you're going to feel that some questions are going to be very difficult and you're going to feel some questions like we've had today are very straight up. It just depends what you get. There's a test bank of questions. You could get very lucky. You could get very unlucky. That's why it's just best to study everything and know as much as you can. So unfortunately, there's no like right or wrong answer. My best advice to you guys is go through the questions. Just Questions, 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 questions. That is going to help you the most at this point in your studying. That's my advice to you. I personally gave up studying the book halfway through and I just did questions. And
so I will say, so a lot of the questions are similar than what they're on the test.
Yeah.
When you're on the test, though, I took the test 6 times in total. It's a lot of what the practice questions are. Ms. Jules, I have a quick question. I know on the Pearson test, you know how you have 6 different types of tests? Is which one's focus is on the insurance types out of the 1 through 6 for the Pearson?
It doesn't. It's not like.
I got you. I was just asking.
Yeah, no, you're good. It kind of just has a little bit of everything in every single one of them. So it's supposed to simulate the real exam. So it's gonna tell you a little bit of everything in all of them. Unfortunately, there's not specific ones unless you go to the actual, like you go to your modules and then go through like that specific area and then do the questions for that. But yeah. So saying that, I can't specifically pull out like questions about taxes or things like that. We can continue to just go through them and hope, you know, say a little prayer that we can get some questions about taxes.
Let's do it.
Okay, is that what you guys want to do?
Yeah.
Yeah, let's do it.
Can I tell you something that I've been doing that might help you?
Yeah.
I know I
Yes,
heard
please,
somebody
anything.
earlier. Well, I heard somebody earlier mention ChatGPT. You can go there and you can like it knows all about this stuff. That's what I've been using, and you can ask it to ask you questions. Like you can ask it to make multiple choice questions, and then you could ask it to wait for you to answer, and then after you answer, tell you why it's right or why it's wrong, and then tell you why the wrong answer is wrong and why the right answer is right. I mean, that's been really helpful for me.
Yes.
Like there's just so much that ChatGPT can do. Like you can ask it to compare and contrast this or that, or like you can ask it to do things that the tests, you know what I mean? You can just ask it to do all kinds of stuff. And I've like going through the retirement types, because that's where I'm at in the course right now. There's like 12 different retirement accounts. Man, that's rough. And I've been just going through it with ChatGPT and answering like 10 questions on each one over and over and over again. And eventually it drills it in, you know? So maybe that'll help somebody. I don't know. It helped me. That's what I've been doing. And you create a searchable database of the stuff that you've learned. So you can go back and just type it in, you know, and see what you were talking about. Yeah, that's what I've been doing. So maybe that can help somebody else.
You've been going where?
It's ChatGPT. It's chat.openai.com, I think is the URL. But for some of the more advanced things, you might have to pay a subscription fee for it. I mean, I pay the subscription fee. But yeah, it's I use it at work all the time. I use it a lot. I love AI. Like as long as you know what it is and what it's not, it's worth using it.
Yeah. I 100% agree with that. You can go in there, you can make it ask you questions. Yeah, it's awesome. It's really, really awesome. You can get a prescription. You don't have to. A prescription. What am I saying?
I mean, it might as well be.
No, I'm like, give me a ChatGPT prescription, right? But yeah, that's great advice. Great advice. If you guys want some extra practice, go into there. If you've done all the questions from the actual question bank, go into there and do more. Yeah. Awesome. Should we get started?
Yes.
All right.
No sé, lo encontré, me gustó. Right?
Let's go through this. Okay, so what is the primary purpose of an insurance premium?
To serve a payment. C.
Are we agreeing with this one?
Yes.
Yeah.
Okay. So to serve as payment for the insurance coverage provided by the insurer. Are we all in agreement? I think this one's an easy one.
Yes.
Yeah. Okay. Which of the following is the most significant factor in determining a life insurance premium? Ooh. Life insurance. What is life insurance all about?
The
Allocated risk.
Yep.
What? Oh yeah, hold on. I got C and I got
D.
okay. D. C. Okay, good. Yeah. Life insurance is all about if you're living or you're dying, right? So the most insignificant factor is
mortality rate.
are you gonna die? Yeah. When are you gonna die? How fast are you gonna die, right? What's your risk? Right. Right. Okay, we're good on this one? Cool. Which life insurance premium payment mode would be best for a policyholder seeking the lowest overall cost? Ooh.
Annual.
Oh, you guys got this one. Good. Why?
Because they just pay one time, and when it's monthly, quarterly, and semi-annual, it might cost the insurance company, for like sending out statements or that kind of thing.
Yeah, definitely. Definitely. But yeah, I mean, at the basis of it, you're paying one time versus paying 12 times or 4 times or 2 times. Cool?
Yes.
All right. An individual wants to purchase life insurance with fixed premiums and guaranteed cash value accumulation. Which type of policy would be most appropriate?
Universal.
Universal? What do we feel?
Wait a minute. Let me rethink that one.
Whole? Did I hear whole?
I
Yes.
think
Whole.
maybe whole.
Yeah, I think whole.
Yeah, whole.
Good. Okay, so we're saying fixed premiums, guaranteed cash value. Does Universal Life has fixed premiums?
No.
No.
It can change. Term, does it have a cash value?
No.
No.
Does variable have fixed premiums?
No.
Good. So we got whole. Sweet. All right, is everyone okay with that one?
Yeah.
Lisa is concerned about her ability to continue paying her life insurance premiums. If she becomes disabled, which policy rider should she consider adding?
Premium rider waiver.
Premium waiver of premium rider?
P.
Do we
Oh,
agree? Yeah,
Yeah.
Yeah.
I agree. Heck yeah. Okay, that's the whole purpose of the waiver of premium rider. If you become disabled, you still want the policy, but you're not working. So you want to waive those premiums. Good?
Good.
John has a life insurance policy and wants to ensure that his minor children receive their inheritance under managed conditions rather than a lump sum. Which option should he consider?
Per capita distribution method?
Yeah, B.
B. Okay, I heard B and C. Which one are we thinking?
B.
B. Okay. I like this one. Cool. So, naming his estate as the beneficiary isn't gonna do anything for him in this situation. Not anything that he wants, okay? He wants to ensure that his minor children receive their inheritance under managed conditions rather than a lump sum. They're gonna waste it. Like, manage it, right? Okay, so I'm just gonna assume that we can narrow it down to B and C. Is that correct? Because I don't think purchasing an annuity is what he wants because he literally said life insurance. So, okay, so we're down to B and C, setting up a trust as a beneficiary or using per capita distribution method. What is per capita? There's two of these. There's per capita and there's another one, does anyone know?
Or strike. I don't know. Starts with an S.
Yeah, stirps,
Stirpies.
right? Per
There you
stirps, yeah, whatever, however you want to say it. What are those? What's per stirps and what is per capita?
The S one is where it gets passed down through the generations. So even if like the one beneficiary dies, the first, their child, then it goes down to their grandchildren and their
Okay.
child's children, whatever. And
Okay.
then, yeah.
Cool. What is per capita?
Does that just mean it follows the policy, like whoever's on the policy?
Yeah.
So let's see. So, distributing the benefits equally among all named living beneficiaries. Okay. So let's say I have 4 kids. I'm going to say my benefit is going per capita. Okay. Instead of having to name all 4 of those kids and go through that whole process, I'm just going to say per capita. Okay. Cool. All right. All of the following factors influence the cost of life insurance premiums except. This one's a tough one.
D.
Credit score.
Yeah,
Okay.
4. D.
Credit score.
Okay, so I heard credit score more often. I like that answer. Occupation is going to influence cost of life insurance. Okay. Occupation, medical history, and age. Okay. So when we're thinking life insurance, and they're doing our underwriting for it. They're looking at how old we are. Okay. They're looking at our medical history. How soon are we, how, do we have any long-term things that are going to get us, long-term medical things that are going to get us? And then our occupation. Do we have a hazardous occupation? Credit score, yes, it can be taken into account, but it's not a main one.
Okay.
Good here?
Yep.
Real quick.
Yeah.
Yeah, I just had company come over, so I do have to go. You did mention that this was recorded. Where would it be posted?
Let me see. If you go,
Like what happened to the wire that was going this way?
if you go out, can you guys see my screen? Oh wait, I'm not gonna be able to show it to you guys because I'm on this. Okay, let me send you an email and get back to you on that.
Okay, sounds good.
Yeah. Okay.
You have it? Or?
Have a multimeter? Yes. Okay.
Okay. I don't know if she's.
Oh no, I asked if you needed my email.
Okay, email. Okay, yeah. I was like, okay, good. Yeah, no, give me your. Let me have your email.
Sure.
I was talking to the people that came in. I was like, oh, wait, it's okay.
Okay, it's brandy.baez11@gmail.com. So BRANDEE.BAEZ11@gmail.com.
11@gmail.com. Okay, perfect. And it's BAEZ.
Yep.
Okay. Okay, perfect. Yeah, I'll send you an email. Anyone else that also wants that email, just put your email in the chat and I'll get it from there.
All right, thank you and good luck, everybody.
Sweet.
You too.
Bye. Thanks for spending the day with us.
The chat is disabled. How can you undisable it, please, my dear?
You have to go to the Q&A thing.
Oh, I do. I'm sorry.
Yeah, the Q&A button will put you there.
Okay. Yeah, so if you want it, go ahead and put your email in the chat and I'll tell you guys how to get there. Okay. Cool. Joyce. Okay. Sweet. All right.
I'm doing my Trader Joe's viral lobster pasta. Start out by sauteing onion and garlic in the olive.
Oh.
Kicker.
No.
Whoever's making lobster, I'm on my way.
I know, right? Yeah. Let us know.
The Trader Joe's style too.
All right. A life insurance policy provision that ensures the policy remains in force for a limited period after a missed premium payment.
Grace period.
Grace period. How do we feel about this?
Good.
Good. Perfect. Which of the following is the primary purpose of underwriting in life insurance?
B. B.
Yeah, B.
Good. Feel good about this one?
Yeah.
What is the purpose of a field underwriter in a life insurance application process? Ooh, an underwriter versus a field underwriter.
To complete the application and collect the premium.
B.
Okay. Okay. So what is the difference between a field underwriter and an underwriter?
Field, one's in the field.
One's in the field. Yeah. Literally, one's in the field. One's working out. They're not working out. I mean, they could be, I don't know. But they're working outside with the applicants. Okay. The underwriter, not the field underwriter, but the underwriter is usually in an office and they usually do the deep dive. Okay. The field underwriter is just going to get like your name, your birthday, age, things like that. The underwriter is going to go way deeper than that. Good there?
Yes.
Cool. An insurance producer is responsible for ensuring that an applicant fully understands their policy before the purchase. Which of the following actions best fulfills this responsibility?
A.
What do you guys think?
Yes.
Okay.
Good.
What is the difference between a policy summary and a buyer's guide?
Oh, yes.
Okay, so a policy summary is a summary of that specific policy. A buyer's guide is going to show you a bunch of different policies and say, hey, which one do you like the best? Here's all the information. Here's the summary of both of these. Which one do you like?
It's like a catalog.
Yeah.
It's like a catalog, right?
There you go.
Pick which one you want. A policy summary is a summary of one specific policy, usually the one that you got.
And that's what they usually give when you're getting Medicaid, right?
Medicaid, that's what they usually give when you're getting anything. They should always give you a policy summary.
Could you repeat that again? The difference, please?
So a policy summary, you're usually going to get after you purchase the policy. Okay. You could get it before, but it's usually something that you're going to take home with you so you understand what you have. Okay. A buyer's guide is something that you're usually going to get before you buy anything. And it's going to have a bunch of different policies on there. And you can choose which policy you like the best.
Yeah, normally you get the policy summary when you get when they talk about getting the whole contract, you get it with it. It comes as part of the whole contract.
Yeah. Does that make a little bit more sense?
Yeah.
Yes.
Cool. All right.
I have a question.
Yeah.
Can you explain the difference between a binding receipt and a conditional receipt?
Yes.
Okay. All right. So a binding receipt is you sign this, I sign this, we're good. You like there's no other discussions. Like you're locked in, we're both locked in. A conditional receipt is we will continue this as long as you meet these conditions, as long as you get your medical exam. And then it'll go into a full, full service policy. So when you get a conditional receipt, you usually don't have full coverage. They'll give you coverage, but it's like a limited amount of coverage until you get your medical exam or pay, whatever you have to do. Okay. A binding receipt is you have full coverage and you're locked in. Does that make sense?
Yeah, that makes sense. Thank you.
But mean
Isn't
that
the
the
point?
policy starts when you receive the binding receipt, or it does?
Say that
You
again.
you have to pay the premium and have a binding receipt for the policy to start.
Yeah.
Is that
so-
correct?
Yeah. So like a binding receipt is you're locked in. Like, yeah, you've paid the premium, you've had your medical exam, everything's good to go. Like you're locked in, you're good.
But if you
can't-
don't pay the premium, your policy hasn't started yet.
your
Even
policy-
though you have a binding receipt, right?
Right. But you wouldn't really be given a binding receipt until you pay the policy, until you
Oh, okay. Okay.
binding receipt is like it's like I wouldn't give you a receipt before you bought the clothing item,
Mhm.
right? So it's like you have to buy it and then I'll give you the receipt. And it's either a receipt that says, heck yeah, you bought it. Like, okay, listen to this. Ready? Things that are on sale, usually you buy them and you can't return them, right? Right?
Yeah.
So things that are on sale, you buy them and you can't return them. That's a binding receipt. You got that no matter what. Like you can't return it, okay? A conditional receipt is you can buy anything else that's not on sale and you can try it. If you don't like it, you can return it. Don't actually think about it like that, but in terms of what we're talking about, yeah. So binding receipt is like you're locked in. It was on sale, you got it. There's nothing else you can do. A conditional receipt is you know, you have to do this, that, and the other, and then you fully get the policy. Good.
Can an underwriting decision change the binding receipt though? Like, so you get the coverage immediately with the binding receipt.
Yes.
So obviously underwriting hasn't been done yet, but after the underwriting does get done, they can cancel it if they don't want to insure you, right?
With a binding receipt?
Yeah.
Binding receipt, so usually that is like you're locked in, like
Well, I
underwriting.
know, but I thought that binding though meant it started immediately. So
Yes,
you
it
sign
does.
the policy, you pay the money, you get the policy. But if they take that to underwriting and underwriting says, I don't think so, do you still get to keep the coverage, or do they cancel you?
No, they don't cancel you.
So it's
Binding
just,
you're locked in.
it bypasses underwriting altogether.
You're locked in. You still have underwriting. They still do underwriting. They still do underwriting, but it's not like it's not to the extent of like some of these policies. Like usually a binding receipt isn't going to be something like, okay, if you buy a $500,000 policy, the underwriting for that is going to be like very extensive. Okay, they're gonna talk to your family, your friends, and everything in between. Okay, if you buy a $5,000 life insurance policy, it's, you know, the underwriting is going to be there, but it's not going to be that crazy. Okay, so with a binding receipt, you're like locked in, like both parties are locked in. Let me double check and make sure that they can't cancel it, because I'm pretty sure once you get the binding receipt, it's like you're locked in, but let me just double check.
I think I understand what you're saying. So like with the binding receipt, it would just be like, it wouldn't be that big of a policy. Like they're just giving you the policy because it's got like a $5,000 face value. Who cares? You can have it. But if it's
Yeah, that
a
was
big policy,
Yeah, I don't think they would give out a binding receipt in a big policy. Let me double check that just to make sure. But yes.
But here I look it up and it says that the cover is contingent upon specific terms and condition outlined in the receipt.
Yes. So yes, changes to the insurance policy are generally possible even after a binding receipt is issued, although the specific terms and conditions depend on the policy and insurer. Okay, let's see. Okay, yeah. So it said that you can make changes to it or even cancel it before the final policy is issued. Okay. So my understanding of a binding receipt was that you're locked in, but this says that you can have changes
right,
or even cancel
Because
it.
because you're not
in-
insurable at the time of application.
Yeah. So you were right. You were right. I was wrong.
Don't
Good.
say that.
No, it's good. I'm learning too, you know, like I said, I'm not perfect. I don't know everything. I do not know everything, but yeah. Okay, good to know.
I was just asking a question. I didn't know either, to be honest. I
Yeah,
never thought about that till just now.
yeah. But then okay, so then this one says binding receipts provide immediate coverage from the date of the receipt, while conditional receipts provide coverage only if the insurer's underwriting requirements are met.
Correct. Well, see, wasn't it one of them that we don't really use anymore?
Yeah, it's binding that doesn't really get used.
Yeah. Because of it all. And then the other is where, I mean, you collect the premium and they would prefer you to collect the premium right up front along with signatures, and you send it in to do the underwriting. And then the way it works is that it depends on if they have to do the medical report, then it'll start either or when the premium is collected or when the medical report comes back, one or the other, whichever one the date is first.
Right.
Yeah.
So I from my understanding, I know that you get you get limit when you have a conditional receipt, you still have limited coverage. Like you have a little bit of coverage, but it's not full coverage.
Yeah.
During that time. Whereas maybe binding, you have full coverage right off the bat.
Yeah, I think that's the difference.
Yeah.
So which is the receipt that you were asking, okay, when the policy is then, what day does it, so it's a binding
And
receipt?
if the insured dies during this time of the binding receipt, the insurer pays the claim.
The binding receipt, yes. The
Yes.
consumer receipt, I don't think they have to.
I think
No.
it goes back to that insurability thing. So like if they were found to be insurable at the time of the application and they die while they have the binding receipt, then they pay the claim. But
Yeah.
if they were found to not
Yes.
be insurable, then they don't pay the claim.
Yeah.
Right.
Yeah. And then, Brittany, what was your question?
So then, which I totally forget, and please refresh my memory. So when the premium is paid, right? And then the application, and they're like, all right, we're good to go. And they're like, okay, bet. So it's the binding receipt that basically they have to receive so their policy starts that day once they get the binding receipt.
Mm-hmm. So what?
Okay. Okay.
Because even with a conditional receipt, the policy will start. It'll start. It won't be full coverage, but it will start.
Okay.
Okay. So in that question where it asks like when does coverage start on when they get the receipt, when the applicant gets the receipt, that would be the answer.
Okay.
I had a lot of trouble with this too, because there's a differentiation somewhere that I still don't quite completely understand with the conditional receipts, where the coverage starts, but there's no coverage until they're found to be insurable. So if I've got a conditional receipt and something happens to me and the policy isn't in force until they prove I'm insurable, I mean, I still don't, I can answer the questions about it, but I still don't completely understand the concept.
Right.
Let me see.
You know what I mean? Because
And I think that in the test there's a question that is that if you have a conditional receipt and then underwriter approves you, but they don't deliver the policy or whatever, are you insured during that time or not?
I believe
Between underwriter and you receiving the policy.
So
I think it just all hinges on whether you were found to be insurable at the time of the claim.
exactly. That's what I'm saying.
It's confusing.
But at the time of the claim, yeah.
Yeah, sorry,
Time
I
of the
gotta go,
application.
guys. Oh,
Time of the
I
application.
gotta.
I'm sorry.
Oh, you're good. I gotta go, guys. Everybody, good luck. I'll pray for you guys. I hope you guys have a very good study session. My test is next Tuesday. Ms. Jules, thank you so much for your time. I appreciate everything you did for us today. You were a great teacher, and I appreciate everybody. You guys are very smart.
I don't know about that. But...
Good luck.
You
Good luck. Got it. Keep you guys in my prayers as well. That's so sweet. I love it. Okay, so it says coverage can be in effect when conditional receipt is issued, but it's temporary and subject to conditions. So if something happens when you have the receipt, and you don't have like the full policy, you can, like you're saying, I think it depends on if you were found insurable at the time of the claim.
That's that disconnect for me is still there. Like, what's the difference between the policy starting and then the policy getting approved and having coverage? I mean, I can get the question right. I still don't have the concept down, I guess. I don't know.
Yeah, the in between. Yeah, I literally think that it's just you have coverage, it's limited coverage, and then it depends on if you were approved or not.
A question, what's the point in it being limited? Because if, you know, if you're going to be covered at all, then, you know, what are they going to cover? Because I don't add that part by saying limited, because I've read it where it said limited as well. It's not just what you're saying. I don't get, why would they do just limited? Because if you're insurable or not, it's one way or the other. They're not just going to pay just partial if something happens to you.
Right.
Yeah,
I think what it means by limited is that it depends. It depends on if you're like, it's limited in the sense of you could get it or you couldn't get it. That's how I always took limited. Again, it's iffy. Here it says that coverage can be in effect, and I think that's the biggest thing.
It can be, but is it?
Can be. Yeah, it can be. Like if you were found completely good and you're good to go and you have coverage. My other question would be if they knew that you're filing a claim, this is outside of the test, but if they knew that you're filing a claim, could they just find a reason to deny you because they wouldn't want to pay for that because it's so early on?
Yeah.
I don't know.
Yeah, that's my disconnect too. Maybe after I do it, I'll understand it, but I still don't perfectly get it.
That is why I'm saying you guys, like when you get into the field, have a very good teacher, have a very good mentor, because a lot of the book stuff is very different in real life.
Right.
Yeah.
That's where my concern comes in, because I've always been the type of person that I learn by doing things.
Yeah.
Not by taking tests or book. And so, with this being a brand new venture for me, it's kind of scary.
Yeah, no, it is. It is. And insurance is hard. There's a lot of insurance agents. But again, that's why it's super important to know who you're working with. Ask for recommendations from them. Talk to people that worked for them and have worked for them. Just to kind of learn their training process. Like how much training do they offer?
Yeah.
It's very, very important. Because like I said, I came into this from the medical field and I had 2 days of training. And then on the third day, they said, good luck. And I was like, good luck. I was like, dude, that can't be to me, right?
Yeah.
Yeah. So just be aware of that and just, know who you're signing with. That's what I have to say. But yeah, so it's 5:30 right now. I will stay for a little bit and answer any other questions that you guys have. Whether that's about, maybe I can stop the recording so I can